Can everyone hear me? Okay. All right. I guess I'll get started out of respect for the time of all the other speakers. So I'm giving a speech today on everything is MEV. Why is MEV the most important design consideration in blockchain? Why is everything MEV? So today I'm going to elucidate my thesis for why MEV is the most significant property we should consider when reasoning about decentralized infrastructure. I'll begin with a brief introduction to my mental model of MEV as a property. Then I'll talk about how first principles thinking around MEV ties into all of the major blockchain verticals. Finally, I'll give some approaches to MEV awareness in protocol design and business strategy. Cool. So MEV is a property of consensus. To have a cogent discussion about MEV, we first have to answer what MEV is at the most fundamental level. There are many definitions for MEV which make sense in various contexts. Sometimes you want a definition that lets you quantify things, or a definition that you can argue in a rigorous mathematical sense. However, my mental model for MEV is quite a simple and broad one, which I believe presents the best foundation for thinking about protocol design. MEV is any financial reward which incentivizes the consensus of a blockchain to continue progressing. In other words, if a blockchain is walking forwards, MEV is the reason why. So this includes the block reward, rewards from block building strategies, gas fees, internalized protocol rewards such as Chainlink tokens, and a whole host of other things. Why is this definition superior to other definitions? Well, it lets us think about the totality of what's going on in the interactions of many blockchain protocols from a game theoretic perspective. MEV surrounds us. So anyone who knows me on a personal level knows I like soft topics, like talking about my feelings, relationships, and codependency. And few relationships are more codependent than the relationship between a protocol designer and MEV. Whether you like it or not, MEV is something you contend with. And it's up to you if the relationship is a healthy one rather than a toxic one, because you can't ever break up. I'll cover some examples of common verticals where I believe that MEV awareness is crucial. So blockchains and L1. This is kind of the obvious example. MEV is the reward for progressing consensus, typically extracted by miners or validators in the form of block rewards and gas fees. Additional value from protocols can also be extracted by whoever is ultimately building the block. Misaligned incentives leads to centralization because there can be increasing returns to scale. Trading. This is like another obvious example. Sophisticated teams compete using different edges to capture value which protocols are leaving on the table each block. This is usually atomic or non-atomic arbitrage and sandwiching opportunities. But of course, there's an insane amount of other potential strategies. Misaligned incentives here usually leads to the entrenchment of 1 to 2 trading teams, which is kind of what we see on Ethereum today. But builders and relays. Building is essentially just another trading strategy, although it's kind of unique in the business and product development that's required to source general order flow and achieve MEV coverage for the strategies which are not executed in-house. So relays are a marketplace for block space, which takes block space from validators and coordinates market makers to settle it. I see the relay market as a key selling point for MEV activity over the next 2 to 5 years, as relays gradually become interchained. Misaligned incentives here have some of the worst potential of any vertical to create massive centralization. So DEXs. This vertical is a key source of extracted MEV because price discovery tends to occur off-chain and there's a block time lag, which leads to arbitrage profits. One of the most important open questions in the market is the best way to internalize this MEV to the liquidity providers or to the users, and whether batch auctions, dynamic fees, better Oracle pricing, or active liquidity is the best mechanism to reduce LVR, loss versus rebalancing. There's also a lot of open questions about what's a fair split for the MEV between the users and between the liquidity providers. Bridges and interoperability protocols. So anytime consensus is being settled across multiple domains, you have a host of MEV considerations. Who has the control over finality? What cross-chain opportunities can be executed atomically? For example, having a validator execute on 2 chains simultaneously means that a cross-chain opportunity could become atomic. Misaligned incentives here leads to centralization of stake because there's network effects. Wallets and RPC providers. So wallets control the users, who are generally quite sticky, and they're reluctant to move elsewhere because there's a high degree of trust required for a wallet. And user transactions are responsible for the vast majority of MEV creation, and thus wallets are one of the key power brokers in the transaction supply chain. And misaligned incentives here will lead to users getting suboptimal execution. Order flow auctions. So you could argue these are part of a wallet's functionality or that they're directly underneath the wallet on the vertical. There's a lot of MEV considerations in how we solve intents and distribute value for order flow. I personally think it's a very complex picture because some of the value in order flow only exists in batches. For example, 1 approval transaction means nothing to me, but 1,000 approval transactions is probably a strong buy or a sell signal. There are also questions about how we price the value of order flow between the users and liquidity providers in an open market, similar to the considerations in DEX design. Intent protocols. So intents have a lot of interesting considerations in respect to solving them effectively. I hold a contrarian belief that a lot of the design being done right now with intents is in the wrong direction, because we're focused too much on expanding the complexity in which we can express the intents rather than focusing on the best ways to solve them. I believe an important MEV consideration is how we can create some kind of Lego building block for intents that appropriately constrains the expression so that we can appropriately constrain the solving. Oracles. Significant price updates from oracles creates a lot of value from liquidations and other types of MEV. Who should get this value? Can we design the oracle update mechanism so the MEV is internalized? Is this even a good idea? Or should the protocol try to absorb it somehow? I think this is a very interesting design space because you actually need oracle MEV to incentivize liquidators to protect your protocol from bad debt. Staking and restaking. This is again interesting because it blends MEV considerations with tokenomics, as the MEV rewards can become part of the staking rewards, which can accrue to tokens, or you can even split off the MEV rewards into a second token altogether. There's also a lot of MEV considerations with restaking, when validators can run arbitrary code and can get slashed like on EigenLayer. Finally, stablecoins. This is a really interesting case because MEV is responsible for the stability and the instability of stablecoins. Typical stabilization mechanisms rely on people arbitraging away dislocations, and the typical collapse of a stablecoin in a death spiral involves huge amounts of MEV extraction, like we saw in the case with Luna. The entire design space of stablecoins is about harnessing positive MEV activity for the benefit of the protocol and reducing the effects of toxic activity. So designing infrastructure that's MEV aware. How do we develop a healthy relationship with MEV? There's a famous saying in economics, show me the incentives and I'll show you the outcomes. And this applies aptly to protocol design. Designing protocols which are MEV aware means creating incentives which foster the outcomes that you desire. I'll run through some of my mental models for thinking about designing protocols in different verticals. So first I would start with macro analysis. What are the mental models? What is the supply chain? For any kind of decentralized commodity, where does it start and where does it end? For example, block space is a digital commodity. The market starts with intents or preferences over state transitions, as well as physical block space. These commodities flow down through wallets, RPCs, towards the marketplace for block space, which we currently call a relay. Validators on multiple chains sell their block space to the relays, who offer it to solvers, which may be builders or searchers. By visualizing the flows through the supply chain, you can start to build a picture of the vertical. What are the barriers to entry? What do people need to enter the market? Who can stop you from entering and why? Does it cost money? Whose permission do you need? What are the edges? So the typical edge in MEV is capital. For example, to be a CeFi DeFi trader on Ethereum right now, you need significant capital in order to bid away entire Binance dislocations across multiple pools. This leads to only a small group of well-capitalized searchers dominating the market. Another edge is engineering, which of course relates closely to capital. This could be the quality of the engineering, for example, building low latency systems, or it could just be the general moat of having done a lot of engineering. Alpha is the edge of having some kind of insight into the market, which other people don't have. While this sounds pretty cool, it's actually the rarest edge to have, as the market is quite transparent. However, some people do have an alpha edge. Jane Street, for example, was running Manta Builder for a while, and you could see they were hedging a lot earlier than other people. Why were they doing this? Obviously, they had some kind of insight into likely future prices, which other people didn't have, meaning that if the price went up, they could hedge in advance knowing that it was likely to be a good trade, and they would be more competitive for it. Business development is the final edge, and unfortunately, it's quite common. Teams strike deals with validator operators for access to stake, for order flow, unique access to protocols, giving them an advantage over competition. So understanding these edges is the key to understanding how the market is likely to progress. Who has the power to commoditize? There's a principle in business that you should always commoditize your complementaries. Essentially, this means that if you sit next to someone on the vertical, you should figure out how to increase their competition and drive their profits to zero. A classic example would be how the original Flashbots auction commoditized atomic searching. Atomic searches are complementary to the Flashbots auction because they're submitting bundles to the auction. If atomic searches gain too much power, then they could launch a competing product to Flashbots or just bypass Flashbots altogether. However, the Flashbots auction had the effect of commoditizing atomic searching by encouraging competition, driving profits to near zero and leaving them unable to control the vertical. Right now, we see that order flow and capital are still distinct edges in the building and searching market, which are yet to be commoditized, leading, of course, to the centralization that we see today on Ethereum. In my opinion, the most interesting use case of Suave is its potential to commoditize the capital and order flow edges. Lastly, what are the dependencies? Distribution is always about dependencies. When you're in the middle layer of the vertical, you can't pay for Google advertisement. So whose permission do you need to grow? Are they motivated to help you? Are they likely to try and commoditize you or launch a competing product themselves? Are you actually solving any problems for your dependencies? This is a key issue in blockchain more broadly, where a lot of people are just building with no consideration to whether people would actually use their product. They just care about cool game theory. So, microanalysis, the game theory and the mechanism design. So for this type of analysis, we look at the protocol in the context of the game theory and the mechanism design. Because at the end of the day, all blockchain protocols are just different types of repeated games. In other words, there are players, rules, incentives, strategies, and resulting equilibriums. Who are the players? Typical players in blockchain games include searchers, solvers, builders, market makers, users, protocols, relays, validators. Anyone who participates in any way is a player in the game. What are the rules of the game? It's common for these rules to be defined in code, such as smart contract code or client code. However, these may also be defined socially. And you might be surprised in Mev how loosely some of these rules can be defined. For example, some time ago it turned out on Phantom Network that reorganizing the entire blockchain was just a social rule, and no one would actually slash you if you did that. Many of the rules around propagating mempools are also just socially enforced. It's very important in analyzing the protocol to make a distinction between the rules you have to follow and the rules that you are supposed to follow. What are the incentives? Rules are enforced using various financial incentives, and you get rewarded by doing one thing or punished for doing another thing. It's important to quantify what the incentives are and how they compare against the opportunity costs. For example, if the incentive of a MEV opportunity is higher than the cost of getting slashed, then does it make sense to just get slashed? Strategies and equilibriums. Whenever you have incentives and rules, you have resulting strategies and equilibriums. Often the strategies may be different to what you think. It's generally most helpful to look first for the dominant strategy, which is the strategy that results in the highest expected value, regardless of what anyone else does. In the classic Prisoner's Dilemma game, for example, the dominant strategy is to be a snitch. On Polygon, it might be to submit as much spam as humanly possible. The two common types of equilibriums that we find in markets are dominant strategy equilibriums and Nash equilibriums. A dominant strategy equilibrium is the outcome we get when everyone plays their dominant strategy, and a Nash equilibrium is a situation where it doesn't make sense for anyone to change their strategy. Creating good games. So how do we actually design good MEV games from the ground up? I'll offer some of the first principles thinking that I believe is worth following. 1, reward the behavior you need to happen. If you want people to do something, create an incentive. If you don't want people to do something, punish them. Don't rely on social consensus, because lots of people aren't going to care and will do it anyway, especially when there is money at stake. 2, play to people's strengths. Give players in games jobs which they are actually good at. For example, solvers are professionals at taking and pricing risk. So they are the people who should be taking the risk in Mev.aware designs. A great example of this is the Across Bridge, which uses solvers to outsource the risk of finality. 2, there will always be edges and moats, so choose those edges wisely. You cannot create a game with no edges, so use the edges that serve your purpose. Think about what kind of barriers to entry these edges will create. 3, don't assume everyone is nice. Don't be stupid about people's incentives, basically. People will do B2B work with each other, hackers will come along, searchers will try and exploit you. Think about timing. This is actually a common misalignment between founders and VCs. VCs often have a different perspective of where the timing in the market is, and founders often exploit this in order to raise capital. So you need to think when you're building about what the market will be like in 6 months' time or when you launch your product, not what it's like right now. Think about where the MEV, who creates the MEV and where it should go. So MEV has to go somewhere. So think carefully about where it should go. Maybe you want to run a batch auction and internalize it to users. Maybe you want to give it to liquidators to protect your protocol from bad debt. Maybe you want to give it to validators, the protocol itself, or some other party altogether. This is often a philosophical choice, not just an economic one, as there's many competing definitions of fairness. Lastly, what are the optics to the market and also to regulators? Lastly, think about the optics. Is your protocol going to protect sandwiching and piss off regulators? Is your token going to make you look like a Ponzi to the people on ETH Research Forum? Bad optics can quickly destroy your project, even if your execution and everything else is basically perfect. Okay, so to wrap things up, I hope I've managed to present a different perspective here on MEV and convince you that we need to abandon pretenses like solving or eliminating MEV. MEV is a fundamental property of blockchain, and it's up to us to harness it for good or evil. It can be democratized, it can be distributed, it can be internalized, but it cannot be destroyed. MEV is not good or evil, it's a neutral incentive. It's the most important incentive in designing decentralized protocols, because blockchains are just games, and MEV is what keeps the score. MEV is everywhere, and everything is MEV. Thank you. I guess, yeah, I can take questions if there's any questions, or we can move on to the next speaker. Okay.
Does anybody know if there's a particular way to access the slides? All right. Good morning, everybody. It's an honor and a privilege to be here. First, I'd just like to thank the Ethereum research community, the broader MEV community, Flashbots, and Nethermind for organizing the event, and in particular, Tina Sen. The title of my talk today is going to be called Path-Dependent Topology of MEV Discourse. An overview. In part one, we're going to talk about path dependence, kind of how we got here. And in part two, we're going to introduce a new concept, architecture, topology, separation. So what is path dependence? Path dependence is a concept in the social sciences referring to the process where past events or decisions constrain later events or decisions, i.e., history matters. Past events or decisions affect future events or decisions in disproportionate ways. In some MEV path dependence, such as priority gas auctions, studying MEV, i.e. clockwork finance, and the famous article, Ethereum is a Dark Forest, which described generalized frontrunners. What do? MEV Geth, MEV Boost, and proposer-builder separation, and then some control systems, order flow auctions, inclusion lists, and encrypted mempools. So MEV is real. The Flashbots 2.0 paper in 2019 conducted an experiment that empirically proved the existence of MEV. And in particular, priority gas auctions were one key finding. Bots were competitively bidding up transaction fees in order to obtain priority ordering for DEX arbitrage transactions. And here's a visualization, and you can see on the y-axis, gas bids in Gwei, and on the x-axis, time since start. But there were some negative externalities of the PGAs: unnecessary peer-to-peer networking load, inefficient miner and searcher coordination, failed bids were reverting on chain, which led to a very poor user experience. I'm sure many of you in this room were familiar with that. And no granular preference expression for searchers. So what did he do about it? He studied MEV. The Clockwork Finance paper was written by some excellent researchers at Cornell, and they attempted to define MEV. And a couple of the definitions you see here, I know you're probably familiar, so I won't go through them in detail. And there were a couple of formalizations of MEV as well. And then there was a great article written by the folks at Paradigm called Ethereum is a Dark Forest, where they talked about a generalized frontrunner in the mempool. And there was a rescue attempt of user funds who had sent some funds mistakenly to a Uniswap contract. And so they used an obfuscation technique of sending a transaction first that was conditional and required to be executed before a second one. And the hope was there would be enough time to get that second transaction in before one of these generalized frontrunners saw it. But as it turns out, the generalized frontrunner saw the transaction and was able to claim the funds that had been lost. And this became even more evident during DeFi summer in 2020, where you had high gas fees, both congestion and contention, and again, failed transactions on chain. So you walk in, see this, what do? An example of the mempool in Budapest, Hungary. So the researchers at Flashbots formed a collective, and they launched a product called mev.market. And the goal was to move the PGA game out of the public mempool with the Flashbots auction. And the Flashbots auction introduced a new transaction type, expressivity, bundle merging, and mega bundles. One of the challenges was it was a single client with about 90% miner adoption, and it wasn't merge ready. Also, the social contract between searchers and miners was loosely unenforceable. Now, there were complaints that were thrown in the Discord at the time, and there were some folks tracking it internally, but it was very difficult to enforce these things. And here's an example of the topology. It's an imperfect picture. Enter the MEV supply chain. The discourse advanced, and the MEV supply chain provided a new mental model on how to think about the interactions before we transition to proof of work. And I want to hone in really clear here. The MEV supply chain describes the chain of activity which helps users transform intentions into finalized state transitions in the presence of MEV. And I'm sure this is the meme that a lot of you guys know very well, but I think it's actually been very helpful to the broader community in understanding the network topology. It came with a warning, however, centralized dystopia, where each role in the flow would be verticalized. So searcher, builder, proposer, relay, all the same entity. And unfortunately, we are starting to see some of this verticalization today. However, really what we want is decentralized block building or distributed building, allowing for competition at each layer in the stack. And this is one reason I think that everybody should be very bullish on Suave. This transitioned into merge-ready MEV Boost. Some of the motivations were to wall off validators from MEV complexity, support client diversity, and it introduced new actors, builders who had previously been taken the role by mining pools, and relays. Some of the challenges are transaction censorship, relay attacks, missed slots, and information leakage. And in particular, an unstable equilibria, such as generated by OFAC sanctions, relay dependency, builder centralization, and the more recent timing games. So there's been much discourse about proposer-builder separation and much research within the community. There are many flavors of PBS: single slot, two slot, ePBS with proposer timeliness committees, with relays, multiplicity gadgets, and also generalizations such as Pepsi, Pepsi Boosts, Pepsi DVT, and Diet Pepsi. Around the same time, more and more MEV management solutions or ideas came into the fold in the discourse, such as order flow auctions, which Nathan just talked about, encrypted mempools, which are great for front-running protection and censorship resistance. And there are many different types of encrypted mempools. This is taken from Justin Drake's presentation on encrypted mempools. Check out the slides after for more details. And inclusion lists. Again, an active area of research, which allows proposers to force builders to utilize the available block space, and if they can't do so, they must use the unused space for proposer-selected transactions. And again, the research community is very strong, and the discourse has centered from starting with CR lists to mev.boost++, forward inclusion lists, no free lunch, cumulative non-expiring inclusion lists, EIP 7547, concurrent block proposers, and recently released last week, committee-enforced inclusion sets. So now we're here. We're starting to see the emergence of intents, solvers, and off-chain marketplaces for counterparty discovery. So what does this look like, and what is the useful mental model for this? So now I'm going to talk about how we think about intents at Anoma and this concept of architecture topology, separation. Sponsored by the Rainbow Stakers of Ethereum. Shout out to Barnaby. So unbundle everything. So what is architecture? According to Wikipedia, network architecture is the framework for the specification of a network's physical components and their functional organization and configuration. Its operational principles and procedures, as well as communication protocols used. The topology is the arrangement of elements, links, nodes of a communication network. So what's a simpler example? Imagine that you are designing a city. The architecture is the overall plan for the city, including where everything is supposed to be and how it all works together. And the topology is how you decide to connect to everything, roads, bridges, parks, determining the best way for people to move around the city. Ethereum's architecture. The architecture is like the protocol stack. It defines the core components like the EVM, accounts, transactions, blocks, consensus. It specifies high-level system design principles and interactions, and it includes features like smart contract languages, EVM upgrades, and EIPs. Ethereum's topology is how the network works in practice and describes organization and interconnections of different node types. Outlines roles like full nodes, light nodes, miners, validators, illustrates flow of data and transaction between nodes, and it's designed to support core functions like transaction propagation, consensus, and execution. So briefly, what are intents? A colloquial definition of intents are credible commitments to a preference function over a shared state space, or more mathematically, atomic flow constraints. And here's a definition that we describe in our recent research. If you check out art.anoma.net, you can find this in the Intent Machines report. We formulate intents as a pair consisting of transition function and a partially weighted predicate over state transitions. The guiding intuition for this formulation is to separate control from desire. Warning, intents are not magic. There's been a lot of hype around intents in the discourse, and I just want to pose this warning that skepticism is good. Read people's specs, read the code base, be skeptical, challenge us. Challenge folks that say they can settle your intents. So I'm going to make a claim. In a sufficiently generalized intent-centric system, even Ethereum, the game theory incentive analysis is mostly a function of the topology, not really of the architecture. If you fix the variable of the architecture, incentive structures are a function of the topology. Intents decouple architecture and topology. Intent-centric architectures like Anoma provide a specific way of organizing subcomponents into a structure designed to serve the purpose of the overall system. A couple examples are peer-to-peer routing and transaction execution. So what do we mean? In peer-to-peer routing, traditional architectures have peer-to-peer routing hard-coded into the mempool protocol. Tendermint mempool is like a great example of this, and you can see this today with some of the spam issues that are ongoing in testnets like Berachain. Intent-centric architectures separate P2P routing into a subcomponent. It allows different implementations, prioritizing speed, programmable disclosure, and other things. We also have a paper on this, so see me after if you're interested. Transaction execution. It's traditionally tightly coupled with consensus and data storage. Decouples counterparty discovery and settlement, which enables different execution environments like the EVM, which we all know and love, the Solana virtual machine, Move, or the Anoma resource machine. Intent-centric topologies. Roles and responsibilities explicitly defined based on intents. Allows programmable configurations with dedicated nodes for routing, solving, execution, and consensus. And promotes flexibility for different users' communities to experiment with suitable topologies. So let's do a thought experiment. So we'll do mev.market conjectures and refutations. I had to get the word market in here. So we'll go over order flow, trust, and opacity. These were three excellent concerns put forth by Quintus and Georgios in a recent piece, I believe came out around May or June this year. So this is a meme from Sheen from Flashbots. You can see intents and solvers, MEV dystopia, and centralization coming in the Trojan horse, right? So these things are cool, but they come with risks. So here's an order flow conjecture. If intent execution is permissioned and permission set is not chosen with care, the migration out of the public mempool threatens to centralize block production on Ethereum. This would be a terrible outcome. Here's a potential refutation. Users monitor intent execution and switch away from bad operators by evaluating performance and credibly threaten to leave. This would be what we call the slow game or hold accountable. You can think DYDX slashing committee. Due to network effects, users must coordinate to collectively switch operators as needed. Operators will try to lock in users and extract MEV. Trust. As many solutions require trust in intermediaries, development of new intent-based architectures is hampered by high barriers to entry, implying lower rates of innovation and competition to ensure execution quality. We already see some of this today. Trust refutation. Topology depends on what trust relationships the protocol can model. ANOMA aims to standardize the protocol to model diverse trust relations explicitly. Users to send intents initially to friends or local community pools even, before sending to the Coinbase megasolver, though they can still do that if they would like to. Configurable nodes for different roles should lower switching costs and making the long-term incentives transparent. Opacity. As many intent architectures entail the user surrendering some control of the on-chain assets and permission mempools imply a degree of impenetrability from the outside, we risk building an opaque system in which it is unclear how or whether users' expectations are met and threats to the ecosystem remain undetected. Opacity refutation. Intents define their own settlement conditions, controlling what routing disclosure happens within the network back to the user. Intents can require signatures from gossip nodes or encryption of data. And information flow control. Precise control over information flow is probably table stakes for intent systems going forward. It's not optional. So some conclusions from this talk. The MEV discourse and decision-making is path-dependent. Intents decouple protocol architecture from topology. The architecture topology separation removes monolithic constraints. If you fix the variable of the architecture, incentive structures are a function of the topology. User choice, monitoring, and incentivization ultimately determines system behavior. Wait, it's all architecture topology separation, always has been. And one last bonus. See, I know what you're thinking. Actually, I've been thinking this ever since I got here. Ethereum is an excellent settlement option for ANOMA from an architectural perspective. Thank you.
They will answer your questions in writing. There we go. That's MTD.
Trying to make it full screen. Anybody know some magical F button that top left. Nice. We solved it together. I expressed the intent. Okay, so we talked about the past and the present of MEV. We said that everything is MEV, and we understand how we got there. But I'm thinking about what was even earlier. So a lot of us very idealistically came to blockchain space thinking that what we're creating is some kind of markets for the future, for very, very distant future. And the markets that will be very accessible, permissionless, efficient. So anyone in the world and maybe in the future outside of the world will be able to participate in the market without any centralized players, right? And technology advances, and we're learning more and more how those future markets can look. And that's what we'll talk about. We'll talk about a bit of like a near future, and also we'll experiment a bit with thinking about the very distant future. So my name is Tomasz Stanczak. I work at Flashbots and Nethermind. So the question for everyone is, how would the market be in 3024? And it's a lot of thinking here. And I spend a lot of hours like talking to ChatGPT about it, and I'll mention to you later what we found together. But as a bonus, because we went so far that maybe this would be too hardcore for this talk. So I'll go back in time, not so far. So when we realized electronic trading practically started in 1971, not that long time ago. If I think that from 1971 to 2000, this is when the electronic trading practically flourished and became ubiquitous and used for almost majority of the markets that had significant volumes. Even just like maybe last year or so, some of the last outcry trading pits were closed in Chicago. So people are still going to trade floors and shout their prices, maybe even nowadays, but it's disappearing. So we're trading electronically. This is normal for us, and the transition happened over 30 years, and the blockchain started in 2009. So we can think of maybe the equally substantial transition over 20 or 30 years in the blockchain space. So the expectation is the blockchain will become the future for the markets. Well, we asked those questions as well. And the Flashbots was a book published in 2014, and then we also mentioned Flashbots 2.0 2019 as bringing some concepts from traditional markets to the blockchain markets. We realized that we have the same problems on a different scale, maybe in slightly different technological environments, but similar problems. And if we start thinking about traditional markets, blockchain markets, and you look at the trading, we start to use more and more often the same language, solve the same problems, and there would be a suggestion maybe there is some convergence that those markets will become one. And the on-chain trading, even as we say that blockchain started in 2009, we can think of history of Ethereum and through stable coins and DeFi, all the way to nowadays talking about MEV a lot as this recent history of the on-chain markets. What will happen next? We'll talk probably a lot about PBS, as we mentioned already, trusted execution environment markets like Suave. You've heard of Suave a few times in the previous presentations. And I think a lot of thinking about the future of markets is thinking about how do we build the markets for AI? Will we build the markets for AI, or AI builds the markets for themselves? And that bonus thing will be interplanetary markets and the ChatGPT conversations. So when I say the same problems that we face in traditional financial markets and the blockchain markets, so how many of them did we solve on blockchain? Because when we come to blockchain, we say, oh, blockchain is revolutionary. It provides this immutable ledger. It provides permissionless access. It provides like never stopping virtual machines that keep pushing things and nobody can stop them, right? They're decentralized, so we provide decentralization. We talk about cryptography in blockchain giving us the ability to encrypt things and decrypt them conditionally. But the problems of trading is like liquidity. Liquidity problem remains, like, and the fragmentation of liquidity across different venues, different chains. Now we're talking about the bridging problems. The limited access problem of the markets, like if the markets were, some of the most developed markets would be not available for the non-developed countries. And I'll argue that much of those problems will just move to blockchain because they are not technical problems. They are very often the problems that exist outside of technology in the real world. The front running and latency problems. Well, blockchain started with 15 seconds blocks on Ethereum, now 12 seconds. Obviously, front running and latency will both matter. Scalability will be probably the problem of any system that tries to keep growing and giving more capacity for trading. Market manipulation problems. Well, this is not related to technology. Cybersecurity risks, they stay probably to some extent. Well, we have constant hacks of the smart contracts. The systemic risks. I think very often we haven't seen yet like the proper systemic risks on blockchain. And we may see them with some of the major stablecoins collapsing or the staking, restaking leading to some major collapses around Ethereum and major protocols. So we've seen things like FTX happen. I think they were just very, very small comparing to what is awaiting us and what we'll have to deal with. It'd be like the chain, major chain like Ethereum stopping because of the major issue with the clients. Insider trading, well, this exists outside of chain. Can you hard code on chain in smart contracts the protection from insider trading? Operational risks, well, again, like deploying of smart contracts, problems with executing the tech. So many problems stay, and we'll have to solve them together, and we'll solve them either through some technology improvements or through regulation. And probably AI systems will be helping us with that, both in the traditional markets and blockchain. So once again, blockchain solutions brought permissionlessness, notarization, decentralized encryption. I said decentralized encryption because when you think about things like trusted execution environment, SGX, and encryption models, well, you can use them in traditional markets. When we think about Suave, could you deploy SGX system that would allow you to deploy algorithms, attestation to the systems, attestation to the algorithms used, and allow people to trade within that system on a centralized market? And you would have also a promise that nobody modified the program because you have exactly the same promise of attestation. So, well, you do that on blockchain in a decentralized way, so some improvement, but it's worth always to come back and think like which problems we really solve. Composability on blockchain, for sure this is a great improvement in a sense that we bring the layer that is common for everyone through Ethereum models, but at the same time we bring multiple different chain models and bridging, and solutions like Solana and Ethereum will be very much incompatible, so we're losing composability very often through the competition. So is the problem with technology or just the competition by itself causes composability trouble? Could we provide all of those without blockchains? At the same time, is the blockchain enough to ensure the problem solving? Coming back to a few things from the past and how they change nowadays. So I was reading how the open outcry model worked in the sense that when I started looking at those videos of people shouting prices and the signals that they would show to signal the trades they wanted to execute, right? They were shouting prices, showing prices and showing the quantity. And I thought like, well, so was front running there? Like, was it a public mempool practically? As you could just look at all of this and all transactions were in the open. And this seems intuitive, natural. I asked the questions in my conversations with ChatGPT. How would you avoid it? How would you protect? And there were regulators and there was monitoring and people were observing. And also the fact that everyone was trading in public was assuming that everyone was putting their reputation at stake. So you didn't have the you didn't hide your identity, right? So everyone was looking who is behaving not the way that they would like to, and they would block them from the market or invoke the regulatory action against it. And in a way, we, like as blockchain community, like the MEV community, we started looking at a public mempool and we started thinking of, well, who can we identify and call them out as like their reputation is at stake. And very often when we look at the market makers, we think that, and Nathan mentioned that, like just be nice in a sense that they don't expect people to be nice, but that reputation systems work as this social consensus model to much extent. So once again, we didn't solve that by technology, but by the sheer nature of human interactions. So once again, a question, what will happen with the AI markets? Well, you have there the risk of reputation. Can we introduce the blockchain's AI, the concepts of reputation that will be strong enough so we can trade within those systems and regulate them efficiently? Now the dark pools, this is probably as well in Budapest, just less people. So dark pools were introduced, I mean, like they're operational in the traditional financial markets, right? So this was the answer of like how to ensure the protection, the privacy of trades for the large orders to be executed. Right, they got a bad reputation and then invoked regulation because, well, once again, don't expect everyone to play nice. If you create a dark pool and everyone believes that you'll be playing fair because you provide as a alternative trading system, you provide this opportunity to execute in private and algorithmically execute trades in chunks and so on, well, at some point, maybe because you're a centralized entity, maybe not you, but the manager that comes after you, the next CEO or the next operator of the dark pool, maybe they'll start doing something bad just for the profit. Maybe they start front-running you or reordering and whatever. Now, this is, once again, like, can we solve it without blockchain? The same entity can run SGX and can run the model that will allow you to trade, and now you have attestation of the models, and you have encryption. You don't need blockchain for encryption. But you lose the ability to decentralize it. And via blockchain, we have to ask a question, is decentralization absolutely beneficial to those systems? Like, is it enough to make them so much better than just moving SGX systems and those models to the traditional markets? So do they converge and say, like, how much of the centralization I need and how much of the latency of traditional markets and the experience of executing trades at volume, low latency processing we need? And then I ask about the censorship resistance of blockchain, right? So we look at blockchain as a whole, and we think that it should be censorship resistant. We should prevent blocks from excluding some of the transactions. If we think about the look at the market in general, then the questions that we ask that lead to censoring are like, who can really trade? So is that person, is that institution allowed to trade, or are they banned by some regulator? What can be traded because whoever may be banned from trading some specific goods or services? We may want to, well, obviously we want to avoid human trafficking and so on. How can it be traded? So even if you trade something that is perfectly legal and you yourself as an entity, you're not coming from the region or institution that is banned by the regulator, the way you trade might be banned. So like, you can be front-running and so on. So all of this we want to regulate, and permissionlessness doesn't really help that much with it. It makes it much harder, which means that the big volumes and big markets don't want to play that game because it's risky for them. So is blockchain solving that problem for them and giving them best liquidity, best place for their liquidity? And there is a big chance that what will happen on blockchain will be stratification of the market. Like that nowadays will look like on the left, right? It's just like a gray area. You join blockchain, you know that you're trading somewhere around the shady things. Everything is mixed together. And that's why very often blockchain is targeted by the regulators. They say, like, blockchain is bad place, because you cannot avoid trading the dark market there or like being even commingling assets. And what we see from institutions now is that they want that second thing. Like, they want to just put it in layers and say that for anything that I trade on this blockchain, I want to make sure that my assets will never touch that black market area. And in a way, this is good, because you say that blockchain is technology in this format. It's a platform that is universal for both black and white markets. And there is somehow acceptance probably from the institutions that we operate on the same market as long as we separate it. Because if you accept this as technology, it's unavoidable to use, that any separation, that any other separation would look like this. You would have to build chains for the good things, chains for the bad things. And this wouldn't change much. It would be just a bit harder to operate. It would be even more bridging and more pretending. And how to efficiently build this, well, I think this will happen. Will it be efficient? Probably will be very, very tiring. But I don't think we can avoid KYCing on blockchain. This does not necessarily have to introduce like centralized regulators, but it will create the layers on-chain of just like locks of how you can transition between the layers. You will always be able to move your assets from the white market to black market, right? You can do that for some kind of burning bridges, but you will not necessarily be able to come back, because some players will say, I don't want to trade with you. I want to exist in that space that is regulated by, like self-regulated even. So you don't need to have centralized regulators to still arrive at the market that will be KYC'd and censoring, because censorship in the end is a natural function of our social interaction. Some things we accept, some things we don't. And with all of this and introduction of AI agents, I will ask, like, will we have an AI regulator, some AI systems that will deploy within those dark pools, that will act on behalf of deciding what is right and what is wrong? So definitely with the new technologies, we can say that not only we designed this AI regulator, but we want to make sure that it always behaves in a predictable way, that it's not corrupted by someone, not having bias. So for sure, the technology around ZK, ZKML probably, verification of model execution will be integrated into the dark pool. So I'm saying yes, that everything probably will happen on blockchain, but not for the permissionlessness, not for the like accessibility without KYC, not because of encryption, not even because of decentralization, but probably only and only because of the function of the general ledger and notarization. And sometimes we think that like all of these other things are just intermittent. Like the fact that everyone can access it is just temporary, because in the end, we simply separate always the world into layers, and we decide who will be allowed to each layer. And temporary blockchain is just this mix that allows everyone, but it will not be probably forever. And even if you can access blockchain, but you cannot access 99% of the liquidity on the blockchain. Can you really access anything? Not necessarily. So I think the blockchain will be there in 1,000 years, probably looking very different. It will be there mixed with some crazy encryption models, with some AI, maybe without us anymore. It feels like blockchain is a very natural solution for AI to just talk to each other, to trade, to verify each other's actions, and to look at the history. So does it mean that there will be convergence? Yes, because it feels unimaginable that there will be no need for the centralized trusted ledger, and all the other functions can be built on top, and all the other functions already feel natural for the financial markets. So the blockchain itself will be lowering latency, will be introducing more and more scalability and capacity, will be stratifying the market into multiple layers of like how good the market is. And traditional finance will be tokenizing everything, so it can be digitally traded, because no other trading models will be efficient enough. And that bonus that I mentioned, so what ChatGPT told me, well, for 1,000 years forward, you have to start thinking about time relativity. So if you're running a hedge fund, maybe you want to run it on a very fast-moving ship. And how do you really agree on time if your nodes are in different time systems? So it's interesting read. So try to have this conversation as well. Think about 1,000 years ahead. Thank you so much.
the types of deals that you're really going to engage with, particularly around order flow. Question to you, Joe, because you said shadowy, but also to anyone else on the panel.
Please find a seat. Okay, and also I would like to ask for help to close the door as we are starting, and the live stream is now back on. Also, just a couple PSA. Our lunch will be served at 1, starting 1. Feel free to go at your own leisure. It's on the 4th floor cafeteria. And so I think we have another hour of content.
Yeah.
Please prepare your questions ahead and log on to ethglobal.tv site chat for questions. And we would like to ask all of the speakers to respond async in the side chat. Thank you.
Okay, great. So hello, everyone. GM and I guess G afternoon for the past 9 minutes. So about a couple of years ago, I wrote this post called Endgame, where I basically pointed out that a lot of the different blockchain scaling paths that people were thinking about, including layer 1 scaling, including different forms of layer 2 scaling. If you push all of those paths to their limit, and if you add the kinds of scaffolding that you need to actually make them sane from a decentralization and censorship resistance perspective, they actually end up in a surprisingly similar place, right? Basically, a place where you get centralized, what I called block production, though I think it's also actually possible to think of it as being something that's much more restricted than production. Then you have decentralized validation, and you have strong anti-censorship protection, right? So this is a post that came out about over 2 years ago, and it's, since then, I think we've gone a lot from theory to practice. And one of the ways that I think about how a lot of these things look like in practice is basically that how Ethereum scales is an industrial organization problem as much as it is a technical one, right? So even if the same pieces get built, different choices in who builds them can lead to big differences in outcome. So analogy, the efficient way to serve food at scale across a country is to have many locations. In each location, food gets made in a central kitchen and people can come and order it. How many people here have been to one of those in the past year? Okay, not many hands raised, interesting. But is each location a branch or a franchise, right? Branch is command and control, arranged from the top down. Franchise is anyone can come in and say, yo dog, I have a location, I'll pay a fee, and I want to use your logo and serve your stuff. So there's, this is a kind of sub-discipline in economics, and it can really try to explicitly think about the trade-offs of even if the same kinds of pieces get made, what are the actual consequences of different pieces that are happening? So going through a few examples of this, right? So first example is the state transition function, right? So state transition function is basically just, if Ethereum scales, then you need to have lots and lots of transactions, and with a lot, these transactions are being processed by a set of rules, and these rules talk about how accounts work, how smart contracts work, and so on and so forth, and these rules have to be enforced somewhere, right? Now, Ethereum for the last few years has had this roll-up scaling, a roll-up-centric roadmap, where basically Ethereum as a blockchain provides shared security, and it provides data scalability through things like EIP 4844, which we're going to have in, I guess, about 25 hours. Then you have rollups, which are these layer 2 protocols that actually handle execution and all of that infrastructure on top, right? Now, theoretically, you can achieve the exact same outcome by basically just having a big system that has kind of monolithic shards inside the protocol, right? And there are other platforms that do this. In the case of Ethereum, in realistic possible futures, right? I think there's basically 3 that I can think of. And one is, you have different rollups, and each of those rollups makes their own highly customized state transition function, and like this is like a major basis for people to compete with each other, right? So, you have Fuel, which has like been stage 2 for a while and deserves praise for that. You have Arbitrum and Arbitrum Stylus. Then, you have the whole StarkNet ecosystem, and Cairo and their proof-based VMs. You might have even more in the future. Another option is basically rollups generally reuse the EVM. And a third option is like rollups use a hypothetical Ethereum layer 1 EVM precompile, right? So this is a post that I wrote about a few months ago that basically talks about this idea that like maybe Ethereum should include a ZK EVM precompile as part of its kind of layer 1 functionality, right? And if we do that, then basically, like it comes much closer to a world where we have what was called sharding like 10 years ago, including execution sharding. But like as a rollup, you're basically responsible for spinning up your own shard. And if you do a good job of attracting applications to your shard, then you get to collect the priority fees in your shard, and you get to make money that way. These are like very like from a technological perspective, there's a lot of similarities, but from a perspective of like who builds it, you have a bunch of different consequences, right? So like for example, if rollups make their own STF, you have more options for users, faster iteration in VM technology. Cons are greater software bug risk, more confusing for users. If you want to make it easier to understand for users, then like fine, everyone uses the EVM. But you have somewhat less bug risk, but you still have some risk of bugs, but also less room for creativity. If you don't want if you want to like really minimize the risk of bugs losing your money, then Ethereum L1 EVM precompile can do that. Basically, the more you enshrine, the less application code attack surface there even is. There's also no need for rollups to have governance because they just kind of automatically upgrade when Ethereum upgrades. But there are trade-offs. So like in this case, there's actually efficiency trade-offs. Enshrined ZK VMs do involve like some actual technical sacrifices, right? And I also talked about them in the post, right? So you have these different options, and like they actually have some interestingly different consequences, but a lot of these consequences, like they don't appear on usual axes like scalability versus decentralization. They appear on like these weird new axes that we think less about, like speed of innovation of different things, like risk of software bugs, and the extent to which like different pieces of the system need to have governance, right? So like for example, if you're the sort of person who loves the idea of Ethereum ossifying and you're totally afraid of Ethereum governance doing crazy things in 2029, then going up to the next two columns, and especially the top column, is good for you. But if you're the sort of person who actually believes off-chain governance is best and you're afraid of any of these weird gadgets that have inside of layer 2s, then like the bottom thing is actually best. Sequencing, right? So procedure for determining which transactions go in the next rollup block. So independent sequencing, every rollup does it for itself. Shared sequencing as a piece of layer 2 infrastructure, and then you have based sequencing and like all of these Drakean ideas that try to like bring layer 1 and layer 2 together. Like if you look at just kind of like what the trade-offs of some of these are, I think. Between independent and shared, like the big difference is basically if you do independent, then like you get a risk that shared sequencing happens anyway through side channels. And then if you do shared sequencing, then like there's greater risk that there's some kind of ecosystem-wide monopolization. If shared sequencing is a layer 2 infrastructure, there's a risk of shared sequencing protocols becoming rent extractors. If you do it at layer 1, then you have like a different risk, which is that if something weird happens at that layer, then like you get more risk spilling over onto layer 1, right? So actually, this was something I also wrote briefly about in my post kind of almost 2 years ago on April 1st praising Bitcoin maximalism. And I basically talked about how like the thing about Bitcoin simplicity that makes sense is not like the technical simplicity of the VM, because like you can make the VM way more performant with only a tiny bit more technical complexity. It's like having applications is bad, right? And the reason why having applications is bad is because applications create weird stuff like mev, and the centralizing effects of mev spill over to the base layer. And like if we want Ethereum itself to be maximally protected from all of that, then like you have sequencing be very far away so that whatever centralization, whatever weirdness happens, like that gets collected by outside actors, and whatever gets pushed onto L1 is like becomes relatively time independent, right? So like that's one example of an economic incentive. And then of course the flip side is like, which of these protocols actually gets to collect the MEV. And this is one of those trade-offs between, like basically sequencing being based and sequencing happening at some higher level, right? So from a technological perspective, you get similar things happening, but a lot of the consequences, again, are economic. They're about like code dependency, like whether you're basically leaning on like L1 or kind of doing things separately from L1 and these kinds of issues. Proof aggregation, right? So rollups need to publish proofs to chain. A proof is about 500,000 gas, or something like 5 million gas if you're a Stark. This is a lot. It would be really amazing if every rollup could just publish an update every block. But at this point, it feels like everybody is just launching a rollup, and so we probably have like more than 30 rollups at this point, and so we have like too many for the gas limit if they want to publish every block. But the status quo is that every rollup figures it out for themselves. Simplest code, minimum trust dependency is high gas cost, but what if we have like aggregation protocols, right? Basically, instead of 20 rollups publishing 20 snarks to chain, you like somehow publish one snark to chain, right? And like we have aggregation protocols, and there's like different ways in which this could happen, right? So like one way in which this could happen is you have Ethereum ecosystem-wide proof aggregation. So basically, you have a protocol where rollups can opt into this, where basically they submit their proofs into a mempool, and then it's the role of builders in the mempool to just like take these proofs and then make a proof of the proofs, and then publish a proof of the proofs along with the state roots, and then a contract just like makes one call for each rollup, and you only need one proof, right? So very good gas savings, some level of opinionated choices, some amount of shared and trusted code. Another way in which a very similar thing is happening already is like we're seeing aggregation within ecosystems, right? So like StarkNet has their own aggregation. You have like layer 3s, and then the layer 3s commit into layer 2, the layer 2s commit into layer 1. And so ultimately there's like one proof, and so you get the same effect of like proofs inside proofs. This, like if this is a thing that individual rollup ecosystems do separately, then like this is good for large ecosystems, but it's less good for small ecosystems, and like you have to deal with more trusted code. Account abstraction and key stores is another one, right? Basically, so we have wallets, and one very basic security property that's like considered totally standard in regular cybersecurity is like you want to be able to expire keys, right? Like you want keys that control an account before to no longer control an account later. This is something that EOAs do not do, and it's like one of the 5 fundamental reasons why in the long term EOAs need to die, right? But if you have some account abstraction based setup, then basically, you have to store the information somewhere of like things like which keys currently have the right to process transactions from an account, right? And the question is like, well, where does this data get stored? So the status quo is basically if you have a smart contract wallet, you have a copy of that smart contract wallet on every single L2, right? And this is like fairly simple code, fairly minimal trust dependencies, but then there are also obvious costs, right? And the cost is like, well, if you change the keys in one place, then like, are the keys still gonna change in all the other places, right? And like you have high gas cost of changing all the keys around in different places. And there's also a risk that like you'll just accidentally forget somewhere, right? It's like you have a Gnosis safe, and like you change your keys in like 3 different places, but you just totally forgot that you have a copy of the same safe somewhere else, and then you forget to change the keys, and then 2 years later, like one at a time, the old key holders get hacked, or like like someone else kind of goes after them, or they they think that everyone else forgot about them and they just like go and steal the money. So there's like cons of the current approach, right? A very natural approach is, well, instead of having like that data live in every place, we'll have the data live in one place, right? So like either use L1, but L1 is a bit too expensive. Like use some L2 to store this information of like which keys currently have the right to access some account. One idea that I talk about is like this minimum key store rollup proposal, right? Basically, you create like this very minimalistic rollup whose only function it is to like store this account-related logic and to store the rules for updating it. So basically, trying to keep the thing pretty simple, trying to keep trust dependencies pretty low, requiring some standardization. And then if you want to update your account, then you'd only have to update it in one place. And then basically every time you sign your transaction, like that transaction would include a snark that proves the current status of your account. And this is something that is going to become cheap in the future because we have proof aggregation. But like there's still a question of like, who builds it, right? Another option is, of course, we just kind of like let users pick, like base their accounts on whatever chain they want. And like you just like put your key store there, right? You put like this, you store the logic of who is allowed to access your account and just like whatever chain you want, and like different users do it differently. There's like tech blow-up risk here, right? So you have like an n squared tech blow-up because you might have like n different types of proofs for n different rollups. You have more trust dependencies, but on the other hand, it's like it requires this like less shared infrastructure, and it's the sort of thing that's maybe more likely to happen anyway by default, right? So like you have approaches that are very similar, but then you have like differences in practice depending on like who does it, right? So I guess the conclusion of all of these different things, right, is basically that they're like once you start getting into the weeds, there's like a lot of these choices about like which actors are actually responsible for which pieces, right? And if you go back to the endgame post and you think about how from a technological perspective, right, all of the different things like feel like they're lining up toward the same conclusion. But what's the big difference between, let's say, what I call kind of an ideal L2 scaling future versus like what I would call like ideal Solana, where you actually have like consensus nodes being able to run on laptops and have sensitive inclusion channels and have Starks for everything. Well, the answer is basically like you have this boundary of like which actors are responsible for building and maintaining which parts of the ecosystem and what their incentives are. And across all of these different areas, like the difference between those things matters a lot, right? So basically, you have two separate questions, right? There's always the tech arrangement, and then who's responsible for building and maintaining what. And probably the biggest actors that we have are like one is independent layer 2 teams, another is basically standards groups. So you have the roll-up improvement proposal group. You have EIPs, you have ERCs, potentially more standardization in the future, and then you have L1 core protocol teams, right? And depending on like which of these pieces is responsible for building things, like you start to have some different consequences. I think the main axes on which the consequences are different on all of these is like basically, like one, who has the incentive to build the thing? Two, is there some incentive, like is there an incentive for people to like try to get a monopoly and like start extracting rent from the thing? Three, kind of where does the code bug risk lie, and like and how much risk of code bugs is there, and probably about a couple of other questions, right? And so I think in a lot of these questions that we have in the future, like it's going to be a similar thing, right? It's like even if the the final outcome is the same, like the path for getting there sort of also defines like these boundaries between what kind of actor is responsible for what, and this will decide a lot of the details. Yeah. So.
in the interest of time, we would like to ask Vitalik to answer questions from in the side chat of ethglobal.tv. And if you don't know how to spell it, it's on the top right there. So thank you. Next, we have a panel. And you're also one of the panelists.
Indeed.
Maybe you'll be standing.
Okay. How many chairs do we need?
If you choose to stand, you don't need any.
Oh, I see. It's a
It's a standing committee. But if needed, I can just. Just pass the mic. Let's do that. Okay, perfect. Easy.
Tell you what, I'll grab the mic that's over there so you can keep hold of that one.
Princess, would you like Vitalik's mic for this of your discussion, or you don't want?
No, the Alex first slide is good. The one
Oh,
with
can you turn it to Vitalik's mic?
cool. So we're going to do pass the mic, so you'll be right top. And then this one will be everyone else.
I think there's one more chair over there. Yes. Yes. Wait, which slide? Or not the slide?
The next one. Yeah, let's leave it at that.
Okay.
I think that's fine.
Okay.
Can we can't move this.
You want to move this? Well, no, we can't. Okay. So I'll give them. Let me just get it started.
Leave a mic.
Hello, friends. If you want to eat lunch at some point, please shh. Let's get started. And again, ask your questions live on ethglobal.tv, please, and we can interact async. Thank you.
Hello? Hello? Is this working? I can't. No? How about now? How about now? That's good. Okay, cool. Welcome, everyone. We have a bit of a collection, a variety of people on the stage today. I would classify them into two groups. We have one group of people that are sort of thinking about protocol designs, putting together many different kinds of nodes, like big nodes, small nodes, as we were just like discussing in the previous talk. And then we also have Lev, who's operating one of the big nodes, and so it gives a bit of a different perspective there. And the idea today is to sort of flesh out some of Vitalik's questions and generally try to understand how people are thinking about this heterogeneous endgame where we have different nodes playing different roles, what are the desired properties of the markets between them and how they interact, and what are the kind of actors who fulfill these roles. So I'll maybe ask everyone to just give a quick intro, say your name, your affiliation, and then sort of what nodes, what kind of nodes you'd say you get to do with. Are you operating a node, or if you're not, if you're running a protocol, what are at the very high level, what are the kind of nodes involved? Maybe starting from Lev, yeah.
Hi, I'm Lev. I'm from Beaver Build. And yeah, as you guys probably have heard, block building involves not only running normal nodes, but also being a node in the sense of being responsible for what transactions get executed and included.
Hello, I'm Mustafa at Celestia. In terms of nodes, it's because it's just a DA layer, so there isn't much MEV right now, unless people build base rollups. So there's no proposed builder separation. There's just no normal validated nodes. But there's also a big emphasis on data availability sampling light nodes, so that even though Tendermint only supports 100 validators, the idea is that end users can run data availability sampling nodes to kind of get assurances about the state of the chain.
Hi, I'm Josh at Astria. We're running a shared sequencer, so generally the nodes we're worried about are like sequencing nodes, but my perspective is that in like a lazy shared sequencer, they kind of look like relays in like a PBS system, and we kind of assume, you know, obviously it's like early, but we assume the ecosystem will develop into like a PBS system, and therefore the important part of our system is to run large nodes with like relatively high bandwidth.
Hi, my name is Ye. I'm from Scroll. We are building a ZK EVM layer 2. So we have, like, not super controversial. We have two types of nodes. One is sequencer, one is prover. Our sequencer is not as lazy as, like, because we need to actually order transaction, execute transaction, and post data to EVM layer 1. And then later prover will kind of generate proof for each block and then submit the proof and then, like, layer 1 verify the proof. So it's, like, non-controversial layer 2 construction.
Hey everyone, my name is Joe from Aztec. We're building a privacy-focused layer 2 on Ethereum, also trying to make it decentralized. So we have a few different nodes in that, peer-to-peer nodes, transaction pool, similar to Scroll, sequencing nodes. We care a lot about those being permissionless, so I guess they're small nodes. And then on the proving side of things, we'll have some slightly larger nodes for proving marketplaces filling in to actually build the proofs.
I mean, I guess in Ethereum, like if I had to categorize it into 3 types of nodes, I would say like specialized nodes that do various kinds of like aggregating or proof generation and witness generation. Then you would have nodes that are participating in consensus as validators, and then just like nodes that any user runs to verify the chain, which I expect in the long run will just be verifying one proof and doing one round of data availability sampling, though it's still a while until we get there.
I'm mic'd up, thanks. Okay, so Joe, I think I heard you mention both permissionless and markets in your response. And so when we look at like these different sets of nodes, there's usually a couple of selection processes involved. One selection process is deciding which nodes are even part of your system. And then even within that, there's like a delegation of roles. So for example, in Ethereum, you select a proposer, it's like a consensus leader that produces blocks. And then on top of that, we've built another market where there's now some selection of a block builder. And at least it made a big impression on me last year. John Shaw made this argument for proof of governance. He was saying, like, if you look at Lido, look at these staking pools, eventually just end in an abstract sense selecting nodes. So I'm curious how do people on this panel feel about the role of governance and the trade-offs between governance versus something that's more permissionless or looks more like a market?
Yeah, I can start. And I think depending on the properties you need from nodes, like if you're going for censorship resistance, you need to have permissionless kind of entry into that. And I think everything downstream of that is a market design question to try and keep things in an equilibrium that stay that way. And we saw that on the previous panel where if we get that wrong, maybe you get builder centralization. But I think aligning kind of censorship resistance and permissionless entry into a market is a key kind of criteria for node selection for me.
Yeah, I think our view would be kind of like we're trying to go from like centralized sequencing to decentralized sequencing. And so one of the fundamental trade-offs is just going to be you're running a consensus network. You're going to be slower. You're going to have higher latency. So like we want to optimize our like operator selection, our node operator selection for like quality, right? Like the ability for these entities to like run a high performance, high throughput network so that the trade-off cost of going from a centralized network to a decentralized network is like minimized. And so in some way it's kind of this like, not making perfect the enemy of good, where we would prefer to not have like a permissionless system that leads to just like stake-weighted kind of like selection where maybe they have a lot of stake, but they're not good at operating nodes, and therefore the network is like lower performance. And we'd prefer to do something like proof of governance, where you're saying, well, we're actually manually picking nodes. We're getting the decentralization from like a geographic perspective. We're making that permissionless trade-off, but we're also having like a higher throughput network. And we think that allows us to kind of go into this kind of decentralized versus centralized trade-off with like a lower cost to like an end user.
I can also add more, like even if we are not decentralized yet. So like, our roadmap, like we are committed to decentralized. But the way like we think about like how we select different party, like sequencer and prover, is that sequencer and prover have totally different like, reason why they want to be decentralized. Because for sequencer, it's more for like you want permissionless, you want like, no one can censor your transaction, like without going through the layer 1 to kind of paying that costly cost. And prover is more for liveness, because what if like in one day we kind of start to go away? It's very hard to kind of assemble like a lot of like really strong computation power prover to kind of generate proof and keep your network running. So it's totally two separate roles, and so they have totally different requirements. And the way we think about how we select role really like how much we want to do in protocol. Because there are two ways to design your protocol. One is that you can imagine like there is just one one node running like the role of a proposer, where you have only one type of proposer, and then you select this proposer will generate block and also produce proof. But even in this case, you can still delegate the block building to a separate builder market, and then you can outsource this kind of proof generation to a separate prover market. So those two roles are still separated, but they are kind of in the protocol. You don't need to worry about like who is running a builder, who is running a prover. You just select one party who you trust and will submit the data and the proof. And the other choice is like the protocol will select both the sequencer and prover, and that might require very complicated design because you need like some slashing for sequencer who produce maybe bad block. You might also want to punish prover if they are not like submitting proof in time, and that makes the incentive and economic become more complicated and makes the kind of flow become a little bit more complicated. But that's basically how we are thinking about how we are selecting different roles and how we decentralize our protocol. And for our roadmap, we will decentralize prover first to be safer, and then like we still control the block generation, and then later we'll decentralize both parties.
See, yeah, maybe throwing this to Lev. You're in a position where it's a very market-based selection mechanism, right? And we had like a brief discussion this morning around the previous panel also highlighted this. Having this kind of market ends up changing the role that a node might play. Like originally block builders were just had a very specific function in mev boost and the PBS roadmap, and then on top of that, additional features came around. People started implementing private RPCs, and so I was wondering if you could maybe give some insight into that, and then I'd be curious if that changes people's perspective on whether you want a permissionless market or anything like that.
Yeah, so I think as far as we're concerned, and I would kind of speak to both the specialized node part and the sort of normal user node part here, not about consensus nodes, which I think are very governance. I would describe them as like governance constrained, like governance explicitly reasons about what they're meant to do and tries to, and also in terms of the code that's shipped by core devs is more or less what consensus nodes end up running, while everything else is this kind of Wild West, which is, I would say, like not really constrained by governance, and it's really governed more by market forces at this point on Ethereum L1 specifically. And I think that this could have a lot of unforeseen implications that often are not discussed in governance at all. So like which APIs do users use to submit transactions, which APIs do users use to interact with state, and which parties are able to provide those APIs? So how do block explorers work? How does a user simulate a transaction in order to figure out state to decide what transaction they actually want to do? These are things that very rarely come up in the governance context, and all of these have market. It's not just the block building that has market forces behind it, but also providers of RPCs. That's a business model, right? And they have specific node requirements that are very different to builders, for example. All of these things, there's market forces behind it, and I think people used to talk more about historical state, for example, stuff and state rent than they do like in this conference, but that's a big part of it as well.
Yeah, just to add to that, maybe Kevin, your colleague earlier, was talking about the sort of trade-offs of including blobs or not including blobs, and how market forces actually push you to maybe not include blobs. And that's maybe something that's different in a proof of governance setting.
Yeah, I think that gets very interesting with probably with things like blobs and also proof aggregation that was discussed in the previous presentation.
Yeah. Yeah, so ZK prover markets came up earlier, and I don't know much about them, so maybe you can educate me. But one thing that I wonder about sometimes, thinking from PBS, is the impact of closed source optimizations. So if you have a market, obviously like markets can have many kind of selection mechanisms, but generally there's some selection for a more efficient prover. If someone has a hyper optimized, they've got some breakthrough with FPGAs and whatnot, hyper optimized prover, they might end up dominating your market. So I'm curious, maybe just generally in these kind of node markets, but in particular in the prover setting, what do you guys think are the sort of the properties that you want from the market?
yeah, I can talk first from my perspective. So like again, like go back to like why we want to decentral prover is because we want liveness. Because even if like we are not operating like Scroll network, like the like prover can still like generate proof. So that's why like we want this kind of like prover market, and like there is always a backup for someone to generate proof. And it's a very interesting question because different from like mining, like proof market is quite different because like if you get ASIC, you literally can beat any prover in the market. You can literally become the best prover and take all the kind of like the power to produce block. And which I think right now at this stage is actually a good thing because we are kind of incentivizing the prover technology to be improved faster and faster because right now like the proof generation takes around like 5 minutes or something, and we want that to reduce to 10 seconds to achieve real-time proving and then like have some interability and all those kind of nice properties we want to have. So I think that's why I think starting from like incentivizing fast prover, but eventually becoming like, you know, we set some time window. As far as you kind of submit proof within that reasonable time window, then like you can get rewarded, will be a more fair way to kind of always, because if your system is always dominated by the fast prover, they can always leave and then your system gets more vulnerable. And then in terms of this, like we want to trying to kind of firstly incentivize faster prover to improve like overall like the ZK ecosystem because still need an order of magnitude improvement on the ZK performance. But secondly, then eventually move to like a more fair and then like, you know, more people get the opportunity to generate proof instead of just one like party dominate the market.
Yeah, I guess I have some thoughts. I mean, I think Mina maybe pioneered this idea of like a maximum proof delay, and they have like a proving marketplace on their chain. But the rough idea is that you have to be careful in market design of what you optimize for. If you optimize for fastest proof wins, then you'll create huge centralizing forces around that. But if you actually optimize for cheapest proof in 1 minute wins, then you may be able to enable everyone in the room who's got a lower cost of hardware or electricity to participate in that marketplace. So the rough idea behind a proving marketplace is that you can have maybe a more centralized coordinator that can work with a lot of different provers to make a proof for cheaper, but on the same long time horizon. And so I think over the long term, blockchains are very good at coordinating, and so we should see that for proof construction as well, rather than centralized markets.
Right. Yeah. I mean, well, like, so the nice thing about like proof markets, if you do it based on an auction scheme, is like even if someone dominates, you know, you can show that they're not going to dominate exactly 100% of the time. And the reason basically is that if they are dominating 100% of the time, then it's in their interest to keep on bidding less and less to make more profit until there is like at least an epsilon of a window for someone else. So. Which is something that you know, like does at least like it does mean that a lot of profit goes to one actor, but it at least you know, creates this incentive to you know, be the backup guy and at least be around for that. But you know, like that's something that you can kind of like tune up or down, and like if you can create a market design that's sort of in principle more friendly to multi-actor participation, then I mean, like you might even be able to kind of encourage better quality in whoever those secondary actors are. Like one example would even be if you just like explicitly, I mean, like break up the claim into different parts and like ask different provers to provide what those different parts are.
Yeah, another way to do the same thing is like backup blocks. You just kind of built into the protocol market, you always incentivize a separate backup block to do the same thing. It will have less reward, but you'll always then at least have two proving marketplaces compete, and you'll have liveness as you were saying at Scroll.
Just one thing to add, because Justin actually had another interesting idea, which is like we can like pay money to buy ZK ASIC because that will be really fast, and then airdrop to a bunch of people as backup, so that like even if your prover go down, there will be hundreds of people like who hold your ASIC and then can kind of start running this as backup. But I don't know whether it's realistic, but it's just an interesting idea.
Yeah, no, I looked at one of Justin's VDF ASICs a few hours ago, so I mean, I was like, I can ship.
Josh, if I understand correctly, your design also relies on, there must be some external block producing entity that executes transactions, because for horizontal scaling, your nodes don't have chain VMs, right? How do you think about the markets and sort of the way that you select these external parties?
So I think the way we think about it is kind of to the point on like governance is like, you know, it would probably be like accurate to call like our initial set going to be like a proof of governance chain, proof of authority, whatever you want to call it. We're going to specifically select, you know, entities to like be the sequencers, the validators, the relayers. You know, I think those are all equivalent in our system. And then, you know, to Lev's point, we're going to have the builders be this kind of market-driven entity, right? That's kind of the desire, is we're saying the governance will choose this kind of like core entity, and then you have like market driving factors for actually selecting like the other entities upstream. And I think it's desirable to have kind of like market-driven effects to kind of like optimize a lot of that, right? Because I think the big trade-off is we want the in-protocol actors to be like relatively lower resourced, such that we can then have like market incentives that will like pay for the higher resourced actors that need to do simulation across multiple chains or whatever. And you know, we've already seen that, right? Like builders can like make money, right? They will, you know, as we discussed with like the blob thing, right? They will do the work if it is profitable for them, and they will not do it if it is not profitable. So it lets you kind of back out of having to do a lot of like upfront kind of governance design of saying like, hey, this fee mechanism or like this amount of work is like profitable. The market will just define what is like a profitable behavior, and we think that's desirable.
Yeah, well, I think the challenge with all these incentives is like, there's things that we want that you can incentivize, and there's things that we want that we clearly can't incentivize, right? Like I think the big thing that we value that's not really incentivizable in a robust way is like this abstract idea of being an independent signal, right? Like, and you know, we have a little bit of incentives toward that with things like these quadratic penalties, and like the fact that going offline is only like really penalizes you if you go offline at the same time as more than a third of all the other nodes and stuff. But like that's in general, but like those kinds of rules by themselves are not enough, right? And there's the question of like to what extent you even can make in-protocol incentives for that versus, you know, to what extent this becomes a task for the higher level ecosystem, and like, you know, you basically just get more solar staker airdrops, and which is like, you know, like might actually fix things.
Yeah, I guess like one thing we've struggled with a bit is like when trying to design these markets, if you try and solve one market, you probably will create a inadvertent market somewhere else, and you don't really know which one's worse, the one that you kind of were trying to solve for, or this one that you didn't think about over here. So you've got to be quite careful of that.
So what are you worried about happening? I guess the question probably is, what are the kind of actors you want to fill the roles in your system? Do you have any preference, or like for example, Lev was talking about how they end up doing a lot of user-facing things and supporting different RPCs and getting hit up in Discord because people want to know why the transactions didn't land. And that obviously, like, the response to that depends on the kind of actors.
Yeah, I think it's just actors that are aligned with your network's philosophy. So we're a privacy network, and so we would want actors that kind of don't censor and put users' transactions on chain, regardless of the contents. And I think that's a key tenet for us. So if we are not careful and we create just a pure capitalistic market, then some of those properties may get eroded. So that's our number one worry.
Okay, taking a step back, I think there's general agreement that it makes sense to have smaller nodes, many more of them, that perform like some key validation tasks, and then big nodes that do some of the heavier resource things constrained by the small nodes. But one thing that it's not clear to me where it falls is consensus and the confirmations that it provides. To give, you know, I guess this like touches on the base rollup discussion as well. You know, some rollups want to have their own sequencer set, providing like running consensus, providing confirmations, and then eventually post that to Ethereum's larger set, and others just want to go straight to Ethereum. In Celestia, there's an interesting parallel where the Celestia validators are, you know, this rotating set, and they're running the consensus. And unlike in the Ethereum roadmap, or like one version of the Ethereum roadmap, the small nodes are only sampling data but not running consensus. And so consensus is a much more specialized thing, is constrained to a smaller number of nodes. And I'm curious, I guess, that anyone can weigh in, but Mustafa and Vitalik probably have the obvious candidates here.
Yeah, I mean, the approach that we've kind of, the philosophy is that it's okay to have, you know, let's not assume we have decentralized block production or even block proposing, and let's try to rely as much as possible on things like light nodes and data availability sampling. to make sure that the chain is correct. And also, but obviously, the most important part of having these decentralized block production I'm proposing is to have censorship resistance. But my general thought there is, well, like no chain has had like a Nakamoto efficient more than 40, so is there a diminishing return between having 100 validators and 1,000 validators, given that no chain has like had a Nakamoto efficient much bigger than that? Obviously, like maybe obviously with decentralization, it's like you only realize you need it when you actually need it. So we don't know for sure yet. It could be the case that you do need more validators, but the trade-off there is like with Tendermint, with 100 validators in Tendermint, you get instant finality for each block. But obviously, there's a lower Nakamoto coefficient to actually kind of like control 2/3 of the set.
Just to give more context there, how are the validating nodes selected?
So that's it, yeah. It's just delegates their stake to those validated nodes.
Does governance play any role?
No, there's no proof of governance or anything like that. It's just like any person that owns tokens can choose who they delegate to. But there is still also a liquid staking kind of like monopoly or duopoly issue in Celestia. Like there is some early liquid staking protocols, and there's a threat that they could have a monopoly as well. So, and for Celestia, it's even worse if there's a monopoly because there's no smart contract environment on Celestia. So the liquid staking protocols are like on other Cosmos chains that have IBC connection to Celestia. So if they have a monopoly, it's even worse because the tokens will end up in other chains. So we're also looking at things like proof of governance, but one of the kind of like proposals in the Celestia community is this idea where, I don't know if I can fully explain it here, but the idea of like, instead of having proof of governance for choosing to prevent monopolies for liquid staking, you would just have like this idea where anyone can kind of create their own liquid staking token with their own like set of validators and make it very easy to swap them, and that in theory might prevent monopolies from occurring.
Vitalik, I don't know if you want to weigh in or not.
Yeah, I mean, I think on the bigger question, like one of the interesting things about the execution tickets proposal in particular that makes it really clear, right, is that it basically takes PBS like basically to its full conclusion, and you would basically have like builder-attester separation pretty much, right? And the idea is that like attesters are the thing that like actually becomes sort of the unincentivized incentivizer, and the thing where like you're not collecting MEV. There's like a nice long 4-second window within to publish stuff and so on and so forth, and like that's a set of actors that like in principle through various like non-protocol incentives you can encourage to be widely distributed throughout the world, and then once you have that exist as an incentivization layer, it's like relatively less bad for whatever else to happen in the builder layer or other parts of the pipeline, right? And like the nice things about attesters is basically that like if you have a block, then you can like the block already comes with a proof, and all you need to do is just like be the same thing as a light node. You verify the proof, and you do a data availability sample query, and like you do the same like very minimal checks that any node would need to do in order to verify the chain. And like that's a thing that in the long run can be much easier to run, but like everything earlier in the pipeline does definitely feel like it just does like there's definitely pressure for it to inherently keep getting more sophisticated.
Yeah, so with the exception of Celestia, all of the protocols we've discussed today started with small nodes, and then the big nodes have sort of been added on as this external market, and sort of we leave it up to the market to fill in this interface. I'm curious if, because of that, there aren't some oversights in that the protocol could be designed to be more friendly to these big node operators. And Lev, I guess you can also weigh in here, like if there was some requests you could put in as a big node operator to protocol designers to make life easier for you, or that like things that are obviously inefficient from your perspective, if any.
I mean, firstly, I'm not sure if it's exactly should be the objective of. The question is what is, I think big node is like a very broad
Yeah,
concept.
block builder in your case. Yeah.
I would say that I usually view it in terms of more of like molding the role of the big node operator versus try to make life easy for them, quote unquote. Because I mean, I think as long as they're incentivized, they'll always figure it out. So the question is, what are their efforts working towards? And what you can do is you can fail to incentivize them to devote their efforts to the thing that actually helps the users, the ultimate end user somehow, and that's when you've failed. I think is if they all have budgets of millions of dollars devoted to optimizing something, which is clearly not the kind of social good of the group. But on the contrary, if you do manage to have it so that they're devoting their efforts to doing something that's useful, then you've succeeded. So I would put it that way rather than how to make their life easier, just because historically it just hasn't really been how we've seen things. But I think that, especially with things like execution tickets, I think it opens a very interesting area for figuring out what kind of standardization will be required for these different parties to interact. I think right now there's been some degree of kind of spontaneous standardization on things like builder APIs and non-standard RPCs, both pre and post PBS. But there's also some growing divergence there, and I think that as these things get more complex, it's very unlikely that we will spontaneously converge on the same APIs. And I think it's anybody's guess how, if execution tickets are implemented, how exactly it plays out in terms of who the different participants are. But I could imagine something that forces a greater degree of standardization there, in order for it to be basically possible for the builder for a particular slot to actually aggregate order flow and talk to other people required to make the block that they need to.
I don't know if any of the protocol designers have a other perspective on that. Where have you thought about how to enforce standard behavior across the nodes participating in your markets, or is that sort of something that's a bit further down the line?
So I guess this relates to like the earlier panel from the builders, and maybe it's not trying to enforce standardized behavior, but it's kind of thinking about bootstrapping and saying like, why I asked the question of like, do the builders spend any time thinking about like other ecosystems? And you're thinking, okay, if I'm bootstrapping an ecosystem and I need builders to participate, what can I do to like lower the barrier to entry to have these kind of more sophisticated participants in an ecosystem that is maybe like more nascent, and therefore kind of like building APIs, kind of to your point of like making it easier for the big nodes because we view them as like, kind of necessary, or maybe inevitable would be the better word, of like the market structure will lead to these entities being there. How do you accelerate that path to getting them there? Ideally, you can have more decentralization in that, but it's really like bootstrapping. It's like, one of the questions I have is like what do builders not like about like the builder APIs or like the system they've got? Lev's point, like they'll figure it out. There's a bag of money, and it's just like if you go figure out how to use those APIs, however jank they are, like there's money there, so they'll just go do that. But presumably there is something better, and so we do spend a bit of time thinking about that and saying like, look, if these are kind of one of our customers in like a multi-sided market, we would like the integration pain to be like lower for them, because that's just going to make our like sales cycle much easier.
Yeah, maybe just to motivate why I framed this in terms of making the life easier for big nodes, is that as we sort of, one of the biggest motivations for this kind of separation is scaling. And so you want to have the node resources utilized maximally efficiently. And it's not clear to me that design goal has been there necessarily, like in the way PBS has been designed. It definitely hasn't, right? It was more about the MEV perspective on things. And so, for example, in PBS today, state root calculation is quite an expensive task, and that's done dozens, if not more times in a slot, which is like wasteful because you only really ever need one computed.
Well, at least, in the status quo, like everyone has to compute the state root to verify a block, right? But
right. But even in the block building world, if you can update your block bids more quickly, that should allow you to like have in some sense a more efficient market.
Right. I mean, in principle, there's like software that you can write to like compute a delta and update a state root based on a delta, right? Like there's stuff that probably hasn't been written but could be.
Yeah, Lev looks like he wants.
Yeah, just an interesting example of that is that given that in practice today on on mainnet, the majority of blocks are produced by block builders, for example, and they accept transactions through an API that promises not to include reverting transactions. Effectively, the whole point of paying for reverting transactions and a lot of how the gas model was envisioned is now sort of been like kind of deprecated by builders saying that, oh, we actually have tons of computing resources given where the, how much transactions we're getting now, and we use a bunch of, random heuristics to decide which transactions are spam or not. And then you often get, firstly, you get this strange dislocation between how core devs think about resource usage in the protocol, where block builders are actually expected to recompute things many, many times and resimulate everything in every single order, which is totally different to how the kind of vanilla mempool was designed and where the kind of gas metering considerations, I think, came from. And I think also, secondly, this creates I think it's going to create difficulties for. Not just for block building. There's this huge kind of question that looms over the space, which is that users need access to RPCs. Often for historical state, we have and it's, this has been kind of the case for much longer than PBS. We have, probably questionable incentives in markets around providing RPCs, especially with other chains that might have much, much bigger state growth. That I think are kind of still, to me, as far as I've seen it, are kind of unanswered.
Okay, a sec.
Was that getting into the point of your question at all? Or?
No, that touched on my question. I was trying to think of where to take it next.
I have a question for the panel. That's okay.
Yeah, shoot.
Yeah, I mean, following up from this talk, so. Like we're assuming that there's a kind of like a multi-rollup ecosystem. Like first of all, like how do we know that's going to be the case? Like do we actually think users will use, like let's say there's 10 general purpose EVMs. Do we think users will actually use all those EVMs, or do you think there's like a natural kind of like market play for users to eventually only use one of those chains, like where maybe Arbitrum or Optimism will get all the market share? But if there is a multi-rollup ecosystem, how do we, like, what incentives will there be to use different rollups? Like maybe, could there be like application-specific rollups or something like that? Or like, that's kind of my question.
I think there's always going to be multiple based on either features or you can maybe call it a feature, but the security assumptions of the rollup. So even if you're just implementing EVM everywhere, you're going to make different trade-offs in how you do that, unless you have the precompile option on the slides. So I think even if your features are the security of your DA or your proof system, optimistic versus ZK, there's always going to be different places on that trade-off space you'll sit.
So I think this is a question like I keep asking myself, and like we have multiple internal discussions. I think it's just like even from like in 5 to 10 years where we are like I think people here all believe that blockchain really in next 5 to 10 years really the core financial infrastructure. If the core financial infrastructure and all those kind of like internet activity all happen on like just 1-2 server, I think it's just like literally impossible. Even if you look at right now, like Amazon, Google, like Twitter, they all need like even more servers than like what we need right now. So I think it's just literally like one rollup just can't scale to enough like throughput we really need, because every rollup talk about like 1 billion people bring to Ethereum ecosystem, but if you really do some calculation, which we have, is that if 1 billion people, everyone send 1 transaction per day, that's already like over 10K throughput required. So which is literally, even if you use like all parallel EVM, every kind of fancy scale you have, it's just impossible to kind of run on just one server without even decentralization. So there will be many, but I still don't believe that will be like like tens of thousands, because like the interoperability is still very hard to achieve even with shared sequencer. So there will be like, I think there will be several general purpose rollup with different value propositions, some security, some other DA, but then users still need to be aware of like which chain they need to use to kind of be aware of secure assumption and all those properties.
Okay, I want to ask one question and then put it to the audience. I also don't know how much time we have, or if there's anyone watching at all. We can just go forever. Okay, I'll ask the question then, and then the police can tell me. What are the blockers to central? Like, there's been a lot of talk about big nodes, big sets of nodes and interaction between different nodes, but most of what we're looking at right now is just a couple AWS servers. So why aren't we, I think obviously things are challenging, but more specifically, what are the obstacles to getting to this more decentralized, these more decentralized stacks that we're looking for? Yeah.
Yeah, I can talk about. So firstly, I think eventually we definitely commit to being decentralized, but it's like the question is like how you take this decentralization go to market and how you progressively do that. Because right now, like the biggest reason is that because Arbitrum optimism providing like millisecond pre-confirmation experience, if you kind of are sufficiently decentralized, it's just like your system won't be used by people, by users. That's a lesson I learned after we launched our mainnet is like you talk about security doesn't really matter. Like people have been like living in a system with no proof for 2 years, so they don't care about like decentralization and proof. So it's really a matter of like how you kind of take this kind of like decentralization progressively to market. So that's why you decentralize prover, at least then sacrifice the proof confirmation side, and then you think about like how you gradually do that step by step. And the more practical challenge is that right now like the EVM has been like even like fully audited, open source. But still, like it might have some Sunday bug. So if you take a very, very aggressive step to decentralize your stack, you give all the control to like anyone can generate proof and produce a block. It's very dangerous actually because someone can just catch a Sunday's error, completeness error for your ZKVM circuit and then like just do something bad without, if you are not enshrining ZKVM into layer 1 and use layer 1 to govern this ZKVM, it's just very dangerous to do that. So it's mainly coming from like user need and like how you progressively do that, and also some practical challenges on the ZK side. And also like I think maybe AdTech had more like compliance issues, so they need to decentralize layer. But for us, like general purpose one is less concern.
Yeah, maybe I can elaborate on the kind of decentralizing the sequencer risk. So on Ethereum, like if there was some critical consensus bug, you always have the option to hard fork away, and the assets, maybe except USDC, exist on both chains. In an L2 world, that's not the case. So if there's a fully decentralized sequencer, then if someone can exploit an issue in the VM or the roll-up circuits, then you can't hard fork away because the most of the funds are kind of L1 based and they've come from Ethereum. So an attacker can come in, take those funds out, and they'll live on Ethereum. And regardless of if you fork the roll-up won't have any assets in it anymore. So I guess the number one issue in trying to decentralize here is balancing security with kind of this kind of decentralized sequencer property, because that's how you can propose a block that contains an invalid transaction. And training wheels help, multiple proof systems can help, but that's kind of the thing that takes the most time to develop is around training wheels to get to a fully decentralized L2.
Okay.
Yeah, I think there's like a couple points here. Like one that's very key is just like where are you spending your resources? Like what is your differentiation? So we have like tools like ZK rollups, right, where like a lot of their time and effort is spent on like their specific like proving mechanism, and so maybe like focusing on like decentralization as like a consensus algorithm and optimizing that and developing like a set of entities that can run a fast network. That is just like not their kind of core differentiation against all the other rollups. So they say, yeah, we'll do that later, but like everyone has progressive decentralization on their roadmap. It's been like 3 years, whatever. Like no one's kind of like done it enough that like there is a forcing function for someone to say like, oh, like Optimism or Arbitrum made the first move, they decentralized the thing. Now there is like a market pressure to say like, oh, everyone else has to do decentralization. Everyone's just kind of comfy in it. There's like the cynical take of just like, is the competitive market and people are making a lot of money. We see like in the MEV space, there's also like the optics case, right? If you run a centralized sequencer, that is like equivalent to like call it like a private mempool or whatever, where you can say, okay, no one's getting arbed and we're getting collect all the revenue here. That's just very good from like a market perspective, in that you get to say we're doing good by our users and we get more money. That allows us to be more competitive. So I think there's a lot of things. At Astria, the kind of position we're taking is saying we're going to go do the decentralization thing first, and ideally there is like a market demand to kind of like buy that versus build, such that you can say like you don't, each rollup does not need to go invest their own effort if it's not a priority for them, but if that is a functionality they want, they can go kind of inherit that or buy that from someone else. That's kind of the theory here, I think.
Okay, that makes a lot of sense. We have apparently 3 minutes, so if there's anyone with a burning question in the audience, now is your time to shine. Patrick.
Vitalik talked about this at the DM for panel a couple weeks ago in Denver. Is part of the issue that in the market strategies, many teams are chasing total value locked as somewhat of a vanity metric. Is there a better KPI that we could use to evaluate success of a rollout project?
Yeah, I think it should be here in 5-10 years, and so you have to design it to do that. That's kind of our take. And yeah, you have to design decentralized, I think, to do that. Ethereum talks about being World War III proof. I think it's maybe an extreme take, but I think you need to start thinking about that, because if you're just going for TVL, then I agree, you probably won't survive some of the bumps in the road.
I am by no means like a DeFi expert or like a finance expert, especially relative to this room. But one of the things kind of my team was looking at was like, if you look at like Jane Street as an example of like a very centralized market, right? Like, the numbers are going to be off, but it was something like they had like $15 billion of like, call it like TVL or like, capital assets, and they did like $1.5 trillion of volume. So there's something interesting in like the ratio of like how much volume of trading you can do in a year relative to how much assets you have. I don't know what the Ethereum ratio is going to be, but my assumption is bad, like certainly not like 4 orders of magnitude. And even if we look at like, Solana, which makes like different trade-offs, right? Solana has like, as a community, they would argue against like TVL being used as like a metric. They claim it's a vanity metric, and they do have like higher total volume of like trading happening relative to like a smaller amount of like TVL. So I think there's thoughts like that, but fundamentally, I guess there's also going to be just like subjective like user experience concerns, right? Like where do the users actually go? Where do they think they're getting, the lowest slippage, the fastest kind of execution, the highest quality execution, whatever.
I think we learned a lot after we launched our mainnet about, firstly, I don't care about TVL before we launched, because it's a vanity metric, and I think TVL always flow to the chain has highest yield. And the chain has highest yield is like the chain that hadn't launched a token, because you can always use your token to kind of pump your yield, and then liquidity flow from one place to the other, and then but the reality is that people still care about this matrix a lot, and then because once you get high enough TVL, and then you get market attention, and then developer will come to your chain because they want to access to this liquidity. I think what's really funny about layer 2 is that people, at least I went to Ethereum community because I think research, vibe, decentralization, all those stuff, layer 2 inherits security, but actually another narrative kind of become Ethereum win because Ethereum has larger liquidity, and layer 2 narrative is only a way to access liquidity easily. And then imagine Solana has a similar level of liquidity. Does Solana really win? At least I don't think so. But the market, people are easily get FOMO, and then easily to get attracted, and then want to build at least in this kind of easy to FOMO market. So I still think it's an important matrix, but I think a more healthy matrix might be if we really bring 1 million users into Ethereum ecosystem, and everyone deposit $1,000 USD in your ecosystem. That's a more healthy TVL instead of one big whale deposit 1 billion for really high staking reward or something like that. So I think a more healthy analysis into your LP and your how your TVL is composed is very important. But short term, the best thing you can get is a high TVL number as a marketing signal, and then long term build and then stay relevant for the next 5 to 10 years.
Okay, cool. I think the question was directed at you, Vitalik, so do you want the last word, and then we can...
What's the question? Oh, sorry, that's the same.
Yeah.
I mean, ideally we'd it's well, I think in order to get any other metric working in a way that's not trivial to break, we need working proof of personhood protocols. And we need them to not just be working, but actually widely adopted. So that's one of those things that I've definitely been continually excited about.
Okay, awesome. I think that's it. Thanks, everyone.
Thanks, everyone. Lunch will be on the 4th floor. Thanks.
Okay, am I on? Testing, testing. Yes, I'm on. Perfect. Hi, everyone. So today I'm going to talk about this idea I call the United Chains of Ethereum, this vision whereby the different L2s and rollups can share a sequencer and be much closer together than they are today relative to the silos that we currently have with Ethereum rollups. And so in some sense, this is all about fixing Ethereum fragmentation. So the talk will be in three parts. One, synchronous composability and all the advantages that come with that. Two, decentralized pre-confirmations. We're going to have decentralized sequencers. How do we do pre-confirmations in that context? And then three, this slightly more opinionated idea that maybe the L1 proposers themselves can be doing the sequencing, and that's called base sequencing. So one of the key ingredients to get synchronous composability is this idea of shared sequencing. So different execution environment, different so-called domains can share a sequencer, and then that one entity has monopoly power, at least within their slot, to simultaneously sequence multiple rollups or L2s. And just so that we're clear on definitions, there's different types of synchronicity. So one thing that you could ask, for example, this shared sequencer is synchronous inclusion, to make sure that two transactions, one on rollup A and one on rollup B, both get included on-chain at the same time. You could ask for something stronger, which is synchronous execution, where basically you have guarantees on state roots, not just on inclusion. And then you have like the strongest form of synchronicity, which I call synchronous composability, where you also have assets that can clear immediately in and out. And so basically these are like guarantees that the shared sequencer can give on different data structures, either on the transaction route, which merkleizes the transactions, the state route, or the withdrawals route, which captures assets that go out of rollups and L2s. Now, let's imagine that rollups A, B, and C have opted into a shared sequencer. And imagine that the passage of time is from the top to the bottom. Now, like the simplest thing you could do is you could have each rollup, in some sense, be its own silo and be executed perfectly in parallel and have like maximum efficiency. But another thing you can do with shared sequencing is you can have the shared sequencer do some magic across the rollups. So for example, at the top of the block here, the shared sequencer could choose to do some sort of like fancy arbitrage, for example, which synchronously happens. But you can also like throughout the block have opportunities for synchronicity. And in some sense, what shared sequencing is all about is exposing to the market this additional value that synchronicity can provide, synchronous composability, and then ultimately providing more value to users and to rollups. So if we zoom in to this little portion here between the yellow and green rollups, what is really happening? So you have this synchronous so-called super transaction, which has multiple constituent subtransactions. So here we'll have three subtransactions, a yellow one, a green one, and then another yellow one. And really one of the important things here is that there's asset transfers that are happening in real time. And so you have this idea of real-time settlement where the rollups are immediately clearing their assets and are capable of sending them to other rollups. And you can have these subtransactions kind of depend on what's happening in the other subtransactions. So for example, you could have this final yellow call depend on the result of the green call, and that might introduce some amount of locking. So this is why basically, the way I depicted it is that only one subtransaction is executing at any given point in time. And so that kind of has a cost, right? This virtual locking that the shared sequencer can provide means that the user is going to have to pay for gas simultaneously on rollup A and rollup B, even though at any given point in time, maybe only one single rollup is active and executing. Now, one of the things that's kind of important here is this idea of proving latency, because ultimately, settlement latency depends on how fast you can prove things. And so imagine that we have synchronous composition at the top of the block here. Well, that's actually pretty good because we have a whole 11 seconds, if the slot time is 12 seconds, to do the proving and to include that proof towards the end of the block. But things can become really tricky if you want to provide synchronous composability at the very end of the slot. You might only have a few milliseconds. And this is why like the really fast real-time proving is a requirement to unlock full synchronous composability, like across the full block. Now, I'm very optimistic about low latency proving. Like there's all these really cool ideas around folding, which are basically very fancy, very efficient recursive proofs. There's an idea called Nova that pioneered a whole amount of literature. And we're also starting to see SNOC proving ASICs. So we have the very first proving ASIC from Axial. I'm going to be talking about it at the ZK Summit. It's live, it's real, they're building test boards, and it provides a huge amount of cost reduction, of opportunity for parallelism and power reduction. We're talking orders of magnitude improvements with these chips. Now, I guess an alternative to real-time proving, because real-time proving will still take a few months, is liquidity providing. So you can kind of simulate this idea of synchronous composability with liquidity providers. And so here in this example, even though like these yellow dashed arrows and the green dashed arrows might take time, it might take, let's say, 7 days for settlement and asset clearing to happen, you can have these liquidity providers basically provide immediate liquidity on both sides. But that comes with downsides. It comes with fees. There's like capital inefficiencies. It comes with intermediation and complexity. And it also comes with liquidity constraints, because if you want to do NFTs, for example, if it's a one-of-one NFT, then that's very difficult to provide liquidity for. And if you want to operate in size, for example, if you want $100 million of liquidity, then the liquidity provider might not have that kind of liquidity to provide in the first place. So that was part one. Any burning questions so far? I mean, the idea here is that, again, like with this very basic and simple idea, which is shared sequencing, we can have these currently siloed execution environments kind of go back to what we have at layer one. Like at layer one, you can have two contracts which can synchronously compose with each other. You can have, for example, Aave synchronously compose with Uniswap and like execute a liquidation, which is something that we don't have at the rollup layer today. So we don't have the equivalent of 1inch or matcha. Like you can't go to a website and say, give me the best liquidity across all the rollups, just because you're dealing with all these separate sequencers, and it becomes extremely massive. Okay, part two, which in some sense is orthogonal to shared sequencing, is the very simple question of, okay, we have pre-confirmations with centralized sequencers. That's super easy. They work really well. Like, how do we do pre-confirmations in a decentralized setting? And it turns out the answer is also surprisingly easy. So basically what you can do is you can have the user determine who is going to be the sequencer in the next slot. So here there's this notion of a look ahead. You can see who the next proposers will be, who the next sequencers will be. And the user very simply makes a request to the next pre-confirmer and then gets a promise from that pre-confirmer. And again, this is a promise on execution, not just inclusion. It could be even a promise on asset clearing, like the strongest kind of promise. And really the only thing that changes is that at every slot there's a different sequencer. So what is a decentralized sequencer? It's just a fancy centralized sequencer where the centralized sequencer changes at every single slot. And one, I guess, difference is how we do slashing. So with a centralized sequencer, you're leveraging reputational collateral. There's Arbitrum's or optimism's reputation, which is worth probably billions of dollars, and they're not going to go ahead and screw users and renege on their pre-confirmations. But in a decentralized setting where anyone could be the next sequencer, you need a different type of collateral. And here you just use financial collateral. And there's two types of faults that are slashable. There's safety faults and liveness faults. Safety faults is when I gave you a pre-confirmation that such and such transaction will execute in such and such way, and it turned out to not execute in that way. So that's a very clear safety fault which should never happen if the sequencer is honest. And then you also have liveness faults, which are a bit of an edge case, a bit more subtle, where the sequencer is really trying to be honest, but they were just offline at that point in time. And that's something you also need to penalize for, because they were not able to honor their pre-confirmation just because they went offline, and they were not able to produce a block. Okay. Now, I guess one question is how do we do incentivized block building, and how do we modify mev.boost to take into account these pre-confirmations? So right now, the pipeline for mev.boost is like unidirectional. You have the builders that push blocks to relays, that push blocks to proposers. And really, the main thing that you need to do is basically provide information in the other direction. So you have the users, which are now this new entity in the block production pipeline, that have pre-confirmations with the proposer or pre-confirmer or sequencer, however you want to call it. And then these pre-confirmations can flow upstream to the relays and ultimately to the builders. And now the builders are tasked to build blocks that respect the pre-confirmations. So really, what is this? It's like a fancy inclusion list in some sense, or pre-confirmation list that constrains the block builders in what they can do. And like one important detail here, I guess, is that the relays could enforce that these constraints are respected, but nowadays a lot of the relays, at least the competitive ones, are optimistic relays where they don't check in real time these constraints. And so what you'd need is the builder to be collateralized to the same extent that the proposer is, in case the builder doesn't honor the pre-confirmations that the proposer did, so that the proposer can be compensated by the builder if a bad block was built. Okay, so just as a quick summary slide here, in some sense, centralized pre-confirmations and decentralized pre-confirmations are the same thing, but there's just a few things that change. One is that the sequencer, instead of being fixed, is now rotating. So at every single slot, you have a different sequencer. That's easy. The slashing is also a little different. You're now using financial collateral as opposed to reputational collateral. Fine. And then another final thing which is interesting is how MEV is done. So today with decentralized sequencers, you can kind of think as the centralized sequencer providing a makeshift, super cheap encrypted mempool. Like as a user, I send my transaction end-to-end encrypted to the sequencer. No one can see it. I can't get sandwiched, for example, and so I get this MEV protection. And oftentimes there's a policy which is that we're not going to screw our users, we're not going to sandwich them. Another policy might be like some sort of first come, first serve. But these policy-based sequencing, I think, is going to be much harder in a decentralized setting. And so you have to move to something which is a bit more market-based, something like PBS, for example. Okay. So we've gone through these two parts. Like part one, there's potentially a lot of power to Ethereum reuniting and fixing its fragmentation with shared sequencing. And if you're given a decentralized sequencer, actually providing pre-confirmations is fairly easy. And now, what if we take an existing shared sequencer, which we kind of all in our subconscious know exists? Can we kind of compile it in some sense to modify it to give pre-confirmations for that and kind of make it a really great sequencer? And this is what base sequencing is all about. So in some sense, you can think of Ethereum as being like this service that provides multiple modules. So there's the settlement module, which all the L2s will use. There's the data availability module, which all the rollups will use. And then there's this third module, which in some sense is new because people have only realized recently that they can go and leverage it, but it's been there all along, is the sequencing module. So you can use the L1 proposers as sequencers for your L2. And just like call data was this somewhat hidden thing that people only realized could be reused as data availability for L2s, L1 sequencing was also this hidden thing that existed from Genesis. Now, why would you want to use Ethereum sequencing? Well, it's for all the same reasons as to why you'd want to use Ethereum settlement or Ethereum data availability. You inherit the security of L1. You also inherit a lot of the credible neutrality that comes with it. And you also inherit composability. Now, how does it work exactly? Like, who are the sequencers in the context of base sequencing? So in the specific design that I'm proposing here, we basically have a subset of the L1 proposers who opt in to becoming sequencers. And the reason why it has to be a subset is because they have to come forward with collateral, right? They don't have reputation, so they come forward with this financial collateral. So the green ones have put forward collateral, and they're a subset of the proposers in the look-ahead. And we're going to call those sequencers. And everyone else who's not a sequencer, who didn't put forward any collateral, we're going to call them includers. And basically, the idea here is, in order to provide pre-confirmations as a service by the L1 proposers, we're just going to do exactly what we talked about in the previous section. We're going to have the user communicate with the next sequencer, which happens to be this green one, which is collateralized. A request will be asked from the user. A promise will be given by the pre-confirmer. And one of the things that we can also do is basically have the includers be given the right to include and settle pre-confirmed transactions. So the includers don't have the right to order transactions, but if they have an ordering which is given to them from the next sequencer, well, they can go ahead and include that and settle it. And so basically, you have best-in-class user experience. On the one hand, you have the 100 millisecond latency of sending a request, getting a pre-confirmation really, really fast. And you also have the next slot settlement because this includer can immediately settle in their slot whatever was sequenced by this pre-confirmer. And again, there's a very simple diagram here where we modify mev boost so that the blocks take into account the pre-confirmations that were given by the proposer. Now, one of the questions you may ask is, if I want to provide pre-confirmations, shouldn't I be very, very sophisticated? And the answer is yes. You need to have at least enough bandwidth to support user requests from all the rollups. So that's potentially tens of thousands, hundreds of thousands of transactions per second. You need to be running full nodes for all these rollups. It could be hundreds of full nodes. And you need to do all sorts of fancy things like pricing the pre-confirmation tips. You need to have high uptime, low latency. And so really, it's fair to ask, do we really want L1 proposers that are running on a Raspberry Pi to be pre-confirmers? And the answer is no. And the good news is that we have this idea called execution tickets, where as a validator that's running on a Raspberry Pi, I don't have to do block proposing. Instead, my main task is attesting. I also have to build inclusion lists for censorship resistance, but I don't have to do the sophisticated sequencing. Now, unfortunately, execution tickets are a hard fork in the future, potentially, and they would take several years to come out. And so what can we do in the short term? Well, in the short term, what we can do is basically introduce a trusted entity here, a semi-trusted entity like the relays, which we could call the gateway. So this would be a pre-confirmation gateway. and the proposer would delegate their sequencing rights to the gateway. So now the gateway can provide these pre-confirmations on behalf of the proposer. And they would be collateralized in case they cause a safety fault. Now, this whole idea of base sequencing, is relatively recent, and a lot of the rollups had their own plans to do different things. But in the last few weeks and months, there's been more and more interest from the ecosystem. So we've had Tyco that's been a base rollup for a very, very long time. A few days ago, I learned about this new rollup, which is also going to be based. And then also a few days ago, one of the founders of the very top rollups on production today said that they're going to be pushing for them to become a base rollup. And then there's all sorts of infrastructure providers that are also starting to build infrastructure dedicated to base rollups. There's Presso, Sorella, Chainbound. And there's other entities, for example, LimeChain and Nethermind that are doing like research and consultancy. So really the ecosystem is very nascent, but there's more and more momentum behind this idea of using the L1 proposers for maximum security, maximum credible neutrality, but also being able to leverage the TVL of the L1. Because if you zoom out and you look, okay, where's the TVL? Sure, there's like Arbitrum has 10 billion or 15 billion. But then you have the L1, which has half a trillion or 600 billion. So it's orders of magnitude more TVL at layer 1. And when you have this base sequencing, basically the rollups can synchronously compose with the L1. And so you get access to all these pools of liquidity. You get best-in-class user experience, because now you can have complex applications that live in multiple places, including some on DL1. And yeah, that's basically the pitch for base sequencing. OK, last slide. So right now, we're in this place where we have centralized sequencers. And I think we all agree that we want to move to decentralized sequencing. And there's going to be quite a big lift, in my opinion, to get from decentralized to centralized. Like, we need to think of all sorts of things like MEV protection, PBS, intense OFAs, data compression, and whatnot. So I think that's where 80% of the problems need to be solved. And then within decentralized sequencing, there's a subset of problems that are specific to shared sequencing. And that's where maybe, let's say, 15% of the problems need to be solved. So we need to solve, for example, MEV sharing. As a rollup, I opt into a shared sequencer. In doing so, by default, I'm giving my MEV to that shared sequencer. Like, can we basically identify where the MEV came from and kick it back, rebate it to the rollups that generated that MEV? There's also other problems that we can think about, like deposit sharing and execution sharing. But generally speaking, there's fewer problems to be solved than just decentralized sequencing alone. And then there's this kind of final subset of even more specialized sequencers, which are the base sequencers, where in some sense, there's very little to solve. Right? It's just being opinionated about saying, OK, the pre-confirmers are going to be the L1 proposers. But everything else, all the other technical problems around pre-confirmations and shared sequencing, that can be solved using off-the-shelf technology. And that's it. Thank you.
Questions in the side chat, please. I know there's so many questions you have, so please check on eToolable.tv and. We just have all of the slides for the afternoon, most of them are updated on the agenda page, mev.market. So you can access it and review it.
Can I do the proposed review?
Oh,
By any chance? Or the
go ahead.
present review? I don't know if that'll work.
I'm not sure.
Can we do?
Oh, present. Oh, okay.
Does that work? Oh, no, it does.
Does it work? No.
No, it doesn't.
I'm sorry.
All right, that's fine. I'll do the other one. Okay. Hi, everybody. I'm going to speak today on execution tickets and MEV distribution in shared and based sequencing. So this is what Justin was referencing at the end of his talk, is how the big question of this talk will be, shared sequencing is great, but rollups aren't going to use it if it means that they lose all of their MEV revenue. So I'm the lead researcher, and I'm also an engineer at Espresso. This Ben Fish was originally supposed to give this talk, but he had some issues with his plane flight, so I'm filling in. So the general structure of this talk is we're going to go over what's isolated sequencing, what's shared sequencing, and then how can we build a mechanism that redistributes MEV in shared sequencers. Okay, so let's start with what sequencing is. So we have rollups. They horizontally scale Ethereum, like we know, and they all settle to the layer 1, either using fraud proofs or ZK proofs. There's a lot of advantages to this. One of them is that they can shard computation across a lot of different rollups. This includes, having different VMs that are maybe niche and are built for specific use cases. And they're also really good because they also give heterogeneity. So we can leverage powerful nodes that can produce ZK proofs that can be verified by very weak nodes. So this is all really wonderful. But rollups today run isolated sequencers. And so isolated sequencers are basically each rollup has a server, usually like a centralized server, but it could be decentralized. And each of these servers, a user submits their transactions to them. Each of these servers does not know about the sequence of transactions submitted to other rollups. And so the drawback of this is obviously interoperability. So if you have these isolated sequencers, interoperability is difficult because if you want to interop in a safe way, you need to settle to the L1 and then have another rollup read what you settled to the L1 and then have that first rollup read again what the second rollup settled to the L1. This is all quite slow. The other drawback is that you can't actually have atomic execution. So atomic execution being that a set of transactions will either all execute or all fail. You can't do this unless you have a shared sequencer. So, well, what's the job of the sequencer to begin with? So we have users, they submit their transactions to this server. The server puts them all in a total order, puts them into a block, and it posts this to the L1. But another really powerful thing that the sequencers can do is provide pre-confirmations. So pre-confirmations are very powerful for a lot of ways. Pre-confirmations could be an entire talk just by themselves. But pre-confirmations, the biggest thing that they provide is this kind of fast finality. If you trust that the sequencer is honest, then you can trust that your transaction is final when it's pre-confirmed and you don't have to wait for L1 settlement. And then finally, the third thing that sequencers can do is they can optimize for data compression. So instead of having to post every single rollup block to the L1, which can be costly, they can post a chunk of blocks every few minutes, for example, like Arbitrum posts every few minutes. Okay, so you say, well, a natural extension of a sequencer is that they can run an auction. And this is something that we already see in Ethereum today. This is very similar to what PBS is in Ethereum today. It's an auction to build the most profitable block. Sequencers can do this too. We don't see sequencers do this right now, but it's more than possible that they could. Okay, so that was an isolated sequencer. Now let's talk about what a shared sequencer is, aka what a based rollup is. Okay, so in this case, the users are actually sending their transactions to the L1. The L1 is a shared sequencer, and then the rollups can execute their rollup from the data on the L1. But note that the users are not sending their transactions to specific rollups, they're sending them to the L1. And this is really great, as Justin mentioned in the last talk, because we have the security and the decentralization and the credible neutrality of the L1. This is all really good. And you also get improved interoperability. Now there's two parts to the interoperability that you get. So one is you get really great interoperability between all of your L2s. You can now do these atomic transactions. But the even better, well, maybe not even better, but also the really important part is that you get atomic transactions between the L1 as well. So what was on the previous slide is kind of like vanilla-based sequencing. And on this slide, I'm going to offer maybe another version of base sequencing that's a little bit different, but is also a shared sequencer. So in this case, we have this layer 1.5 that sits between the L1 and the L2s. So in this case, the users submit their transactions to this layer 1.5 sequencer. The sequencer does ordering, and it also provides data availability on all of the transactions. The rollups read the data from the layer 1.5, they execute, and then they post their state transitions and proofs to Ethereum, just like normal. And so you may be asking, well, like, what's the point of adding this extra layer 1.5 in there? And I'll discuss that in a few slides. OK, so similar, though, to what I was saying earlier, how a natural development of, isolated sequencing or anything is that you naturally are going to run an auction to see who can propose the most valuable block. And so that's going to happen in shared sequencing as well. So a few key points about this auction. So auctions will basically auction who has the right to update all of the rollups or a subset of rollups at once. We'll kind of get into the details of this a little bit later. And that another good thing is that the proposers of this auction can offer atomicity over transactions. So they can offer atomic execution. They can also fulfill user intents via pre-confirmations. The point here is that these auctions and the proposers of these auctions can be very flexible. So as a result of this auction, you will end up having like a big super block that contains all of the individual L2 blocks. They also will contain any cross rollup transactions, and this can be settled to the L1. So again, this is very similar to the PBS paradigm in Ethereum today. OK, so let's look at shared versus isolated auctions. Well, you might ask, OK, shared auctions seem pretty good, but there's a few open questions about them. One is, how do you share the revenue? In this case, where you have the shared sequencer, they're deciding the ordering of the transactions, and that means that they get to extract all of the MEV. So maybe that's not so good. The other thing is, well, if you are going to share the MEV allocation among rollups, how do you do it? How do you decide which rollup gets which percentage of the revenue? And then finally, is there a stable mechanism through which rollups can dynamically participate? So perhaps a rollup wants to participate in shared sequencing only if it meets a certain threshold of value for them, but they don't want to otherwise. Is there some mechanism we can develop that rollups have full sovereignty and customization over whether or not they participate in this? All right, so there's many analogies for kind of this problem of MEV or in general profit reallocation. So a few analogies are bands playing at a music festival. The festival sells tickets to the entire festival, but obviously some bands are going to bring in more attendees than others. So how do you decide which bands get which portion of the revenue? Another analogy would be a travel agency selling tickets. If the travel agency sells tickets from 2 different airlines, how do you decide which airline gets which part of the revenue? So this is just an open problem in many spaces. Another example might be, to kind of make this point, is a shoe auction. So if you have a company that manufactures left shoes and then a company that manufactures right shoes, to us, it seems intuitive that you would sell the shoes together. Like, why would you not do that? But if we're looking at this from just a pure kind of theoretical perspective, you need to prove to both company and A that they're actually better off selling their shoes together than they are separately. So how can you do that? And the goal is that they should always be better off. Otherwise, they don't want to participate in this shared auction. OK, so that's kind of how we can frame this problem of how do we distribute MEV. All right, so now actually let's try to solve this. I'm going to offer a straw man solution first. OK, so we have each individual rollup, A, B, C, D, and E. And then we have a bundle that contains all of these rollups. So a first attempt might be that bidders who build the blocks, they can bid on the bundle, or they can bid on the individual rollups, or they could bid on both. Each rollup will have some bid associated with it. And basically, you either decide that you're going to bundle all of the rollups together, or you're going to sequence them separately. And so how do you decide this? You say, okay, well, if the sum of all of the individual bids for the rollups is less than the sum or less than the bid for the entire bundle, then you say, okay, I'm going to sequence the bundle. If the individual rollups all add up to a higher amount than the bid for the bundle, you say, okay, we're going to sequence them all separately. And then when you give your revenue back, you say, okay, well, each rollup receives like their proportion of the bid. So if you had the bundle and you had a bunch of bids, say the bundle bid was 20, and then each rollup had these individual bids, you would reallocate the revenue proportional to the amount that was bid for them. This way, hopefully, each rollup is getting back revenue proportional to the amount of value that they're adding to the shared sequencing ecosystem. But you might think this has a little bit of a problem, and the problem is shill bidding. So the example is, well, let's say rollup A and B artificially bid for a really high price. Say, like in this example, they bid for like $10, even though they're only worth like $3. Well, what can happen is two cases. So one, this rollup artificially bids higher, and then if the bundle wins, they get more of the MEV redistribution than they really should, because their value is actually 3, but now they're getting like 10 back. So this is not good. You can also have the case where, let's say you have rollups A and B who are both shill bidding and are both bidding higher than they're actually worth. Well, then the bundle might not actually win the auction. And then you get all of the rollup blocks are sequenced individually, and you lose your shared sequencing, and basically your rollup A and B can ruin it for everybody else. So this isn't a very good solution. And the issue is that shill bidding can prevent the efficient allocation of the MEV redistribution. Okay, so, well, let's try to fix this. So if A and B are going to shill bid and overbid their values, well, maybe we just allow proposers to bid on only subsets of rollups. So instead of a proposer having to bid on a bundle of all of the rollups, they can say, hey, I'm just going to bid on the bundle of C, D, and E, because I believe that that bundle is like matches the value. But they think, let's say they think rollup A and B, their bids are too high, they can exclude them from the bundle. So now proposers can bid on arbitrary bundles. This can be any combination of rollups. Shill bidders, if they shill bid too high, risk being excluded from the winning bundle, so that's not good for them. And then optionally, you could burn part of the bid to disincentivize shill bidding. So this would be an example. Instead of sequencing all of the transactions, you would just sequence together, say, rollups B, C, and D. All right, so you say, well, okay, shill bidding is a problem, but I think shill bidding actually represents something that rollups want, which is a reserve price. So why might a rollup want to shill bid? One, yes, it could be just to increase their revenue, but it could also be that they have a minimum price that they want to get before allowing someone else to sequence for them. So the idea is that rollups can set a reserve price. So basically this is that each rollup has this reserve price, and if no one bids higher than that reserve price, then the rollup sequences for themselves individually. But if someone does bid higher than the reserve price, then the person who bid higher will win, and they get to sequence for that rollup. And a very interesting thing about this is that the reserve price can be dynamically adjusted. So you can think of a few extremes. You could think of a rollup who wants to participate in a shared sequencer, but maybe is in like a transitionary period. They could set their reserve price very, very high at first to maybe caution or protect themselves from something, and then lower it as time goes on. Reserve prices could be adjusted based on like some oracle of price, et cetera. So these have a lot of flexibility, and they're pretty powerful. And the point here at the bottom is what I call ad hoc shared sequencing. So ad hoc shared sequencing is basically a marketplace for rollups to sell the block proposal rights by the slot. So this means that a rollup can decide to participate in this shared sequencing market for each individual slot. They can decide to sequence themselves for slot 1 and then do a shared sequencer for slot 2, et cetera. But you might say, okay, there's a couple of caveats. You say, well, how do you actually implement this? So if you'll notice a couple of slides ago, I said that proposers can bid on any combination of bundles. Well, that might work for like when you have like 5 rollups, but when you start to get to 100 or 1,000, you have this combinatorial problem where you have so many combinations, and how does this work? How are you going to possibly find the most optimal allocation for all of the rollups? So the solution is that you can just find a good allocation, something that's just good enough, e.g. one bundle plus a few individual rollups. But you run this auction well enough in advance that you give users time to find a better one. So for example, if whoever is running the auction finds a certain solution, and then a few minutes later, someone else says, actually, here's a more optimal solution that produces even higher revenue for all of the rollups, you can then switch to that other solution. But an important requirement of that is that you need to run the auction well enough in advance to give people time to do this, and then the bids also need to be public. But if these 2 requirements are met, then it's very easy to check if a certain allocation is more profitable than a previous allocation. So, okay, that's problem 1, and there's a solution to it. But you might say, okay, well, if the auction has to be run so far ahead of time, well, bidders don't know the value of the blocks. So this is where it's very different than like proposer-builder separation today, where blocks are produced, just in time, only milliseconds before they need to be sent. You say, well, bidders don't know the value of the block, so they have to bid on the expected value of the block. But the expected value of the block probably isn't going to change. So MEV itself can be very spiky, but in the expected long run, you don't know which slots the MEV is going to spike or not. So you have to bid on this kind of flat expected value. Well, if the expected value is all the same, then the bids are always going to be the same, and the same people are always going to win the auction. So have we really, done much here, because we're just going to get the same builders over and over again. The solution, we can run a lottery instead of an auction. So let's dive into what that looks like. Okay, so we will sell lottery tickets. We'll start with some starting price of the lottery tickets. And basically, so we'll sell these lottery tickets for some price. There'll be a cap on the number of tickets for each sale, and there'll be initial ticket prices. If all of the tickets were sold for some lottery, then you raise the price in the next round. If there were significantly fewer, then you lower the price. So this way, the price of lottery tickets is dynamically adjusted over time. And then you take all of the bundles that were bid on, and you find some sort of revenue maximizing combination of the bundles. If there are ticket purchasers who have bid on bundles that don't make it into the final bundle, like let's say I bid on to build for rollup A and B, but actually a bundle for A, B, and C won, well then I'll be refunded since I bid on rollup or the bundle A and B. And then finally, you randomly pick tickets from each of the winning bundles. So for example, if you have a bundle of rollups A, B, and C, and the bids for that bundle were like $8, $9, and $10, you would randomly pick from the bidders of 8, 9, and 10 to see who actually gets the rights. And this can also be weighted on the bid. So for example, if someone bid really low, only $1, they would have a very low chance of winning this randomized lottery. All right, so finally, we're just wrapping up. The final portion of this is we say, okay, so we have this mechanism where we can do MEV sharing. We run this auction, or this actual lottery. It's based on these combinatorial bundles, and in this way, these bundles are capturing the actual value that rollups have, and we're returning this value back to the rollups. But how does this actually integrate into consensus? So a few things. One is proposer-attester separation, so execution tickets. This works very well with execution tickets because the proposers are not randomly elected, but they're people who have to buy these lottery tickets. And so parties bid for the right to become a proposer, just like the parties are bidding for all of these different bundles. So this is how we implement this lottery into consensus, like proposer selection. What about censorship resistance? So a really good thing about allowing proposers to bid on multiple bundles and not have to bid on the entire bundle of all rollups is that you get some better censorship resistance. So for example, some rollups, maybe privacy rollups or other rollups that might have, say, OFAC sanctioned transactions on them, a lot of proposers might not want to sequence for them. because they don't want to deal with that risk. So if you allow multiple proposers to propose at once, you can have proposers that say, hey, I don't want to touch this privacy rollup, and they won't bid for it. But you can have other proposers that will bid for it who don't mind these sanctions. So this is a really important thing for censorship resistance, is that you don't have just one party sequencing for everybody, because that one party might not align with the incentives for all of those rollups. Another example might be you have a rollup that wants to do first come, first serve ordering. Well, maybe some proposers, they don't want to deal with that because that's not revenue maximizing for them. But a proposer that values first come, first serve ordering will agree to sequence for them. And then finally, an open question is, well, how do you actually support all of these simultaneous proposers inside consensus? So this is personally something that I am very actively working on right now. The idea is that, okay, you can naively basically just run, so if you have n proposers, you could just run n versions of consensus all at once. That would be a naive way to do it. But there's probably a lot more efficient ways, for example, aggregating things or using some sort of a zero knowledge proof to prove that a proposer's block is valid, et cetera. But this is a pretty open question. And then finally, just some final thoughts are that how should we actually redistribute the revenue proportions to different rollups? This is an open question. You could also you can imagine a future where maybe you have tight-knit communities like superchains or hyperchains, and they all participate as a group. That's very possible within this framework. You could say, okay, well, is this compatible with based sequencing without making changes to the Ethereum L1? So this goes back to several slides ago when I said you have this layer 1.5. And I'm like, well, why would you have this layer 1.5? This is one of the big reasons, is that you can actually do based sequencing with that layer 1.5 without having to make core changes to Ethereum. So, and to be fair, that is what Espresso is doing. And then finally, how often should you run the lottery? Obviously, the lottery can be very complex. You're trying to optimize for this combinatorial auction. So the more you run it, the more complexity it has, but also, perhaps the better reflection of price that you get. So anyway, that is all I have. I guess a summary, a takeaway of this is that you can redistribute revenue among rollups using a mechanism where you allow multiple proposers at once. So instead of having one single proposer for all of the rollups, you allow different people to bid on either individual rollups or bundles of those rollups. You choose the most optimal allocation based on revenue, and then you have multiple proposers. And this has a lot of benefits like censorship resistance, better, more proportional allocation of revenue, et cetera. So anyway, thank you very much.
Can people hear me? Oh, sorry, maybe without the microphone. Okay, it's just change the slides with the mouse pad, is it? Yeah, okay, sure, we'll try it. Okay, cool. So my name is Connor, and I'm going to give a a very high-level talk on L2 proposer and builder election mechanisms. I thought this was going to be less of a technical audience, so I thought it was good. I think I was promised to add 5 people. I don't know, I haven't seen anybody yet, but there's probably some people out there. Anyway, hopefully it's enjoyable for everyone. Okay, so the talk is proposer and builder election mechanisms. So what is an election mechanism? Well, the basic election mechanism on layer 1, or the basic mechanisms we've seen, the first one we've seen was proof of work, where you solve a puzzle, and if you solve the puzzle, you get the right to build a block. Since then, we've seen other things like proof of stake. So the proposer is typically elected proportional to the amount of stake that you have. Okay, so again, on this proof of stake model, where first there's some election based on the amount of stake you have, we've actually seen a second election mechanism happen, where the proposers are actually offloading the right to build a block to somebody else. So this has been sort of, because it's become famous through MEV Boost, and in MEV Boost you have this concept of builders communicating bids to relays, and the relays are trusted to ensure that the blocks are valid. Then the validators will query all the relays and then choose the highest value bid that they see, and the relay will send them the block. So this process works because both the builder and the validator trust the relay. So we're looking at this sort of transition to L2s, we're going to have to maybe address the trustedness, and adapting something like MEV Boost also involves some trust, so we might not be able to use it directly. But what can block builder elections unlock? So the first thing that we need from a block builder election or a proposer election is Sybil resistant mechanism, right? So that was what proof of work did for us, and proof of stake does a similar job. The next thing we have is validator-builder separation. So with a builder market, we can actually allow the validators to become these small nodes, as was discussed earlier on, and offload this builder work that's sort of computationally intensive. The next step is to actually incentivize builder innovation. So again, we saw today that there is some specialized teams emerging as a result of this stuff, whether for good or for bad. These guys are implementing high-tech solutions to this problem. And then the final step, hopefully, I'm not sure if we're there yet, is where with all this innovation happening, we get to a point where the users are actually maximizing their welfare. And is that possible with the current paradigm? Possibly not, but there's a potential that it might allow us to do this. Okay, so the themes of this talk. So after this high-level introduction of election mechanisms and proposer/builder mechanisms, I want to give you a high-level, so the focus is L2s. So I want to impress upon you that the decentralized nature of L2 elections today. I'm going to define some proposer-builder mechanisms that we might be able to, election mechanisms that we might be able to use. I am going to sort of hypothesize about the decentralized L2 elections of tomorrow, and then talk about some solutions that will get us there. Okay, so the state of play currently today. So we have basically all of these top L2s, and they're all using trusted sequencers. The majority of them. We obviously have Tycho that's based, Polygon proof of stake that's permissionless but has other issues. Is it a rollup? Is it an L2? Not necessarily sure. And we have Aztec Fernet. So Aztec is obviously under construction. This Fernet proposal potentially is permissionless, but again, it's a proposal. It hasn't been implemented yet. So we're basically in this trusted environment, and the point of the talk today is to sort of maybe talk through some possibilities to decentralize these trusted players. Okay, so there's lots of different ways that we can define L2 election mechanisms. I spent the last 6 months looking at this, and I came up with something like maybe 200,000 combinations of properties that sort of define what we want from an L2 election mechanism. 3 of the main ones, the most important ones, are who are the candidates, all right? So what sort of people can we choose from? Trusted, permissionless, and based. These are sort of 3 high-level categorizations. When the election happens, is it early or is it just in time? So MEV Boost is a just-in-time auction. A proof-of-stake mechanism is typically early. And there's different combinations of these things that we can use, such as execution tickets, which I'll talk about in a little bit. And where the election happens, so MEV Boost is happening out of the protocol, while in-protocol mechanisms like proof-of-stake or execution tickets, they're happening in protocol. And what are the benefits of each of these? And again, well, I'm going to go through sort of a combination of some of these non-trusted solutions and see which ones make sense and which ones don't. Okay, so just to give, again, we talked about this today a few times. Who are the election candidates? So trusted candidates typically elected by protocol governance and can't be removed without some sort of governance procedure. Permissionless people or permissionless proposers, anybody can seek election. So examples include proof of stake, proof of payment, proof of work, and then based. So in the based model, we've seen a couple of people talk about based already. The L2 proposers are decided by the L1 proposer mechanism. But the base rollups decide that this is absolutely fine, and this is sort of a different one that's not necessarily trusted or permissionless. Okay, so again, I mentioned that I was going to go through 3 different combinations. So we had the type of candidates in the election. Now we have when the election takes place. So in this MEV boost picture we had from earlier on, we had 2 elections taking place. The validator, which was an early election mechanism, and then we had the builder, which was just in time. Just before the block is propagated to the network, the auction is settled between the validator, the relay, and the builder, and the block is propagated. So the builder only finds out that they're going to build the block in the instant before the validator, or the instant after the validator sends a signature to the relay. Okay, so some of the thoughts that have been generated around these early versus just-in-time debate. I found this really cool article online. Kintis wrote this paper, wrote this article. So basically, so just to go through this statement. So early auctions, this is maybe an opinionated piece as opposed to something that was derived, like for sort of with strong mathematics. But it's based on a lot of truth. So early auctions are likely to be won by a very small set of parties who find themselves in a position of a monopolist capable of extracting rents. So once you know that you win, you can then possibly leverage that position to extract rents. 2 of the main benefits of early auctions appear to be pre-confirmations and reward smoothing. So we've seen a lot of people talking about pre-confirmations today, a lot of hype there. But again, this is sort of one of the 2 main benefits that we see. It is not clear how much more valuable these benefits are in early auctions compared to just-in-time, where those benefits may also be possible. I'm not going to necessarily go into why those may also be possible in early auctions, just-in-time auctions, but we have things like CR lists, inclusion lists, and potentially even forcing execution lists that may force or that may be able to allow the benefits of early auctions to also be applicable to just-in-time. But again, see this article for more information. And then we had this third categorization, which was in protocol versus out of protocol. So out of protocol, the protocol itself assumes that X is going to be building the block, but X actually decides to delegate to Y. In protocol, enforced by the protocol, so the protocol itself actually knows which private key is going to be producing the block, and through this election mechanism, again, the protocol knows who's going to be producing the block. Okay, so just going back, again, maybe I've sort of maybe derailed slightly from where I was planning to go, but just to sort of bring it back to, these are the type of election mechanisms that exist, but we've seen from the previous table that I had that all of these election mechanisms are based on this trusted assumption. So the fact that we have early versus just-in-time, or in protocol versus out of protocol, isn't necessarily important because we have a trusted entity at the center of everything. So we're seeing a lot of L2s talking about decentralizing. So if on this decentralization path, they're going to have to transition into some combination of these other things, and I'm going to talk about those now. So decentralizing the proposer role. So this section is going to go a little bit deeper. Again, I was expecting to I wasn't expecting to go too deep, but still, we're going a little bit deeper here. So we're going to go from the initial layer of builder markets to layer 2. Well, that's what I'm calling it. So some decentralization questions just to warm up before we go into each combination of election that we can run, right? So should an elected L2 proposer outsource block building? So we're seeing in L1 that the elected proposer is outsourcing to the MEV boost market or the PBS market. Should an L2 proposer do the same thing? And another question, can we remove the need for out-of-protocol election mechanisms without trusted third parties? I'm going to sort of maybe propose some solutions to these things, or some pros and cons, and then get sort of maybe into the categorization that I built up earlier. So when I was thinking about whether or not we should run these to get trusted proposers to run these builder markets, Kintis basically sent me this question, and I was like, it's very, very resounding. So why L2 proposers would outsource to a block builder market must be discussed. So a reason for this, or some reasons for this. So the proposer enforced rules can provide equivalent guarantees as the proposer themselves. So we're seeing things like CR lists allowing proposers to potentially exert some influence over the blocks that get built. So in the worst case scenario, a trusted proposer or a proposer that gets elected can basically just dictate to the builder, I have all of these conditions for the blocks. If you don't provide these, if you don't satisfy these conditions, the block is invalid. So the proposer should see this as like a way to like get some value, additional value, than the blocks that they would produce themselves. Potentially, they're getting at least the same revenue that they would if they're building the blocks themselves, almost definitely greater, because they're just accessing a decentralized market of builders. Builder markets typically adapt to meet demands. So we've seen today where the builders that we were talking earlier on, they're going to adapt when they see what demands actually happen, as opposed to trying to predict what's going to happen, as opposed to protocol designers or DAOs, which they have to predict what the community will want beforehand. So it's a different way of approaching problems, and typically, again, there's pros and cons to each, but this is a sort of true generally for these builder type entities. And the meme of like why we want to outsource block building, based on the discussions earlier on, we want to keep the validators small nodes, that the low barrier to entry, and outsource this hard computation to other people or specialized entities. Reasons against this. So adding an extra layer of like protecting the proposer and the block building market introduces complexity. This added complexity introduces costs. So there are upfront costs, but costs all the same. And the meme against this, that's sort of resounding through the L2 DAOs, is outsourced builders equals MEV. Now again, is this a sort of a relevant comment, or is this just sort of like maybe a misunderstanding of what outsourcing block builders, outsourcing building does? It's not necessarily clear, but this is the view that they have, and again, whether it's true or not, we'll see. So the complexity paradox of block building. So this was sort of a nice way of putting it from DMarts, where when considering whether or not you should outsource block building, you're sort of faced with this dilemma as a proposer. Increased complexity, but greater welfare, or less complexity, but less costs. So which one's actually better for the user? It's not necessarily clear, but again, that's up to you. This talk is not necessarily opinionated, but just to give people to sort of generate their own ideas. And again, probably the welfare is better, but again, the cost may be significant, and again, that's up to the actual roll-up themselves. Okay, so I posed two questions earlier on, maybe you don't remember, but the second one was, can we remove these out-of-protocol trusted third-party elections? So the first talks today, if people were here, one of the things that people kept mentioning was the vertical integration, or the verticalization, or something to do with the word vertical. And that basically meant that all of the entities through the MEV supply chain were becoming the same entity, or that was the path that we were on. So trusted out-of-protocol elections, there might be the cause, or there might be the effect of this process. And basically, that's probably a bad thing. And in the TradFi market, bringing it back to the TradFi people that are hopefully are out there, that's equivalent to one-of-one co-location with an exchange, and that's just basically something that we just don't want to be happening. Another reason, so that's sort of motivation for why we want to do this. So what protocols can we use? In-protocol solutions probably need early auctions. So there is actually proposals for just-in-time auctions, for removing the trusted third party, but the solution that we have for this is based around this enshrined PBS concept. And then I just pose this whenever, because I've seen even some of the EF guys questioning the possibility of EPBS, or is EPBS the way forward? Is it going to be the end solution? It's not necessarily clear to me, or possibly them. And then that's sort of the easy way to do this, but it's possible, this last point, where trusted execution environments, Suave, might offer us a workaround that may not actually involve any trusted individuals. But the trusted execution environment themselves is a separate issue. Okay, so right, these were the warm-up questions. Hopefully you're still with me. So let's go back to that sort of the categorizations that I proposed earlier on. So we have the entities, right? So we had trusted, based, permissionless. We're getting rid of the trusted, so we're left with based and permissionless. And when it comes to based, we basically don't have too many options. We either have to choose. So we don't have options in terms of in protocol or out of protocol. It probably has to just be in protocol. Again, there is an out of protocol option there where the proposers are running MEV boost, but let's just go with this one. So when it happens, we have early, and in this early mode, we have two possible solutions. We have execution tickets, which again, Espresso we're talking about earlier on, Ellie, and we have this value capturing base rollup idea, which I wrote an article on this a while ago. Or if we do it just in time, we have this alternative solution, which is called alternate PBS, another article that I wrote. I was really into base rollups for a while, still am. But again, maybe for different reasons to everybody else, but still, I think they're pretty cool. If we go with the permissionless route, we have these other options where so this is the tree, going down the tree. We can either run early or just in time. If we go early, we have in-protocol solutions. We also have out-of-protocol solutions, but they're not so interesting. The in-protocol solutions that we have, execution tickets or proof of stake. So proof of stake is sort of the base case, and it probably isn't the best way to outsource block building if we're trying to sort of maybe outsource, we're trying to outsource the block building to specialized entities if we're bringing these entities back into the system. So execution tickets seem like a way that we can split up the validators and the builders. So that seems to be, again, execution tickets coming up multiple times here. If we go just in time, we can go in protocol, which is enshrined PBS, or we can go out of protocol. And this out of protocol, so this is, again, everything in this tree is removing trusted entities, right? So out of protocol, we can possibly use this TEE or Suave. I didn't want to name drop Suave, but again, it's a very veiled intention. Okay, so the solutions. Maybe just giving you a high-level understanding of the solutions in case you haven't read if you haven't been following my blogs. Okay, so we have execution tickets, which again wasn't my proposal, to propose the whole block. Okay, so this is maybe just two distinctions of execution tickets that I didn't get into. So I mentioned that there was originally 200,000 possible combinations of auctions. One of those other combinations that I didn't get into was whether we auction off the full block or we auction off some of the block. So again, there's a lot of people, or specific people in the industry that are talking about possibly running 2 or n possible slots for n possible sub-blocks for any given slot. But we can go a little bit further than that. We can get a bit more crazy, especially in this early stage. We can talk about auctioning off access to specific smart contracts, specific roll-ups, specific accounts, specific parts of the block. Now, this parts of the block / accounts framework is something related to the state lock auctions in Solana. And it's possibly a way forward that you're not buying execution tickets for the whole slot, you're buying execution tickets that will touch only your own account. And any other account may be invalidated, but you have that unique right. Okay, these are ideas. The enshrined PBS, so an honest majority committee, runs the permissionless auction. So again, if, when, ever, I'm not 100% sure. And then there's some other solutions. Again, these solutions I came up with or in conjunction with the Flashbots and Nethermind team. So alternative PBS for base rollups, where we have this trusted in protocol committee with a permissionless override. So the trustedness is still there, but there's permissionless override, which should keep these people honest. And then we have value capturing base rollups, where we use something related to a harbinger tax, where you're basically stating the value for producing a block, and that can be bought off you, specifically for base rollups, where you can actually lose your right to someone behind you. And this value should technically outsource the outsource building, but is it removing the big nodes from the system? Again, that's a separate issue. And then don't forget your T. I actually removed the T slide because I felt like I was drinking midnight tequila last night, and I decided that it might be a bit too heavy. But the slides are available online, so people can have a look at them in their own time. That's everything.
Hello? When do we actually continue? Huh?
Give it like 4 minutes before, so that we can get the crowd back in.
Yeah.
Because it's been like no break.
Right. Do you have a clicker? No, just with this.
There's supposed to be one. Don't know where it went.
All right. Huh? I'm ready. Yeah, exactly.
I think we could just get.
Huh?
I think we should start, really.
We should start now.
Are you waiting for something, or you got what you need?
I have everything. I'm waiting for Tina to give me a signal, but.
Okay, no, go for it, go for it. We can
All right. Cool. So I'm Christoph, and I present you something on shared sequencing economics. So this is loosely based on some recent FC paper, financial cryptography paper, I had with Akaki from Off-Chain Labs. We want to understand the economics of shared sequencing. So, context. So we have currently, still people come in. All right. We currently have around about 50 rollups on Ethereum. As we're speaking today, I checked on L2 Beats, either live in production or currently sort of to be deployed. And that seems to satisfy sort of the original goal of the rollup-centric roadmap, right? We wanted to scale Ethereum, so which means we wanted to have many rollups in order to scale the throughput of the base layer. But we have then this additional problem of now fragmentation of usage. And in particular, if you're interested in financial applications, you have fragmentation of liquidity across several domains, right? And that's sort of not good. And of course, Vitalik has already written about this in 2021, right, in his endgame post. So there was one particular scenario where you have this different roll-ups, sort of being many roll-ups, and then he had this idea that probably there should be cross-domain MEV extraction that would link together all of these different roll-ups. And you can think of shared sequencing as a technology that might facilitate that MEV extraction, or that might facilitate sort of moving liquidity around between different domains. Okay? So that was a starting point sort of this project. And then we were wondering, okay, those questions might be obvious to you, but we wanted to understand them theoretically. So suppose we have shared sequencer, and we have this cool functionality that we can have atomic executions of bundles of transactions on different rollup domains, right? So it would be super cool if I can place one leg of my trade as an arbitrageur on Arbitrum and one on Optimism, and I'm guaranteed that they both executed or neither of the two are executed. And then you could be wondering, okay, what does it do to MEV extraction? What does it do to cross-domain trading? What does it do to overall market efficiency in the system? And what does it do to revenue for the sequencers? Or the sequencer, the shared sequencer, and so on. What does it do to revenue on each sequencing domain? Okay? And so you can now answer this sort of as an armchair theoretician because they are not live yet anyway, so you can go full theory, berserk, and do game theory, and that's what we did. So here's a mental model I like about trading on these different domains. So you can think of in-domain or cross-domain trading as a contest, and sort of if you think about designing transaction ordering policies, what you actually also do if you do shared sequencing, you sort of orchestrate a contest or the rules of a contest, a trading contest, right? So if you think about what rollups are nowadays doing, first come, first serve, you basically design a contest around faster inclusion. If you do priority gas auction like in ancient days on Ethereum, you incentivize some kind of bidding competition, okay? And now here's the shared sequencing sort of idea. So if you do shared sequencing, you basically, what you do is you reduce noise in the competition, right? You make it easier to coordinate between different domains, and that sort of removes some kind of noise in the competition. That means, first of all, maybe you can realize more MEV gains that you previously couldn't realize, and maybe that will be beneficial to those competitors in this context. Okay? That's the entire idea. Now let me give you a minimal model of that economic situation. So think about two searchers competing to make a profitable cross-domain ARB trade, MEV trade, whatnot. So it has some value to be executed, and then you want to, if you want to win this competition for the trades, then you would like to place two transactions, one on two domains, right? One on Arbitrum, one on Optimism, before the competitor. If you do, if you're successful, if you manage to put in both before your competitor, then you're good, right? So you can generate that value for yourself, okay? Now, if you think about this competition, you can generically think about a competition by investment in some kind of signal, right? So if you're a searcher in this world, then what you can do is you can sort of invest to be better in this competition. And I give you some kind of interpretation of that. So if you're in a first come, first serve world, then you basically invest into reducing your timestamp, right? You invest in reducing your latency. You invest in collocation, for example, right? So that's your investment, your signal, right? In a PBS world, you have a very sort of complicated ecosystem, but in the end, you invest in some way or another in a bit, right? Or maybe in some kind of infra that helps you placing your trades on top of the block or in the position that you like them, right? And if you think about other kind of solutions like Arbitrum has proposed, and I've worked a bit on, you might do a combination of both, right? So you might do some latency investment plus bidding and so on. So depending on how you set up those rules, right, you get a different kind of way of organizing this competition. But in the end, what you have is some kind of signaling strategy and some kind of investment by those searchers in this world. Okay. Now, I wanted to talk a bit about this randomness in this contest, right? So I told you, okay, my mental model of a shared sequencer, like on a bird's eye high-level view, is just a way of reducing noise in the competition. So you can think of a noisy competition, right? So you make your investment as a searcher, as an arbitrageur, but you're not sure that you win, right? So there's always some noise component to it. There's still some random factors in this world. And so in the end, what you have is some kind of model where you would combine some signals that you produce from your investment plus some random factors that are out of your control. So that's the kind of model we have in mind, okay? And then you win basically when your signal plus your noise is better than the signal plus noise of your competitor. All right. And now you have a bit of a grip on what does it do to competition if you compare shared sequencing regime to separate sequencing regime. And it's simply for the fact that you now compare a situation where you need to win sort of one global competition versus a situation where you need to win several sort of local races, right? Think about the situation where you have to place one trade on one domain, one trade on the other domain. What you have to do is in the shared sequencing case, you just need to produce one signal, and that signal plus noise should be better than that of your competitor. If you do separate sequencing, you produce two signals, right? And both of them, plus the noise, the added noise, should be better than those of your competitor. So in mathematics, you compare basically a cumulative, and then you compare the squared of the cumulative. Okay? If you think about independent noise, right? Maybe there's some correlation, right? So if I'm good in placing trades on Arbitrum, I'm also good in placing trades on optimism. So it might not be independent, but certainly it's not perfectly correlated, right? So you have more variance in this shared sequencing regime. Okay. So what does it tell us in the end? What does it tell us about my initial questions about, okay, do we have more efficiency, more investment, more revenue, et cetera, pp. So you can solve this model, assume some stuff, find a symmetric Nash equilibrium of this game, and then it can tell us certain kind of things about the effects of domain integration, right? What does it do in the end? The model tells you there's an equilibrium, there's a threshold on value, right? So if the value of the opportunity of the ARB is too low, people will just not extract it, right? It becomes too expensive, you wouldn't do that. If it's high enough, there is some threshold after which it's high enough and worthwhile to exploit it, then both bidders enter in this sort of competition. They try to outcompete each other, and then the investment obviously is increasing in value and depends on the variance in this competition. Here's the punchline. If you compare shared sequencing to separate sequencing, then just this threshold is lower, right? Which seems to be obvious, but it's good to prove it mathematically, right? So intuitively, there are more opportunities that you can extract in this game, because now you do shared sequencing. You can extract more MEV, you can have more trades, and that should have a positive effect on all kinds of global parameters, right? Liquidity provision and so on. So that's sort of maybe not the most surprising part, right? Sort of meets basic intuitions. But then you can also think about actually conditional on entering this competition. What does it do to investment? Okay? So you can think about, well, do those searchers actually compete sort of harder? Do they invest more in the world of a shared sequencer versus the world of separate sequencing? And sort of now you have two effects, right? So you basically charge them twice in some sense if you do separate sequencing. They're still competing in this cross-MEV extraction game, one on each domain. But then you also have sort of a more reliable signal, right? So you have more returns on investment if you do shared sequencing, right? So you have a better control of your outcome. So your investment controls you, gives you a better idea of given what you invest, you have a better idea whether you will actually gain something. So those are the two effects, and then you can trade them off, right? So what it does in the end is gives you a kind of more like nuanced answer of equilibrium investment. So you have a dependency on the noise in this contest, and you have a dependency on market structure, on the sequencing rule, right? So it depends, actually, that's what we find, it depends very much on how you organize the competition in the different sequences in the shared sequencer. I'll give you a bunch of examples. So we looked into constant cost elasticity, which is maybe an okay approximation to what we would expect in a first-come, first-serve competition. And there you have basically a result of the kind, okay, in a shared sequencing regime, not only will people will enter the competition for lower values of the arbitrage, but also conditional on entering, they will invest more, right? So they will compete harder in this regime, okay? So that's sort of the bottom line of this proposition, okay? Then we looked into another kind of sequencing rule, time boost. I don't know whether you know it. That was a proposal by Arbitrum about half a year ago, or even longer ago. So where they basically came up with a sequencing rule where they have the order transactions based on a score, and the score combines a timestamp component and a bidding component. So people send in a bid together with a transaction. We take some function of the bid and the timestamp, call that the score, and then order transaction based on that score. Okay? And in that case, we figure out, okay, there it depends very much on the value of the ARP and on the noise distribution. So for this kind of sequencing policy, it can be sometimes the case that if you do shared sequencing with it, that you generate lower revenue than you would if you do separate sequencing. Okay? So it really depends on these different parameters of this game. Finally, if you do some kind of PBS type of market structure, I mean, it's very hard to come up with a sort of reasonable idea of what is the cost structure of the competitors it is in this market, right? So there are all kinds of things that collectively create a signal for them. So they might pay some expenditure on fees, on tips, and so on infra, on some kind of payments to intermediaries in the MEV supply chains. Not entirely clear. You tell me, maybe it's some kind of almost constant marginal, I would say, right? Because there are substantial economies of scale in these kind of markets. But regardless, what you can find in the end is you might have some kind of, depending on the cost structure, you have some kind of situations where shared sequencing has ambiguous effect on sequencer revenue. It's not always that you make more money if you do shared sequencing. Right? Which might be surprising. Right? The first part was less surprising. Right? So overall, more value is generated, overall, more MEV is extracted. But from the point of view of the sequencing entity, if it wants to generate some revenue, it might be that it makes less if they integrate the domain rather than if they stay separate. So TLDR of all of that is mechanism matters. Right? So for this comparative statics. Okay. Oops. So that sort of looks at the global pie that you can extract, right? Of course, you can also look sort of what we've seen in previous talks. We can look at revenue across distributional concerns of the kind of, so there's one domain and another domain. One domain generates less value than another domain, right? And so they might have conflicting or different motivations to integrate, right? So they might have more or less of a gain from integration. That has bearing on whether they actually want to do that, right? We also heard about we have to solve this problem of revenue sharing. So even if we make overall more revenue, we have to think about how we do that. And that also has bearing then on who will participate in these games. And of course, all of this is sort of a theoretical exercise. I have absolutely no idea what is the size of unrealized cross-domain MEV that would get unlocked with shared sequencing, right? So you can only have guesses around that. Right, so those are some caveats. Okay, to wrap that up a bit. So if you do this kind of comparison, horse racing comparison of shared and separate sequencing and look at it from a very much bird's-eye view on just the structure of competition that it induces, then you find that the mechanism that you use, the transaction ordering policy that you use, or the market design that you use, determines very much who gains and loses from domain integration and actually how much we gain or how much we lose from domain integration. So mechanism design matters a lot. And sort of second sort of conclusion I would give is some people or some entities, some players in this game might benefit a lot, right? Might benefit a lot from integration, and some might do less so, or there are even circumstances where you make less revenue from integration, domain integration. So if you really want to bootstrap this entire thing, right? If you really want to, because there are economies of scale, right? Shared sequencing only works if many sort of participate, then I think some serious persuasion is necessary. You need to talk to people to convince them that they actually make more from shared sequencing. All right, I think that's it.
Hello. Hello, friends. All right, someone help me make the mic louder. Hello. I hope that you will be awake for this part of the debate. So we're going to have an Oxford-style debate at one of the oldest markets in the nexus of the world. So let's stay tuned for it. But before that, what I would like you to do is go on mev.market. The agenda is being live updated as we're procrastinating and close to running out of time. So please open up the page on your phone and scroll down to the great sequencing debate. There, we have inserted a poll. Apologies for the Google form. I wish we had more time to prepare with open source technology. But here, there are 2 statements, one for each poll, that I would like to ask everyone in the next 5 to 10 minutes to make your choice, yes or no, to the question. We'll take a snapshot at some point during the debates. And after the debates, we will ask you to decide whether you want to alter your opinion on the particular statements. And we will take another snapshot, and that's how we determine the winner. For the full flow of the debate is projected on the side wall over here, and as a modified version of the Oxford-style debates. But before we start, since it's a very complex and nuanced subject, we're asking Ellie to give us a framing of the nuances and the technical trade-offs.
Actually, does my mic, this one, okay. All right, so we're going to have 2 debates. The first one will be shared sequencing or not shared sequencing. The actual question's a little bit more nuanced than that. And then the second one is going to be based sequencing or non-based sequencing. Okay, so I'm just going to give a frame of the first debate. So shared versus non-shared sequencing. Okay, so a lot of this is kind of similar to the things I mentioned earlier in my talk and that were mentioned earlier in other talks. So we have non-shared sequencing. Each rollup has its own isolated protocol that determines the sequence of all of the rollup transactions. This is the state of L2 sequencing today. And then we have shared sequencing, which consists of 2 main parts. The first part is a proposer assignment mechanism. So this is what determines the set of proposers for the next rollup blocks. Usually this is just one proposer. So you think in the vanilla-based sequencing, this proposer is the L1 proposer. It's just one proposer that proposes for all rollups. But this could be some set of multiple proposers. But the point is that all of the rollups agree and they use the same proposer mechanism. The second property is some finality gadget. So this finality gadget would finalize all of the proposed rollup blocks, and it provides a confirmation to users that this is in fact finalized. So these 2 properties are completely separate. You could, they're very separate, but there is a lot of benefit in sharing them. So for example, if rollups use the same proposer assignment, but they have different finality gadgets, that's kind of hard then to reason about your interoperability because one is final under some set of conditions and another rollup is final under another set of conditions. So the finality gadget is, the base finality gadget is always Ethereum for all of the L1 rollups. But you can imagine maybe another case where rollups share kind of this layer 1.5, which is a fast finality gadget that can, come to finality a lot faster than Ethereum comes to finality. But then again, everything is eventually settled to Ethereum. So here's a few examples of what a shared proposer assignment is. So as I said, you have, I'll start with the OG-based sequencing, which is where your shared proposer is the L1 proposer. This is probably what's most familiar to most people. You can also have a fixed shared proposer set, which is basically some set that you go through round robin, et cetera. And then you can have a dynamic auction, which is what I mentioned earlier, where you dynamically choose and elect the proposers. So the question for this debate, which is the more nuanced version, is it desirable to have a future where you have global shared sequencing, where Ethereum L1 and virtually all of the rollup blocks are sequenced by the same entity within one slot? So the question, is this a desirable future? And note that this question is separate from the question of is there value in sharing a finality gadget. That's out of scope for this. So this question was modified at the very last second. So here's some common arguments. They might not match up quite with the question, but I think that they're still useful for us to talk about. So common arguments for sharing a proposer assignment. So one is that you optimize for cross-domain user intents. If you have a shared proposer assignment, you can agree to have shared proposers and do these cross-chain arbitrages, et cetera. Another argument is that if you combine it with real-time proving, this enables trustless synchronous composability, which is very important. You can actually get this without real-time proving using something like Polygon's AG layer. But if you have this shared proposer assignment, you can enable this trustless synchronous composability. And then finally, you can say that, well, if you don't have shared sequencing, parties are going to try to be shared sequencers anyway because there's value in sequencing for more than one rollup at a time. So you might argue that shared sequencing is kind of the inevitable end goal. So some common arguments against shared proposer assignment is that it's not optimized for front-running protection. So if the shared proposer isn't trusted, or they aren't randomly elected, or you don't have some sort of mechanism to prevent this, the shared proposer is going to have maximum rent-seeking behavior, and maybe that's not what rollups want. The second thing is that it might create bottlenecks that reduce performance on the L2. So yes, cross-chain transactions are great, but you might say the amount of cross-chain transactions are very small compared to just the individual rollup transactions, and maybe having this shared proposer is going to create bottlenecks because you're trying to have all of these L2 state combined when a lot of it actually does not need to be combined because it's completely logically separated. You could also argue that some rollups simply don't benefit from it. You could argue maybe some rollups, maybe you have some sort of a gaming chain that really, it doesn't have a lot of use for cross-chain transactions. And if it does have use for them, they really don't need to be atomically executed. That's also an argument. And then finally, you could argue that rollups want to keep their MEV. So if they have this shared proposer assignment, they might lose their MEV. Although this was addressed in my earlier talk. So that is, I'll go back to the question. So the question is it a desirable future to have global shared sequencing where you have one entity that is sequencing for both Ethereum and almost all of the rollup blocks within one slot? All right, I guess now it's time for the debate.
Yeah, why not? Thank you.
OK, so we're going to have Justin go first with his opening remarks I guess in favor of this question. So I'll hand it over to Justin.
OK, great. So I guess one point here is around understanding the benefits and the cost. In terms of the benefits, I see shared liquidity as being something that users will want. I also see shared pre-confirmations as something users will want. Imagine that you have a complex application, for example, a marketplace, which involves identity, it involves an escrow agent, an insurance mechanism, it involves reputation, and all of these things live in different execution environments. Now, if I want to make a complex transaction, I have to interface with all these different counterparties. And basically, your UX falls to the weakest link. Whoever is the slowest to provide you a pre-confirmation, that's going to be your pre-confirmation latency. If one of them kind of rugs you, then now your whole transaction kind of has to revert because you want everything to go through or none of it to go through. So I think there's going to be market demand for this synchronous composability, and in some sense, we can't avoid it. It's going to happen, whatever, in all futures. Now, one of the things you can try and do is fight it, where you basically give sequencing and pre-confirmation rights to independent parties. But what I expect will happen there is actually even more complexity. And basically the sequencing, the shared sequencing layer will be built on top of it. So you can imagine like off-chain markets and like very fancy, maybe Suave-based markets that aggregate and allow for each individual proposer to delegate their sequencing rights to this mega sequencer. And so in some sense, what shared sequencing is all about is minimizing the costs of shared sequencing, which is a complexity and sophistication, all while still giving to users what they want, which is this synchronous composability. Now, talking to Dankrat just a few minutes ago, like my understanding is that he wants to try and minimize the cost of builder centralization. And one of the things that he'd like to see is basically homogeneous virtual machines. So if I want to build a shared sequencer, I basically need to specialize in one virtual machine as opposed to 100 virtual machines. And I think there is merit to this, and I think we are going to see a parallel distribution of virtual machines, but I still think that we are going to see application-specific virtual machines that specialize in gaming or auctions or DEXs or liquidations or whatever it is. And in some sense, if we want to see this long tail thrive, we don't want them to be isolated as islands. Because if they're isolated, then now they're not connected to the rest of the economy, and it's much harder for them to survive. And so in some sense, shared sequencing allows for a thriving and diverse long tail.
All right, the rebuttal?
Right, so I think like the potential UX advantages of shared sequencing do exist. I think there's a debate to be had about how big they are going to be, because like right now, a lot of crypto users are like degen power users, DeFi traders, and so on, and they benefit a lot from atomic composability. I think with the rollup system, we will see like an ecosystem emerge that will have a lot more applications. Applications will probably like congregate around certain rollups, and they will have most of what they need on one rollup rather than being distributed across like several different ones that have to be composed atomically. I think that's not a practical future, even in a highly shared sequencing world, because there will be large costs to it. And I believe that that is actually like what a rollup will ultimately aim for. Like each rollup will get its own, like will develop its own ecosystem that has some independence of the general Ethereum ecosystem. But there are undeniable UX advantages. The problem with shared sequencing is I see it as like potentially the biggest centralization risk that exists in Ethereum if we especially if we actively try to work towards such a future. And like centralization can come from many different layers. We know that by now. Like it can come from the staking layer. It can come from like the builder layer, which we're seeing to some extent. Relay layer. It can come from I don't know. It can even come from the application layer. Like you can, if one application takes over most of activity on Ethereum, it's also a centralization risk. And I think like the problem that I see with these shared sequencers is we're building, like we are through the back door building a component into Ethereum that comes with a very high concentration risk. And the concentration risk is because the cost of market entry is going to be very high. My problem is that someone has to build a piece of infrastructure that potentially interacts with hundreds of different rollups, each with their own, not just virtual machine, but systems, different smart contracts, and so on. This is going to be a highly sophisticated, not just piece of hardware. I think that part is almost trivial, but even that's going to cost millions. But it's going to be proprietary software, because once you build that, there's no interest in putting that into open source. And we don't control it. Like we cannot design for it because it happens organically. This just happens. And so we're going to have a big problem that like there will be very few of these, and they will essentially be in control of like the Ethereum rollup ecosystem.
All right, Justin, your rebuttal.
Right. So I guess one rebuttal is that if there's going to be a very long tail of virtual machines, we're going to see mini builders specialized for each individual virtual machine. And that's basically going to be searchers. So what is a layer 1 searcher? Behind the scenes will be a layer 2 builder. So basically, builders today, you can think of them as being centralized. Like Beaver is very scary, they build half the blocks. But actually, behind the scenes, there's dozens of entities which are called searchers that do provide some amount of decentralization and robustness there. And if you do want to compete as a smaller actor, well, just start as a searcher and like specialize in that specific virtual machine. The other thing I'll say is that centralization, in some sense, is inevitable. And like the best you can do is segregate the validators from the sophistication. And we have proposed a builder separation, which is what it's all about. And we want to make sure that the builders, even if there's 2 or 3 builders, that they can't censor, they can't cause liveness failures, they can't cause safety failures, they can't do front running, they can't do all of the bad things. And in some sense, once we've really cleanly separated things out, then the last thing that remains is mimetic downsides. It's just a bad look if Citadel were to build 90% of the blocks. But fundamentally, is maybe not so bad. And so what I would push for is like a few things. One is like really making PBS more robust. So that means like making the decoupling between the validators and the sequencing even stronger. And like the best design that we have here is called execution tickets, where as a validator, I'm no longer given sequencing rights. I only have 2 rights, attester rights and inclusion rights in the context of inclusion lists. So I still contribute to consensus and finality. I still contribute to censorship resistance with inclusion lists, but I don't have these sequencing rights and transaction ordering rights. Instead, that's given to a sophisticated entity. And then the other thing we should do is like take the L1 sequencer or like infrastructure and like make it as robust as we can. So we have inclusion lists, we have encrypted mempools, and all of these things kind of make it so that even in the worst case, well, and sometimes we need to think adversarially, like let's just assume the worst case. Let's assume there's 1 mega builder. Like even in that case, we want Ethereum to be World War III resistant.
You have about 2.5 minutes left. Do you have anything you want to add?
Okay. Like one of the things that we were talking about with Dankrat just a few minutes ago is, okay, it's less about a binary thing like is shared sequencing good or bad. It's more about the subtleties and nuances of what is the barrier to entry to become a builder. And like one of the ideas that was put forward is homogeneity of the virtual machine. And I think this is something that we're going to move to eventually. So there's this idea of a native rollup, which used to be called an enshrined rollup. What is a native rollup? It's one that natively reuses the EVM. So today, if you're an EVM rollup, you're not native in the sense that you're trying your best to be EVM equivalent, but more likely than not, you're not. You're going to have bugs. You're going to make trade-offs for performance. You're going to have all sorts of things. And so one of the things that we're working on is basically exposing this ZK EVM precompile that means that rollups can natively use the EVM. And if that precompile catches on, then we can expect homogeneity. And that's one way to think about it is execution sharding. But execution sharding, as designed a few years ago, was very opinionated. We had 64 shards or 1024 shards, and they were each exactly the same, and they were each like maximally enshrined and native. But with this precompile, we actually bring back the programmability of Ethereum in the sense that it's just a precompile, and if you want to have a wrapper around it, if you want to have tokenomics, if you want to have public goods funding, if you want to have governance around it, you can do that. You can have your own brand, your own community, your own ecosystem, and still benefit from the perfect equivalence to the EVM, because literally you're using the EVM natively. You don't have bugs, because bugs are not the responsibility of the L1 and the L0. And you also don't need governance for your virtual machine, because you're in a position where every time the EVM changes rules, which is to say every time we have a hard fork at layer 1, the opcode or the precompile kind of magically upgrades. And so the future, I think, will be very clean and more homogeneous. And we're in this temporary awkward phase, puberty phase, I guess. But it's something that we need to go through in order to reach adulthood.
Awesome, thank you. Dinkrod, what about your rebuttal?
Yes. So I think I'm going to reply to 3 different points that were made. So I think the first one was the question of, can we just is it okay, are these builders actually that complex because they can outsource some of the process to searchers? So I think, to me, the core argument that I feel Justin makes about shared sequencing is that it provides this global composability. I think if you want that, if that is what you believe it will provide, it effectively means there has to be at least someone out there who simulates this all together. So even if you have individual searchers somewhere, their software effectively will need to run in that big piece that simulates everything and figures out how it all fits together. Otherwise, you're not going to get composability. So I don't think that this effectively, totally it might happen if there's some very specialized thing. But as soon as that becomes interesting enough for the global composability, it will have to be run in the global sequencer with the global prover and so on. So I think this concentration risk is not remedied by that. In terms of how okay the central party is, I think the argument that Justin is making here is that we can contain everything, all the downside that this brings by adding more consensus gadgets, say, for example, inclusion lists and so on. And in the end, it will be perfectly acceptable to have this. I do not believe that this is true. And the reason is this. Okay, let's even assume that, let's say there's only one party. There's only Citadel doing it. They will still, as a minimum, have the power to stop their sequencer. This is one thing that you cannot stop. They can always turn it off. So this will give them some power in the case where, say, they don't do this too often. They only do this once every few months or so, but exactly when it gives them a super beneficial trade. So I think there's still a big problem here that creates more centralization and that basically allows someone to exploit these advantages. But I think they get even more power than that. They get the power to use this power that they have, to switch it off, to hold the rest of Ethereum hostage. They can now start making deals with validators about, well, I mean, if you do X, say if you put this transaction in the inclusion list, then it's going to be switched off. So there are going to be secondary effects if you have too much concentration. At some point, you're going to get these effects where someone can hold the whole of Ethereum hostage for their benefits. And the only way to not have this, in my opinion, is to have, yes, I'm relatively okay with having some relatively large parties doing things, but there needs to be easy replaceability. It needs to be possible on a relatively short time scale with a limited investment to replace all the centralized party that the protocol depends on. Because yes, the natural equilibrium for many of these is going to be to have something 3 to 5 or something. I think that's an acceptable thing, to have 3 to 5 parties who are most of the time running sequencing, as long as once they start colluding, we can have someone else who's stepping in and replaces them, and there's not going to be a huge downside, and the damage they can do is very limited. When you lose that ability, and that is my concern with shared sequencing, then you're running into big problems where people have too much power. And I had a third point, but right now I can't unlock my phone. Okay, last point is about native rollups. So I can see that you can potentially get to a sort of execution-like sharding roadmap by adding construction that basically like adds an easy way to prove the EVM. I want to propose an alternative, which is this. I think at the point where we are able to build sequences and provers large enough to run, say, 100 or 1,000 times the current EVM scale, I think what we should actually naturally do is instead put these resources to scale our current L1. Like, I think this is something we should definitely eventually do. I think we will, within the next 5 years, arrive there. And I think it makes sense to like start scaling the gas limit. Say, like, put an ZK EVM prover on L1, put it on the data availability layer, and say, like, yes, at some point we do need sequencers, but if we do it this way, first we get totally like for free global composability because it is actually the Ethereum L1. We get a lot of control. We will know exactly how much it costs to sequence this, to run these transactions. And we get to build like the infrastructure. We get to like know that everyone can run a basic set of open source infrastructure. So I think this is a much better world. And like I think like we will run into like a world where within 5 years, like doing like say 100x EVM will be able at a sequencer cost of like say less than $100,000. I'm pretty convinced of that. And I think like if that's what we want, this is what we should be aiming for. And I totally think that should be Ethereum's long-term strategy. And I also think this is not actually a threat to rollups because ultimately rollups will like build on their own ecosystems. They will have their own like value provision and they will be like yes, their own brand that provides users with a different experience that is good for certain applications that will continue to run on them.
Okay, so we were going to go into questions now, but I'm wondering if maybe we can go a little bit off book because I feel like Justin has a lot of responses he would like to say to that. So maybe I can give Justin like a minute or two to respond to that. I could see him squirming in his chair.
Okay, I guess one cool thing is that once we have this ZK VM precompiled, in some sense, we can remove the gas limit, right? Because what's the reason why we have a gas limit is because we want to prevent denial of service. But if verifying an EVM block is constant time, it takes 1 millisecond, you just have to verify the SNOC, then you no longer have this denial of service. So you can stuff, 1 trillion additions and multiplications and bit operations, and it will all be kind of compressed into a single SNOC. And so in some sense, I agree with Dankrat that we can basically just remove the gas limit. And maybe we do need a gas limit specifically for state bloat, right? We don't want to write to state too much. But there is actually maybe an argument to be said that the limits on data availability also limit the state growth. Another thing that I agree with Dankrat is around the need for a fallback. Right? Just because we have sophisticated infrastructure doesn't mean that we shouldn't have unsophisticated infrastructure and that act as a fallback. And so my mental model for many things actually is that we have this optimistic default path, which is hyper-optimized and provides best outcome for users. But then in World War III situations where like all citadels been blown up, then we do need to have these unsophisticated builders and searchers kick in. And one of the things that makes me very, very optimistic about this future being relatively straightforward is actually encryption. And the reason is that once all your mempools are just like encrypted white noise, then really the main thing that you can do is just concatenate encrypted transactions. Like once you can't inspect inside, then like for the vast majority of transactions, you can just almost first come, first serve, concatenate them. And even like there's no sophistication there, right? You don't need capital, you don't need an army of PhDs, you don't need fancy algorithms and all of that stuff. So I am optimistic that yes, we can have more homogeneity on Ethereum, we can have no more gas limit, and we can also have these fairly simple fallbacks that start kicking in.
All right, Dankrat, do you have a quick response before we go into
questions? I feel like everything he said was agreeing with my points. I don't know if there's any response here.
I guess my point is that all of these things, a fallback, increasing the limit, these are not mutually exclusive with shared sequencing. We can have both. Why not both?
I think it will be interesting for you to sketch out design where you can actually have both in terms of like the actual shared sequencing future where you have things like synchronous composability.
Right.
I think that is not convincing to me that there is a default fallback path on all of these.
Right. I mean, like one very graceful way to fall back is just to disable the synchronous composability. Like it just fall back to like the pure parallel, just concatenate encrypted transactions and don't worry about anything else. I mean, there's also this intermediate kind of level of sophistication, which is maybe Suave, right? Which is simultaneously, you can think of it as an encrypted mempool, and it has the ability to kind of have complex interactions within them.
As a minimum, the shared sequencer would still get the ability to arbitrarily switch off the synchronous composability, which means they can use this at a time when it's convenient for them. For example, if they can exploit something on a rollup that someone else cannot because they don't have enough capital and would require exploiting the synchronous composability.
Right. I mean, one thing that can be leveraged is actually, providing cross rollup account abstraction and cross rollup bundles, and there's like, for example, Polygon's aggregation layer ideas in that direction, and here once you have that infrastructure, it's actually safe to use the inclusion list. So your slow path, your maximally simple and robust path is actually still to an extent compatible with the synchronous composability. I think the main thing that you potentially lose is the pre-confirmations. So you lose this real-time UX, you fall back to 12 seconds. But one of the things that Vitalik noticed recently is that the internet always very often has these glitches, right? Like how many times a day do you have to wait a few seconds for things to reboot and for your Wi-Fi to get back to normal? And I think it's fine if sometimes we gracefully degrade and lose this instant UX.
So this seems wrong to me, that you're claiming that you can get instantaneous composability just from inclusion lists.
It wouldn't be instantaneous. It would.
Like you cannot get yeah.
So you lose the pre-confirmation, but you keep the composability.
This seems untrue to me.
Okay. So the way it would work is that you express your super transaction, your cross rollup bundle, as something that you can include in the inclusion list, and then whatever builder ends up building a block, they have to respect this intent, this desire.
But how can they respect it without being able to sequence on all the things that interact with each other? Like someone has to have the shared state of all the rollups that interact with each other.
Yeah, so that would be the minimal fallback, in case.
Okay, but that is a global shared sequencer.
Yes, but like there's different notion of global shared. Like there's one that's like maximally simple, where if you zoom in, you could have these searchers that just do one thing and just concatenate transactions. Yeah, technically, as an entity, logically, it's one global sequencer, but that doesn't mean that there's one entity in the world that has a farm of servers that's doing all the sequencing.
I mean, at least you need all the state to know what exactly the transaction does, right? Otherwise, you cannot have composability.
Well, let's say you have 1,000 rollups, and you want to compose between 2 rollups. Well, you only need to run a full node for these 2 rollups. And so, like, for 99.9 of the full nodes, you don't have to run them. And so you can have these like pairwise searches, I guess, that are more robust and much more simple than having a global view over everything.
I think a searcher is not enough. You need an actual builder who does both at the same time.
Yeah, so the layer 1 searcher is an L2 builder. Like these are like different layers of abstraction.
All right, maybe we go to questions for a couple minutes. Okay, so I'll first give it to Donkrod. what are your opinions on things like hyperchains and superchains, where there are communities that share a sequencer, but they don't share a global shared sequencer?
Yeah, I mean, like, I think, to me, a superchain is, in the end, just one rollup. Like, I would say, like, it's just, like, a different way of creating what I would call, like logically one rollup with, like, just different, like, partitions that are individually administered, but I think that doesn't make them separate rollups. Like, it's basically, they could just have these different partitions just be their own smart contracts. So I think, like, the global thing is logically one rollup.
Okay, yeah, makes sense. And then to Justin. So in your previous talk, you talked about execution tickets probably being several years away. What do you see as, like, while we don't have execution tickets, how we should enable this shared sequencing?
Right. So the basic idea is delegation. So the sequencing rights would be given to an L1 proposer, and that L1 proposer, if they choose to not be a pre-confirmer, they can delegate their sequencing and pre-confirmation rights to some other entity. And now you can ask yourself, okay, so I call it the gateway. So logically call it the gateway. Now we can ask ourselves, what makes sense to who should be running the gateway? Well, the gateway needs to be mutually trusted by the proposer, of course, and they also need to be trusted by the users. And one of the reasons is actually around the pricing of pre-confirmation tips. And this is a really delicate balance. So every time a user makes a request for pre-confirmation, they have to pay a corresponding tip for this service. And there's basically two outcomes that are bad. Outcome number one is that the tip that the users have to pay is actually too high, in which case the users won't be happy and they'll get ripped off. And outcome number two is the tip is too low and the proposer kind of is not happy and feels that they've been ripped off. And so really you want this neutral party which is trusted to provide the pricing on both sides, that is fair on both sides. And like, if I were to look at the existing ecosystem and try and map this gateway role to one of them, I think it would be the relay. And the reason is that the relay is already this kind of trusted brand, which is meant to be credibly neutral, that is already trusted by the builders and the proposers, and now they need to be trusted by a third type of entity, which is the user. And actually being trusted by the builders and having all the builder connections is useful. And the reason is that once we have pre-confirmations, we modify PBS in such a way that the builders still have to build these MEV maximizing blocks, but with the constraint of having to satisfy the pre-confirmation. So really it's like this four-way game where we have users, proposers, builders, and then relays in the middle that are just neutral coordinators.
Okay, as a follow-up question to that, how would you respond to people who say that we should not be adding more responsibilities to the relays, we should be removing relays from the system?
Right. So I've always been of the opinion that relays should be this temporary thing and then they should just die. And like the previous kind of roadmap was enshrine PBS. And the promise there was, okay, we're going to remove the relays. Now, there's kind of good news and bad news. The bad news is that ePBS looks way less attractive today than it looked a year or two ago. And so that as a roadmap looks less feasible, but also it might take more time. But the good news is that we actually have an even better design idea, which is these execution tickets. And so, sure, we might have to wait a little bit longer, and relays might have to live, longer than expected. But ultimately, we'll be in a better place. And I think this speaks to like Ethereum's, I guess, philosophy, which is, do things slow, but do things properly, right? We don't want to take too many shortcuts, and we want to incorporate a lot of the research. And it just so happens that, in some sense, with execution tickets, we made this quantum step in terms of our understanding of MEV, and I think that is a much better design than enshrine PBS in the short term.
Yeah, thank you. So, and then a question to Dankrad. What do you feel about the argument that these builders for particular rollups will end up centralizing anyway because there's profit to be made by building for multiple rollups, and that they'll just centralize themselves outside of the protocol, and we'll just end up with a global shared sequencer anyway?
I mean, I think that is a good question. For me, that's different from the normative question of like, do I think it's a desirable future? Well, right now I see it as a danger. I am currently not convinced that it is actually the natural future, because I do believe that roll-up ecosystems are developing independently, and it does seem like they're doing their own thing. And I actually don't know if there is such massive value like that the market concentration will be worth it for someone. It may be, but I'm not completely convinced that that is true right now. If it is true, then I would actually stand by my argument that if this is where we're heading, we're still better off saying, hey, like, let us like put everything on like scaling our base layer, so that is going to be the big shared sequencing layer that we can control and where we can control centralization. And like, yes, like, I mean, rollups either become their own independent ecosystems, or maybe if in the worst case we were actually to see this is inevitable, this is guaranteed to happen, maybe we would have to abandon the rollup-centric roadmap. I don't believe this is the case.
All right, sounds good. Okay, so now we're going to go into the closing statements. I'll give Justin 2 minutes for his closing statements first.
So I've known Dankrat for 12 years, and actually he's the one who got me into Bitcoin in 2013. And we were working on this FPGA project, and even back then we were arguing all the time. And you know, he leans on the pessimist side of things, I lean on the optimist side of things, and like usually truth is somewhere in between. And I think we actually have like so much more common ground than this debate would suggest. And so. Yeah, I think I actually very much agree with Dankrat on many things. I agree that we need to have this really robust infrastructure, so even if there's one mega builder, it can't do evil. I agree that we need to have these graceful fallbacks, but at the same time, I still think that. By the way, I also agree that it would be nice to have these ZK EVM enshrined precompiles that don't have any gas limits, so we can really do as much as we can at layer 1. But at the same time, I think that the short and medium-term market forces, the network effects of synchronous composability will lead to some amount of centralization. And that's something that we shouldn't necessarily be fearful of. It's something that we should be mindful of and try and design a future which is long-term, satisfactory. As a researcher, we have this bias over the long term, and I also think ideologically, what are we trying to build here? We're trying to build infrastructure that will last decades and centuries. And sure, if the next 5 years are a little awkward, then so be it. I personally don't care. And so I think yes. We need to be mindful of the next 5 years, but I remain optimistic about the long-term future.
All right, wonderful. Dankrat.
Yes, I mean, I think that's a great sort of closing statement in terms of generally. I think as before, my point on this is not about what is going to naturally happen. I think that's the second point, what a good question to ask. Where do the forces lead us? But I think my primary point is I want to know what is a good future. I think there are two different things here. There's the advantage from the UX point of view, there are the disadvantages from the centralization point of view. And I think the natural thing is to ask the question, where do we want to be in 5 to 10 years? And I think it's very good to even for rollups to ask themselves the question should I, for example, share the sequencer? Is that the right thing to do right now? And I think there are good arguments to think about well, maybe this is not what you should aim for right now. It's a lot better for the rollup ecosystem to have a lot of diversity, and I think it's also ultimately better for rollups in terms of their economics, because rollups are building their own ecosystems. They do want to sort of build out something that is independent and will generate them some amount of revenue at least. And so I think it's a good question to ask, and I think the normative answer for me is still no, I'm not willing to say, I want to build a global shared sequencing layer right now.
All right, thank you both. This was a really great discussion.
I would like to ask everyone to go on mev.market again and take 1 minute while we're waiting for Josh to grab a sip and to think whether you want to re-vote or edit your vote. So this was the split before the debate. We'll give you 1 minute to think about. Some choices in life are important. So
just seize the
choose
evil one.
Carefully. I'm so glad I'm not a designer.
Who are the other ones?
Yeah, where are the other 12%?
There's a set of nuances you get to see later. And so, yeah, if you would like to re-vote or edit your vote, just click on the poll under round 1. And so, in about 2 minutes after this, after the next round 2 starts, we'll take another snapshot and we'll reveal it at the end of round 2 debate together with before. All right. Great job.
Okay.
Shall we go right into?
I have another like intro
Yes.
for that.
Yes.
Which
Okay.
one? I'm going to go into the next one. I'm just going to give a brief intro like I did for the previous one about what the question is. So this debate is going to be based versus non-based sequencing with Josh and Justin. Really quickly, we'll just go over based sequencing. So based sequencing, you have L1 nodes, or the L1 proposers get to sequence L2 transactions. And then based sequencing also inherits the liveness and the credible neutrality of the L1. There are some other properties that some definitions of based sequencing include, but for this discussion, we're going to call that our definition of based sequencing. So there's advantage of this. You get good decentralization, liveness, censorship resistance. You get improved interoperability with the L1, and also between multiple rollups. I already discussed this part, so I'll skip through here. In vanilla-based sequencing without preconfers, you would have to, transactions would only be sequenced every 12 seconds on Ethereum, and you don't really get the UX that you get from centralized sequencers today. But obviously with pre-confirmations, you can get like less than 100 milliseconds latency, as Justin described in his talk. So we have base sequencing 2.0, which is basically we can use an external finality gadget. This is kind of that layer 1.5 I talked about previously, but I'll kind of skip over that because we already talked about that. So here is maybe a rundown of the differences. So base rollups, you get transactions are dependent on some unfinalized Ethereum state. So I want to explain this one a little bit further. In current rollups today, a lot of rollups will choose to base their rollup blocks on finalized Ethereum state, or at least Ethereum state that's like sufficiently deep in the chain so it's not going to reorg. In vanilla-based sequencing, the transactions are reliant on the L1 block that they're included in, and maybe this L1 block has a lot higher chance of reorging. Maybe that's not good. Base rollups give you synchronous interactions with the L1, since it's the same party that's proposing for both the L1 and the L2. Non-based rollups, you only get asynchronous interactions. And then finally, with based rollups, you can have some additional fast finality layer, this layer 1.5, but if you don't have that, then you get the finality of Ethereum, which maybe is kind of slow. With non-based rollups, it's very easy to get this fast finality gadget, and you kind of get it for free. I'm actually going to skip these, and we'll just kind of go into the debate. So I don't actually have a question slide here, but basically our question is going to be, should rollups transition to based sequencing or not? With the definition of based sequencing, that 1, it's the L1 proposer that gets to decide the transaction order, and 2, based sequencing inherits the liveness and credible neutrality of the L1. So with that, we can go ahead and jump in. Okay, let me just set up my timer here. And I think we actually, I'm not sure where Tina went, but we also have a poll for this one as well that we wanted to poll now and at the end. So go ahead and vote in your poll for poll number 2. OK, let's start with Justin. Your opening arguments for three minutes.
OK, so I think Josh and I both agree on the previous question, which is whether or not we want to have a shared sequencer. And now the question is, which shared sequencer? And then basically, we need to look at various properties of the shared sequencer. And in my opinion, there's like 3 that are very, very important. One is credible neutrality. And the reason why it's important is because we want to build this neutral playground for every rollup and their competitors to feel comfortable opting in to this shared sequencer. And so the classic example that I give is that imagine that if Arbitrum comes up with its own shared sequencer and Optimism comes up with its own shared sequencer, are they going to want to mutually use each other's shared sequencer? And the answer is going to be probably no, because they have these competitive dynamics. And in some sense, if you look within the Ethereum ecosystem, the Ethereum shared sequencer is the most credibly neutral. There's nothing more credibly neutral. You've already opted in. You've already bought into Ethereum as a credible brand and a credible system. So there's no loss of credible neutrality to opting into Ethereum layer 1 as a shared sequencer. The other aspect of shared sequencing is security. And this is a very similar argument. So when you build a rollup or layer 2, there's like several things that you need to care about. You need to care about settlement, data availability, execution, and sequencing. And in some sense, from a security standpoint, at first approximation, is going to be whatever your weakest link is. So if your weakest link is, let's say, some sort of off-chain consensus that uses your token, and this token only has, let's say, $1 billion of economic security, well, that's going to be your weakest link from a liveness standpoint. Like, I can 51% attack your external sequencer and then do bad things like extract toxic MEV and maybe force a mass exit or disable pre-confirmations or whatever it is. But if you use the Ethereum L1 as a sequencer, then now there's no additional security assumption that you're introducing. Like for all of these things, settlement, data, execution, and sequencing is the same security assumption, and it's Ethereum is secure, and there's no weakest link because they're all the exact same strength. And so from a security standpoint, that is the optimal thing you can do. And then there's this final question, which is around network effects. Like Ethereum has a ton of network effects. It has $500 billion of TVL. It has applications that possibly will never migrate. Like CryptoPunks will never migrate to Arbitrum. Like CryptoPunks are native to the L1. ENS is native to the L1. And then various whales are native to the L1 and might never want to move for various reasons. And I think by tapping into these network effects, that is like the best thing you can do. Instead of having a cold start problem, that way you start your shared sequencer from scratch, and now you need to ramp up your TVL, well, now you can just incrementally plug into what already exists, which is $500 billion, soon several $1 trillion of TVL. And this kind of brings us to this notion of Metcalfe's law, right, where the value of the network effect grows quadratically in the size of the network. And so if you have, for example, Ethereum layer 1, which is, let's say, 10x larger than Arbitrum, well, that's going to be 100x delta, potentially, in network effects. And so really, it's really difficult for an isolated sequencer to build the same kind of network effects. And so I think there's going to be these natural market forces for the L1 to win out because of credible neutrality, security, and network effects.
All right, Josh.
OK, so my view is going to come from kind of a perspective of, I would say, like incumbent versus like startup. And that is that Ethereum, as Justin pointed out, is like the dominant kind of existing platform. But fundamentally, it was a chain that was not created for the purpose of doing sequencing or shared sequencing, if we want to like specify to that.
was a chain made to be an L1, and then like throughout its life cycle, right, it was adapted to support L2s and like the roll-up-centric roadmap and like various things on top of that. But fundamentally, it was never like from day one built to support shared sequencing, and thus there's a lot of kind of like pitfalls. I think if you look at the L1.5 designs or L2 or whatever you want to call it, where you have a separate consensus mechanism for a shared sequencer, you have a strong benefit of kind of finality from that, and you can use consensus mechanism that gives you this kind of fast finality, and you don't have this like slower finality dependent on the base layer, which is fundamentally why people used sequencers in the first place, right? The original designs of rollups were base rollups. They assume you just submit the transactions to the L1, and then they are derived into the roll-up state machine. But people moved to sequencers and centralized sequencers because those were the low-hanging fruit, and they provided users with a better experience. And generally, my view is that the market cannot be ignored, and what I mean by that is if some external, there's a sense of like a domestic versus an international thing. And what I mean by that, like within the sphere of like Ethereum's domestic domain, it can say these are the changes we're going to do, but it cannot prevent like an international or like an exogenous kind of competitor, something like a Solana, or in some case you can view the L2s with centralized sequencer like this, from creating a product that has a different trade-off space and a different design consideration that may provide a more desirable user experience. And fundamentally, it's not within kind of like Ethereum's purview to prevent those external actors from creating a service that may be more desirable. And so if we want to kind of confront, say, centralizing vectors from some of those things, we need to create a product from scratch that is kind of built to satisfy the kind of expectations of users that they're used to on kind of centralized sequencers today. So if we want a decentralized sequencer, if we want to have the shared sequencers, I think we need a native chain that is just built to support that specific use case that doesn't come with some of the baggage is not the ideal term, but this kind of legacy kind of sense of Ethereum doing many things. Fundamentally, the modular ecosystem I view as being something about separation of concerns and building more kind of limited pieces, somewhat of like a Unix philosophy, where it's a small tool that does one thing. You can build a chain that is existing purely for the sense of doing shared sequencing. It is not also doing settlement. It is not also doing execution of its own. Purely exists to do shared sequencing. Is that?
Yeah, no,
Okay.
Perfect. 3 minutes. All right, Justin, you have 5 minutes for a rebuttal.
Okay, so I guess there were 2 points that stood out to me. One is that the market kind of initially started with the most naive solution, which is base sequencing, and then for some reason moved away from base sequencing. And this move from the market might suggest that base sequencing is inadequate in some way. Now, the way that I see it is that the move from base to centralized sequencers is for 3 key reasons. Key reason number 1 is that base sequencing, a few years ago, we didn't realize that it could provide pre-confirmations. And today, we do know how to provide pre-confirmations with base sequencing. And so I think that is like one of the major unlocks. The second thing is around MEV protection. Like right now on Ethereum Layer 1, you don't have MEV protection. You broadcast your Uniswap transaction on the public mempool, you're going to get sandwiched. And rollups were like, oh, well, we can provide MEV protection for free. Just trust us. And they are trustworthy because they're entities with lots of reputation, and they provide this great MEV protection. You won't get sandwiched on Arbitrum or on Uniswap. And again, here it's like almost a technological problem where the L1 needs to catch up in terms of services that are being provided, and the way that you catch up is by building encrypted mempools using something other than trust. So you can use a threshold encryption, you can use delay encryption, you can use SGX, which is enclave encryption. But there needs to be some sort of a solution for users. And then the third reason why rollups preferred centralized sequencing over base sequencing is like the subtle thing around security training wheels. My guess is that every single rollup has critical vulnerabilities, every one of them. And so this is really scary because now like an attacker who's a black hat can go and exploit, all these rollups one by one. But the rollups, they're very clever. They're like, we're going to accept the fact that we have vulnerabilities, but we're going to have layers of defense. We're going to have security in depth. And one of the layers of security in depth is the centralized sequencer, which will only include on-chain transactions that have been vetted. So if an attacker tries to exploit some sort of like weird edge case and craft some sort of fancy transaction, the shared sequencer is going to say, hey, that doesn't pass the smell test. I'm not even going to include it on chain. And so you can't even exploit the bug, even though it's there on chain. And so what I think we need to do is basically have defense in depth which isn't like just based on centralized sequencing. So we need to have multi-proving, we need to have formal verification, we might need to have like this native EVM opcode idea. But all this to say that the reason why the rollups are not using base sequencing is not for fundamental reasons that can't be fixed. It's just because there was like this quick hack to get MEV protection, to get the training wheels, and to get the pre-confirmations, all of which we can get with base sequencing. Now, the other point that was brought up by Josh is that in order to do pre-confirmations really well, best-in-class pre-confirmations, we need to build something from scratch. Because otherwise you're going to be like missing features and whatnot. And actually, I totally disagree here in the sense that we just got so lucky. We got lucky that from Genesis, there was this amazing pre-confirmation layer that was hiding in plain sight. And in some sense, it's a little bit similar to cold data, right? So cold data was just there from Genesis at day one, and rollups have been able to consume cold data. And like sure, like we have been able to improve it with the blobs, just we're going to have more data. But putting aside scalability, which is not an issue with pre-confirmations, in some sense, cold data is like good enough. Now, okay, I said scalability is not an issue for pre-confirmations, just to make sure this is all very clear in people's mind. Basically, we can have proposer-builder separation, right? Like, so you can have the proposer run on a Raspberry Pi, and you can have the builder just run 1,000 full nodes and have a supercluster. So scalability is not an issue there. Now, the one like small detail that does come into base sequencing, but is really a minor detail, is around the size of the lookback. Is it called lookback? Look ahead, thank you. So basically, on the beacon chain today, you can know who the next 32 proposers will be, actually between 32 and 64. And it would be actually slightly nicer if this was 128 or always 64. And so, but this is like such a minor detail, and it's a very easy hard fork to just increase the look ahead. Sure, like maybe there's a few things that can be polished, but fundamentally we just got extremely lucky, and without having to do anything, we can have a best-in-class shared sequencer.
All right, Josh, your rebuttal.
So I guess the assumption we're working on is that base sequencing is going to provide the fast pre-confirmations via the kind of, I don't know what we want to call the design, but the request and the response to the user, and then potentially with the gateway, right? Wherein we have a user sending a transaction potentially to a gateway, because the gateway may be, call it like a reverse proxy that knows where like all the other pre-confers have like registered themselves, and the capacity to find these pre-confers is dependent on the ability to like see them in like the look ahead, right?
Yes, exactly.
Okay. So I guess my view on that is that fundamentally there's a question of kind of how you're going to get the kind of in these pre-confirmations. What we've done with this gateway is we've like introduced yet another, I'm going to call it like a proxy, but we've introduced like one more like trusted third-party layer in the mix of this entity that a user is interacting with that is responsible for kind of like redirecting user transactions. Redirecting is not the right word, but like forwarding user transactions to like another set of like entities.
I mean, that's pre-execution tickets. With execution tickets, we don't have this extra party.
Right, but I suppose that leads back to my original point on some of the difficulties of using kind of this, again, I don't want to call like legacy or whatever, but it is the idea that you said, right? Like fundamentally Ethereum is a conservative blockchain, very intentionally so, right? It has $500 billion on it, is not something that you want to kind of like mess with like a very liberal manner. And so the development of some of these kind of pre-confirmations in what I would call like a best-in-class kind of capability relies on features being added to the L1. And I think one of the big kind of points to like generalize this, right? We have the specificity of execution tickets, and to some degree, I think various inclusion list designs would also provide like benefits to this pre-confirmation design, right? And potentially, ePBS, though I guess we're more transitioning like execution tickets as like a similar solution here, right? For your what was Connor terming? Your ahead of time versus your just in time kind of like proposer auction, right? But fundamentally, these are things that have kind of conflicting priorities from an improvement to like the Ethereum L1, right? Kind of harkening back to the debate with Dankred, right? Fundamentally, there are split opinions on what is the optimal thing to spend effort on in the development, of core development time, of research time, for improving like Ethereum, the L1. And there are questions of whether that effort should be focused on providing, execution tickets, which may be positioned as something that dramatically improves the ability for Ethereum L1 to be used as a shared-based sequencer. But maybe that conflicts with, development resources that would be spent on whether it's Verkle trees or some other kind of, there's a long list of like improvements being, researched and worked on. So there is this kind of divide, and I think this is one of the things we see in L2s more generally, wherein, again, to one of Dankred's points, they've developed their own kind of ecosystem in their kind of community, and one of the things that gives them is this capacity to have their own priorities and not necessarily be kind of beholden to the L1's fundamental ecosystem. So when we think about kind of credible neutrality as like a benefit here, to some degree, it is also it's probably too harsh to say like it reduces to the lowest common denominator, but like directionally in that way, it is saying if you want to have an improved functionality that requires the base layer to improve, you will be dependent on the velocity of that base layer. And again, that's why kind of I, as like an individual, have not kind of historically spent my time in the Ethereum research community. I went to like, more of the Celestia and like that modular ecosystem, primarily, not because I dislike Ethereum or the kind of Ethereum research ecosystem, but because I thought this is a place that is doing very similar kind of directional kind of solutions of, it's still a modular design, but is doing it from a new starting point and is able to have higher velocity because, again, we pay the trade-off of not having, $500 billion of security. You have to bootstrap your security. It's very difficult to bootstrap these networks. But it gives you the advantages of being able to move dramatically faster. And my view is that, that lets us get a product to market sooner. And, a lot of this might be biased by the current market timing and the kind of, mental kind of space you're in where, the moment you start seeing like the coins go up, there is a sense of kind of mania kind of falling upon the broader industry. And so there is this desire to say, we need to get something out now. And when you rely on, an intentionally kind of conservative base layer, you're not necessarily able to kind of keep up. And so I think you'll see kind of divergences from like L2 saying, well, yes, sure, maybe I want, a shared sequencer, and maybe it would be nice to use a based sequencer, but I'm not comfortable waiting, 5 years for that or 3 years for that or however long it is. They're going to work with what, in some ways I think could be argued to be like a less optimal solution, but something that is available now rather than something that's kind of theoretically in the future.
Yeah, so I have a couple of questions I want to ask, but we can also continue this debate. So I have a question that I'm going to ask both of you. We can start with Justin. So this was something that Josh brought up before this panel, was that in classic-based sequencing, all of the L1 validators are participating, and they can all be proposers. But in the design for base sequencing with pre-confirmations, it's only a small subset. And the question is that really based sequencing?
Right. I mean, I have relaxed my definition to base sequencing where like some subset of the L1 proposers are participating as opposed to all of them. Now, one of the interesting things is that I actually expect if base sequencing to kick up, to be successful, that 100% minus epsilon, meaning almost all layer 1 proposers will start playing that game. And the reason is that it's similar to mev boost. Right? Like on mev boost today, I think it's something like 95% of validators use mev boost, which is the vast majority. And the reason is that show me the incentives, I'll show you the outcomes. And the incentives are actually pretty stark. And the reason is that let's assume that only 50% of the L1 proposers have opted in to being sequencers and pre-confirmers. What that means is that your average block time as a base sequencer is actually 2 slots, so it's 24 seconds. And so you're going to be able to get 24 seconds worth of flow and MEV and whatnot. And this is even more stark at the very beginning. Let's say there's only 1%. Well, now you have like 100 times more MEV because your slot time is 100 times longer. So I expect, if we can get through this cold start problem of like 10, 15, 20%, we'll quickly get to 95%. And part of the good news here is that there are large entities and infrastructure builders that are looking to do just that, solve the cold start problem. So I don't want to leak too much alpha, but there's some big operators out there that want to play this pre-confirmation game and they want to solve the cold start problem.
All right, Josh, I'll ask you the same question.
So I guess, can you repeat maybe the specific question?
Yeah.
Because I can talk about the general kind of principle of my view on, is this based sequencing?
Yeah.
And I think my view, or the kind of question I kind of have about that is, if you are requiring a subset, and I agree, right? It's what, 20%, I think, with a 32 look ahead gives you a 99.5 or 99.95 or something, and 30% gets you 4 nines, and that is sufficient, right? And that is, what, you get Lido and Coinbase and Chorus One and P2P or whatever, and you're good, right? Yeah. And so I don't think that's difficult. I think the question is, what is the kind of trust assumption, may not be the right word, but it's how are we defining what is something that is based when we say a subset of the entities, which may be a superset of the entities, are now required to run an additional piece of software that is a sidecar that presumably has higher resource requirements. I think in mev boost, right, we don't, on the margin, right, there are higher resource requirements, but functionally that is outsourced to the relays and the builders and the searchers. But in this case, for the pre-confers, right, we are going to run into a similar situation where, again, we're going to say, okay, the pre-confers, if they want to do it themselves, but as evidenced, right, validators seem to prefer being lazy entities, and now we have once again kind of, and I think proposer builder century is good, but there is this kind of sense in which, and maybe this is a broader kind of theoretical question of what is in protocol, what is out of protocol, right? Is the MEV supply chain part of the Ethereum protocol? Is 93% of the blocks for a year and a half now have run through that? That's kind of part of the protocol. If it went away, things would be problematic. But there is this question of is it still based if you're adding significant software that we assume that a large majority, a super majority of the nodes in the network are going to run, and then we're going to lead to kind of inevitably them outsourcing that once again. So I don't think it's necessarily, I'm arguing against that. I just have a question of when we say something is based and thus it is kind of inheriting just the L1, we are actually assuming we are adding a new software mechanism on top of that. And there are some kind of there's just some consideration that should be given to the fact that we are adding software and we're adding trust assumptions, and presumably there are a relatively small n number of actual pre-confers that are going to be pre-confer to that as whatever the entity we call that the pre-confers would outsource to do the whatever, the builders, the L2 builders, searchers, whatever.
Yeah. No, yeah. We want the validators to not be sophisticated, and if they do run sidecar, it should be minimal on the same order of magnitude as mev boost. And the gateway idea is basically all about that, right? You just delegate to a gateway. If you're not happy with the gateway, just choose another gateway. But all the heavy lifting is done by the gateway. And then even cleaner than that, where you don't run any sidecar software whatsoever, you don't even run mev boost, is execution tickets.
Mm-hmm.
All right, anything to add to that, Josh?
No, I guess I disagree. But
Okay.
it's one of these things in a year, is Yuki going to write a blog post that's going to be no one cares about the gateways? Who is thinking about incentivizing the gateways?
Mm-hmm.
The ultrasound gateway.
Yes, the ultrasound.
All right, so this question will be for Josh. So you talked a lot about how Ethereum has a lot of legacy issues, and maybe another project that can really make a specialized piece of software can come in now and offer this solution. So what is your view in 5 years, when maybe Ethereum actually they can implement execution tickets, maybe have zero or real-time proving? Do you still see a space for a separate sequencer entity?
Yeah, so I guess I don't think it's necessarily the there's like two sides. There's like Ethereum comes with extra things you don't necessarily like need or want for like the specific subset of tasks you're trying to do, right? It is like a batteries included thing, right? It has like an execution client. You're like, do I actually want like a full EVM to do like my sequencing or whatever, right? And then there is the question of like, to like the 5-year timeline of like, does it take like 5 years to add in like a core functionality that provides like an enshrined or like an in-protocol kind of solution to that? So I think trying to predict 5 years out, like props to you, Justin, for working on those timelines. But like I have been in crypto full time for a little over 3 years now. Trying to predict 5 years out sounds like a completely absurd kind of like guessing game to try to figure out like where the state of the industry will be, because it's been very, very different in the 3 years that I have been here. But I do think, if anything, we will probably see like more things because, again, execution tickets were discussed, 8 months ago is this so when they came out, right? It's like an idea. ePBS was 24 months ago or something like that. It's like, was it 2021?
ePBS is quite old, but yeah, execution tickets is from October, December.
Yeah, so as an idea, it is like a relatively new thing. And so to think, well, in 5 years, we will implement the idea that we have thought about for 8 months. And you're like, well, presumably in the next 5 years, we will think of some new things. And I think there's an inevitability of, I don't, and this, I think this applies to software generally. I don't think there's like a fault of Ethereum. I think it's just like how software works. It's like, I don't see the velocity of Ethereum kind of implementation kind of accelerating. You hear people talking about like the ossification. So whether it is like execution tickets are resolved and then you say, okay, great, well, we can get rid of like the gateways and we can get rid of the relays and whatever. And we've like gotten rid of a bunch of like sidecar software. But like I presume in 5 years, the blockchain space, if we go to like Tamasha's talk, right? Where are we going to be with like the AI chains, the AI agents trying to trade on chain? And maybe there is something where you say, well, okay, now we have like some sidecar that's trying to like wrangle the AI agents and maybe we'd like to enshrine the whatever AI agent like wrangler thing. We're just wildly speculating. It's just saying, 5 years is a very long time, and I think there's inevitability of like, there is value to creating new things that satisfy a problem. I think one of the questions is like, how you avoid constant bootstrapping issues for this. To some degree, it's just like inevitable, but you can kind of find a balance, and it's like why we don't want like, only large corporations. It's like beneficial that like larger entities, corporations, chains, foundations, whatever, slow down over time. It leaves room for startups to kind of come in and create something like newer that is like with just like less, right? It's like a more minimal thing, but it solves the task kind of more neatly because it's not trying to do many things. So I think that's just like an inevitable, like it's not a crypto specific thing, it's like a market structure thing.
Mm-hmm. Makes sense. Do you have any response to that, Justin?
Yeah, I mean, I do agree that you want to move fast, and maybe we'll reach the singularity within 5 years, and so Ethereum's roadmap is kind of useless. I mean, I guess there are trade-offs, right? Because from an economic security standpoint, right, you're starting from scratch, and so Ethereum has $130 billion of economic security. Like, how are you going to compete with that? It also has credible neutrality. It also has all these network effects. So I think that there is a trade-off, and sure. I think it's important to be the last mover, not the first mover. I mean, one of the things that Josh mentioned a while back was, okay, in terms of, how do we prioritize execution tickets? That's something that we need in order to get like best-in-class pre-confirmations, and I agree with Josh. It turns out that just very luckily, execution tickets have a whole list of advantages. One is that they remove proposer timing games. So right now, proposers are incentivized to play timing games where they delay the get header call so that they can get more MEV. And we're starting to see sophisticated operators do exactly that. That goes away with execution tickets. Another one is MEV smoothing. So right now, as a validator, I'm incentivized to join a pool because MEV is like really spiky and it's basically a lottery, it's gambling. If you love gambling, fine, but like most people just want to run a business or have like predictable yield. Another really cool thing that execution tickets give us is MEV burn, where the MEV no longer leaks to the proposer, but it leaks to the ETH holders. And there's like all sorts of reasons why this is a better outcome, like monetary policy reasons and just sustainability reasons and whatnot, and predictability reasons. And then they also remove the relays, right? We want to get rid of the relays, and execution tickets help with that. And so in some sense, pre-confirmations is like an afterthought benefit of execution tickets, but I think they will be heavily prioritized in the months to come.
All right, so I have one more question, and it's for Josh. A common criticism of outside sequencers is that they can never attain the economic security of Ethereum. How would you respond to that?
Yeah, I mean, I think that's like, it's not true in like an absolute sense over like an infinite timeline, but like, yeah, I'm not kind of assuming like we're just gonna like, ramp to like $500 billion on like any new chain, right? There is fundamentally like it is at a level where like you can't just inject that much money. There's just like, even at like a nation state level, there's not just like that much money sitting around to like inject. The degens can like bid up what they want, but like usually that's gonna fall out at like 10 billion or something like that. So I think that's true. I think one of the questions is kind of like, what is the level of like what is the actual attack like user story that occurs that is like susceptible to like a lower economic security? So I think we all generally assume like, people would notice if someone was trying to acquire like adversarially like whatever, like $170 billion of ETH. Like that's just not gonna go unnoticed. But I guess my view would be that number is actually probably like quite low. It is fundamentally one of these things in the kind of like, there are the pros and cons of like centralized points in the system, where if someone's like, say a chain goes off at, it's at $2 billion or whatever, right? Which is like a high number, but like given the market, that's not like an unreasonable number for like a new network to kind of like achieve over like a 6 to 12 months time frame. They're inevitable to like new chains of like, well, most of that's probably going to be like locked for like 12 months, so you just can't even do it. It's like 17% or whatever, or like 20% or 30% is like floating. So there is that. That is obviously like problematic in like many ways, but there is like okay, you can't attack it because literally like the coins are locked, but as it comes unlocked, right, you have like centralizing vectors, right, of like, okay, the early investors are probably going to own whatever, like 3% tranches. Are they just going to like market sell that? If they say, hey, you have like 5 large investors, and like, one person said like, hey, one guy like messaged all of us and wanted to buy like all of our things, you're like, someone is probably going to like raise an alarm, similar to even like, where are you going to get kind of liquidity on these things, right? You're going to be like, okay, Coinbase, Binance, OKX, right? You're like, someone is also going to be like, hey, someone is buying like all of the coins, of one thing. So in like a proof of stake system, it's just like how actually like low is the bar? I don't think we've like, I think ETH Classic had like some forks like immediately after, right? Somewhat before my time, but I don't think we've ever had like an actual like economic kind of like attack of that form. So my view is like, it is like a good thing to consider, but it is somewhat of like theoretical is too weak from like it's not a real concern, but it is like less of a concern than I think people worry about, in that like in these newer chains that are using the kind of standard, VC distribution mechanism, your risks are probably going to be more like regulatory from like, you have like too many insiders, saying less so like someone else is going to be able to like, adversarially take over the chain. So I think it's a different design space. Again, there's problems with that. It is not, credibly neutral. It is not like permissionless. It is not like truly decentralized. I would argue that you probably see like 10 chains that we would probably call like decentralized, like if that. So yeah, I'm not overly stressed about that attack vector. And again, it's one of these things that like the way the price action on these things work, like the value will kind of rise, like corresponding with like the usage of it. I don't think we've seen evidence of like a chain that had like, like whatever the PO, the proof of stake value of like a chain's validator set was like $1 billion, and there was like $10 billion of TVL in the chain. I don't think we've seen evidence of like that ratio happening. So just not an immediate kind of stressing point. But I think there's the truth, right? It is weaker security.
Okay, you want to give a quick rebuttal?
Yeah, I mean, from a fundamental standpoint, the way I think about it is the security ratio. Like, how much value are you securing, and how much is being secured, and how much is securing. And I think a security ratio of, let's say, 100 is like reasonably good. Like, if you want to try and extract toxic MEV, maybe you can extract 1% of the TVL, through market manipulation, let's say. And if we want to be the settlement layer for the internet of value, and we want to have $1 trillion secured on Ethereum, then yeah, and you want a security ratio of 100, then you need $1 trillion of economic security. And so you can't just think about it in absolute terms, you also need to think about it in relative terms. The other thing, which is kind of less fundamental and more mimetic, is this idea of a shelling point. Like, what is the blockchain that is the most secure in the world? Because that is a magnet for devs, it's a magnet for users and whatnot. Because that is the one that is most credibly neutral, going to live for decades and centuries, is the one that has the most robustness. And so again, it's not just about the absolute number, it's also about the relative ranking of the economic security.
Okay, so we're running a little short on time, so maybe each of you can give your closing remarks in like 60 seconds. Go ahead first, Justin.
I guess I'm just still extremely bullish on base sequencing. I think I do agree with Josh that we do need to move fast on the execution tickets. That's, for all sorts of reasons, not just pre-confirmations. But in the grand scheme of things, that is a minor detail, and I am confident that the Ethereum community has gained this flexibility, this hard fork muscle. Like, we were able to pull off the merge. We are able tomorrow, let's fingers crossed, pull off proto-dank sharding. And I think if we can get proto-dank sharding, then we can get execution. That's like so much simpler than proto-dank sharding or the merge.
All right, Josh, 60 seconds.
Is I guess I'd say I'm all in favor of Ethereum. I strongly supportive of them getting execution tickets, and I think it's been very impressive to get the merge done. To see 4844 finally get out the door. I think that'll be very exciting. I do fundamentally think there's room in the market for competitors that can act as a positive kind of forcing function, right? What you don't want is there to only be incumbents in the market, such that they don't have exogenous kind of forcing functions to say, hey, you have to move quickly, because otherwise someone is going to try to take your market share. So I think my view is not necessarily adversarial to Ethereum in a sense of I am competing with Ethereum, but it is in the interest of we want to create competitive pressure so that the overall space can kind of improve as rapidly as possible, and everyone kind of has sufficient incentives and motivation to kind of do their best work.
All right, thank you both. This was really great discussion.
Thank you.
Are we live? We're good? All right. Hey, everyone. How's everyone doing? Long day? Great. Yeah? Anyone still tracking prices, or are we fully tapped into the infrastructure now? Rev prices? Everyone's below the seat, checking their portfolio? Okay, I'm going to talk about Cake. So I spent a lot of time looking at the MEV stuff. I was previously a founder at Flashbots, and then I left. And then I'm actually more interested now at the application layer. So I want to talk a little bit about that. I want to talk about how MEV is actually critical for the application layer. I think we heard in many of the previous presentation, MEV will be solved at the application layer. The application layer is going to, take away the MEV, so we don't need to worry about it. So I guess my role now is to say, how does that actually happen, and sort of provide a framework for people to think about it. So Ankit and I, Ankit over here, we work at Frontier Research, and we put together this thing called the Cake framework. So, what is Cake? If anyone was here in 2019, it was amazing. The community was tiny. There was maybe, 100 developers in the space, and we all knew each other. We all hang out together, and then we built these really cool applications that no one used. And it was kind of fun, but also sad, because as soon as a user tried to use a Web3 app, they just had to pay $200 to be able to post a message. And so it was very clear that there was a fundamental problem with the way that development on Ethereum happened at that time. We had the usability. We had applications that had account abstraction, that had gas fee abstraction, that was fully based on stable coins, and so the user could go directly from credit card to onboarding. But we didn't have the scalability, so it kind of didn't matter. The users didn't come. Fast forward a little bit of time, and we find ourselves in this situation where we have a really damn complicated network of middleware that all try to solve some specific niche edge case solution and need for application developers that are higher up the stack. And this complete mess also has resulted in all the L2 landscape that we have, all the different rollups that we have. I wonder if anyone has tried to use cross-chain application. Has anyone put a hand up if you interacted on multiple chains? Okay. Put your hand up if you would classify that experience as easy and user-friendly. All right, so this is kind of the scenario that we're at, right? Every wallet has multiple different chains. You have to pick your RPC. You have your favorite brand of rollup that you want to use, either your red, blue, green, who knows. And then you also have to bridge your assets. You have to build your bridge. You don't know if the multi-sig behind the bridge is going to rug you or not. It's a bit of a mess. My take is, if we are to make the most of all the middleware that we've built, all the stuff that we've built, and actually build applications that are going to deliver on the dream of Web3, we need to do better from a UX perspective than the status quo that is today. And so that's what Cake is all about. It's about providing a framework for thinking about all these Legos, all these chain abstraction Legos, to build better applications. And hopefully, in 2024, we can have applications that are actually usable. That's the dream. We have a new set of users that are coming into the space. We have block space scalability now. I think this is probably the most exciting time to be building Web3 applications. And I just hope that we make the most out of it. Because I've been through 3 cycles already, and I'm ready for actual applications and users. And we're close. Actually, I want to do a show of hands. Who has used Telegram bot? OK, so we have a decent chunk of people. So Telegram bots are actually probably one of the coolest applications in my mind that exists on Web3 today. It serves one of the core use cases, which some people look down on, which is speculation. But that's where a lot of the demand for blockchains is today. And it does so by abstracting away a lot of the complexity of interacting with blockchains. So I would propose that Telegram bots are actually a great example of the cake. They take care of the application layer and offer that in a way that's most optimized for user experience, and they hide away all the complexity of what sits beneath it. We present a framework that has multiple different layers and trade-offs in the design of the components beneath those layers. And we think that it would be good for application developers to have a simple, unified interface to be able to tap into all of this, instead of having to navigate a bunch of different wording and branding and terminology across the different things. I don't know, does that sound like a good idea to do? I think so, right? Yeah, OK. I want to have a quick show of hands because I want to read the room a little bit. We've segmented the cake into the application layer, the permission layer, the solver layer, and the settlement layer. By show of hand, who here is working on the application layer? Wow, we have 3, 4 application layer people. OK, we're an infrastructure-heavy team here. Who is on the permissioning layer? So wallets, signatures, permissioning, intents, maybe. A couple people. Who is on the solver layer? Who's building solvers? OK. What about mempool, routing, auctions, all this kind of stuff? Yeah, OK. The solver crew's over here. And then the settlement layer, bridges, layer 1s, anything related to execution, oracles. What are all you guys building? There's no one else putting your hand up. OK. All right. So we have a mix across the cake here. So I'm super excited about this. Like I said, I think it's the most exciting time so far to build Web3 applications because we have the block space scalability. But please, 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 let's build it in a way that actually makes user experience great. I'll pass the mic over to, oh yeah, this is my meme. I'm basically saying, a lot of this is possible because of MEV. I want to clarify this. So to me, Mev Boost represented one particular shift in mindset for the development of the Ethereum ecosystem, which was breaking away from the Ethereum transaction format. So when you shift over from a pre-PBS to a post-PBS world, you introduce, yes, this specialized role that is a block builder that we spent the entire day today talking about. But what this block builder can do is actually introduce new transaction types. And those are often referred to as intents, and we're talking about pre-confirmations and all kinds of cool stuff. I think these are all critical components that lead towards what is cake, and actually enables better user experience for users. So this means everything is cake, and cake is inevitable. So yeah, we'll see more about this later. We have a working group. Actually, we're doing a session on Friday with working group members. So if you're building something that's relevant and you'd want to participate, we'd welcome your participation. It'll be in the same space, I think. So yeah. All right, I'll pass the mic over to Ankit, and he'll talk about why chain abstraction and the different trade-offs in them.
Hello. So thanks a lot, Stefan, for introducing the cake. Let's talk about why chain abstraction. So I'll talk about three things. Why chain abstraction? What are the trade-offs with chain abstraction? What do we even mean by chain abstraction? And what are the 6 designs or 6 pieces of cake that emerge from if you want to build something like a chain abstraction experience for the end user? Let's go back 20 years. Suppose SMTP, TCP, HTTP, all these standards had not emerged. And you have this PDF of your wedding, and you want to invite people, and you want to send this PDF to all your friends. What do? You basically Google an email aggregator. You basically type your to and from address, you paste your PDF, and you get this list of 3 options on how are you actually able to send this PDF to your friends. So there's a fast option where you pay $20, but it's very quick. There's a medium option, and then there's a cheap option where you have to wait like 20 minutes, but it's very cheap. And then you go through this, and then you somehow send this PDF to your friends, and you get a wrapped version of the PDF after spending tens of dollars and after spending tens of minutes. You get this wrapped version of PDF. It does not even have the date. And so you have this experience of you spend so much money, you spend so much time, and you do not even get the actual PDF that you are trying to send. Thankfully, that did not happen. Thankfully, we had HTTP, TCP, SMTP, all these standards that emerged, where instead of going through this loop or hoops of spending a lot of money, a lot of time, you have this experience, seamless experience of drag, drop, and send. And these delightful applications could have been built just because you have these set of standards where the users do not care how they're interacting with these underlying layers of the cake, of the Web2 cake. You have just this delightful experience that is available to be built for the application developers. Unfortunately, this is what we have today in crypto. So you have these different rollups. You need to have money to spend for fees on all these different rollups. Every time you switch a rollup, you need to somehow do this, which is very irritating for me personally. And then when you are trying to move assets from one chain to another, you have these list of options, and it takes a lot of time, it takes a lot of money, and it just causes a lot of friction, it just causes a lot of user drop-off, and this is not what application developers want. We still have a lot of activity on all these rollups. It just shows you how powerful economic incentives are. But if you want to build delightful experiences, this is not what you should give to the users. So what is chain abstraction? So block space is abundant right now. You can literally one-click deploy a new rollup. What is the bottleneck is the UX. How do you move these assets from one chain to another? And so the chain abstraction is an ideology where the users should not know what network they're on. The user just connects their wallet to the app, clicks on what they want to do, and then in the backend, in the infrastructure layer, everything that happens needs to happen. What network needs to be deployed is a dApp decision. The users should maybe not care that much about it. And in our opinion, chain abstraction will lay the groundwork to build the next set of applications, and will lay the groundwork to bring in the next magnitude of the users, where most of the users might not care about some of these constraints, and they just want delightful application and delightful user experience. So that's chain abstraction. Let's look at what are the key trade-offs that if you are building a chain abstraction framework, if you are trying to build something like this for application developers, what are the key trade-offs that you would want to take into account to somehow answer some of the questions that emerge during different layers of the cake. So the first question that you want to answer is what type of message or what type of thing that you're trying to transfer between two different chains. Are you trying to transfer a message or any type of information, or are you trying to transfer value? So if you're trying to transfer message, then messages are all type of information, any type of information, but it needs to be lossless. So if you are trying to participate in a governance vote, you do not want your yes vote to be converted into a maybe. And because it has to be lossless, it has to use the most secure pathways. So it covers all types of transactions, and some examples are governance votes, approvals, stuff like that. The second type is value transfer. This is what blockchains are made for. It has to be, you need to conserve this like scarcity and atomicity properties when you are trying to transfer value. And so you need to do this in a lockstep fashion where you deduct funds from the sender and you credit funds into the receiver. And it can be lossy. Because it can be like if you are transferring $100, you are happy maybe by just receiving $99 and you pay $1 to whoever is the third party or a counterparty that is trying to facilitate that transaction. And so you can leverage third parties to basically facilitate that transactions. 95 to 99% of the transactions today in blockchains are value transfer transactions. This is measured by the gas paid. And some types of value transfers are transfers, swaps, gas, stuff like that. The next set of trade-offs come based on how you are trying to leverage the solvers into different layers of the cake. And so if you decide to actually leverage solvers, how you bring in solvers into these different layers of cake bring in their own set of trade-offs. And so if you are on the permissioning layer, there's this trade-off between UX and agency. And so different users have lie on a different set of spectrum on how much control they want over the transactions versus how much they are willing to let go to different sets of applications. And so like EOA accounts are accounts where users have almost all the control. And then account abstraction wallets are where users are willing to find a counterparty to pay for gas. And then policy-based wallet like Telegram wallets or near wallets are where the user just signs one thing, and then maybe there are 30 different things that happen in between, all in the back end. The user just does not care about it. It just happens for them. And so there is a spectrum between UX and agency, which these different types of wallets or permissioning systems basically give to the users. The second thing that you need to figure out is how do you find the optimal path. So suppose you want to do something cross-chain between chain A and chain B. There might be 30 different things that the solver needs to do or the user needs to do. You, as a chain abstraction layer or chain abstraction framework, what you would want to do is you would want to bring in multiple set of solvers who can look at what the user wants to do and find the optimal path. And they have their own competition in between, and they find the optimal path and give it to the users. But because there are multiple solvers who are looking at what the user wants to do, the state of these chains might deviate, and you might lose on some execution guarantees. And so this is the trade-off that you want to resolve on the solver layer. And on the settlement layer, what you would want to do is solve this trade-off between low fees and execution speed. And so if you want to transfer information, if you want to use the most secure pathways, you would want to wait for finality guarantees. And so if you want to exchange information between two chains, you would wait for finality, you would wait for economic finality or any type of finality that you want for. And that introduces some time delta. Whereas if you take on some solvers and they're willing to take some risk, they would charge for their services, but they're willing to take some timing or finality risk and give you that service in exchange. And so, all these different trade-offs bring us to the 6 different designs that we think emerge from these different sets of trade-offs. To just recap, like there are 5 trade-offs. One is between information and value transfer. The second is between the user agency. The third is between fees, execution guarantee, and speed. And so based on these three trade-offs and how you can bring in solvers, there is this trilemma that emerges between execution guarantee, fees, and execution speed. And if you want to take only execution guarantee and low fees, what you would want to do is just use the in-protocol paths. Just use paths that are determined by the protocol. So this might look something like a based sequencing, or this might look something like an IBC on Cosmos. If you want to improve your speed, what you would want to do is bring in solvers into the system, bring in solvers into your chain abstraction framework. And so if low fees and execution speed is to be optimized, then you would want a solver competition where multiple solvers look at your order flow and compete with each other to find the optimal route. And if execution guarantee and execution speed is preferred, then you would want the solvers to come not on price, to compete not on price, but on speed. So based on the trade-offs that emerge, these are the 6 pieces of cake that emerge. All of these different designs of how to transfer value or how to transfer information between different chains are, in our opinion, their own set of product market fit. They are they're also a little bit composable with each other. And so if you want to transfer value and you want to use the in-protocol paths, then a good example is USDC CCTP, where the token team comes in and says, oh, on all of these chains, this is our canonical token address, and this is the bridge that has the right to burn and mint the tokens on all the chains. If you want to do message transfer, but still use this in-protocol path, still let go of speed, but have good high execution guarantees and low fees, you would want to go with an ecosystem-aligned bridge route. So this looks very close to like a Schelling point of an ecosystem, where an ecosystem says, okay, this is what we are providing for you, and then all the application developers can gravitate towards that. And so this things like IBC, Aguilera Polygon are examples of ecosystem-aligned bridges. There is one issue with the roll-up roadmap, which is in IBC, because Cosmos has very fast finality, you can very quickly basically pass messages in an in-protocol path. But because rollups or optimistic rollups are 7-day finality, like that is a very slow path for all the users. And so what ends up happening is applications tend to start bringing in solvers to basically give that speed to the users. And so if you want to transfer value and have a solver competition, then you would want to bring in multiple solvers, and whoever has the best price, you will give that order flow to them. So examples are Jumper, Bungee, which are competitions of these bridge protocols. Uniswap X is a competition of solvers. And then if you want to do multiple types of messages, then you would go the wallet route, where things like Near, Avocado, Alfred are examples. These look like super apps, aggregators or aggregators. So this looks like an aggregator, but this looks like an aggregator of an aggregator. And so if you want to go for speed, then what you would do is you would bring in all the solvers, but say, hey, like whoever is the first will get the MEV or will get the execution rights. And examples of this are across. And then finally, if you want high execution guarantee and low fee, high speed, then basically you would go the exclusive batch auction route, which is very similar to like execution tickets. And that's what Robinhood uses as well. And so these are, in our opinion, the 6 pieces of cake, 6 different products that emerge if you are trying to give that cross-chain or chain abstracted experience to application developers. And so to conclude, we think that the users, a lot of the users that might come in the next cycle do not care about what network they are on. They just want delightful applications, delightful experiences, and that's what chain abstraction is all about. We introduced the cake framework, which is a way to think about how these different layers interact with each other, what are the trade-offs in each layer. And I think like if we want to give this delightful experience, then we need to define or we need to adopt a common standard to basically move these messages across. So that's all on my side. Thanks a lot.
Can you hear it? I'm starting. Good, good. Okay, sweet. Let me find my slides.
Sorry, my bad. It's literally here.
Ah.
Let's go. What we do.
Okay, hello, hello. All right, we don't have much time, so I'm going to get started. Please stop talking. Okay, cool. Last talk of the day. Cool. Thank you. Thank you. Yeah. Cool. All right, last talk of the day. You should have a notepad under your seat. We're going to be doing some differential equations. No, just kidding. There will just be a couple jokes, some shilling, and then maybe a panel. I'm not sure. Okay, cool. Yes, so Suave, a big node framework. So if you haven't been around all day, often we've been talking about this framework of small and big nodes. The TLDR it's a much simpler sort of mental model for thinking through protocol actors instead of having like 15 different actors all across multiple different domains. You have two. You have big nodes. These are heavy resourced machines. These are typically block builders, sequencers. They potentially run multiple VMs and benefit from the network effects of operating multiple VMs. They also do things like data availability sampling and generating like ZK snarks, all for the small nodes who are like validators of chains. And they sort of take this information. They will just validate the blocks that come out of these nodes. Cool, so let's get into it. So what happens when small nodes and a big node love each other? Well, you get a scalable blockchain. What happens when small nodes and big nodes love each other? That's plural big nodes. You get a scalable, decentralized blockchain. And this is basically the end game. And so, multiple paths sort of lead to this world where we have a couple big nodes producing blocks and just tons of small validators validating these blocks. And some of the key points are you need one honest builder to serve the network for liveness and censorship resistance. We only need two for an efficient market. And we just need an honest majority on the validator set to remain decentralized. So why do big nodes need small nodes? Well, they're searching for validation. Joke from Quintus. So do big nodes and small nodes always form a happy union? There's like two ways to look at this. One is L1 PBS. The other is L2, so sequencers. Generally, we haven't seen too many issues with sequencers and L1 validators becoming too annoyed with each other. And also, generally, on L1, we've also seen that this union is like pretty happy. Block builders make validators much more money. Validators now don't need to do this heavy computation that would probably take them ages to be able to spin up, or they would most likely outsource anyways. There's one small exception of the unbundling attack, which happened. I won't go into it, but someone spun up a validator and then abused some trust with a block builder because of a bug in the mev protocol. But yeah, so we talk a lot about this big node and small node union, and particularly in the context of PBS. But one thing we don't talk a lot about is how users fit into this picture. So we're going to dive a bit into some of the ways in which users are perhaps disadvantaged in this union, with a case study on the big nodes on Ethereum. So if you've ever read the Daily Mev, it's a very hot newspaper here in London. So one of the concerns is builder centralization. And so, as we mentioned, we just need two for an efficient market. We've already reached points where there have been builders that have gotten over 50% of the blocks won in like a 7-day period, I believe. And so while we only need two, and that still leaves room for two, that's great. The jump from I would say like from 10 to 50% or even 1 to 10% is much larger than the jump from 50 to 100%. And we've already anecdotally heard that builders that are, one of the builders that has gotten over 50% is like self-limiting the amount of blocks they won, which is sort of a story we also hear with liquid staking pools. Another one is builders leaking private transactions. This has happened on multiple occasions. A user trusts a block builder with their transactions. There's an agreement, they won't leak it, and for some reason it comes out. Another one is builders leaking block data. So often, there's been a few scenarios where, so at the end of the block, there's still some like arbitrage left on the table. So block builders are trying to capture this by giving, information or the ability for searchers to backrun the entire block. And while that's great when the user consents to this, you plug in an RPC, you know where you're sending it to, they publicly advertise that this is a functionality they do. Some block builders are not advertising this functionality and they still do it behind the scene. And additionally, we have no observability into this type of behavior, so it's potentially risky. Additionally, you can imagine really bad scenarios where, like, if there's a white hat rescue transaction involved in the block, this now gets leaked, and it's concerning. Builders backrunning user transactions is another one. There's multiple order flow auctions on the Ethereum network today. This is a way for, me as a user, I submit a transaction, I let a network of searchers submit backruns. This service then picks the best one and sends it to block builders. We've seen some scenarios where block builders are backrunning these transactions as well when there's still MEV left on the table and they're not attributing it back to the user as these protocols were designed to be. Builder verticalization, this is also a story as old as PBS. So there's verticalization between searchers and builders and relays. Now we're also hearing stories of builders also directly petitioning validators to vertically integrate. And then builder incompetence. This is just, it's hard running a big node, so it's hard to estimate the amount of value that's been lost by hiccups in builder infrastructure. Okay, so taking a step back, what properties do we want from the market? We mentioned liveness, so we want it to be expensive to cause missed slots. We've already seen, relays which operate in optimistic mode, failing to demote builders who have submitted invalid blocks, causing to, I think upwards of 7 to 10 blocks have been sent to the network that were invalid, and the chain doesn't halt, but there are no transactions during this period, which is bad. Censorship resistance, so there's multiple mechanisms there that are being worked on. So CR lists are a popular one. Also, multiple concurrent block builders or proposers is another interesting space. User protection, so encrypted mempools and then credible compute. As a user, I would like to know that what the builder advertises is what's actually being run on my order flow. And then there's a couple other ones like revenue maximization, geographical decentralization to avoid regulatory capture, and permissionlessness, which we won't go into. So there's two relevant trends here. We expect big nodes to continue to be a thing and to continue to become larger and larger. Searchers are becoming more sophisticated, solvers are becoming more sophisticated. We even have ZK provers and ZK prover markets that are now coming online, which are additionally requiring more and more resources to do their job properly. And then lastly, we also expect it to be useful to be able to hook into this logic in a much more customized manner. And so that is basically, you want your application to hook into this like big node block production process. So one example of this is the CowSwap protocol. Users send in intents and then solvers find the best route through these intents to match users. So they have a piece of off-chain infrastructure which scores these solutions that solvers send in. And it's the case that often, or not often, but sometimes because they score these solutions on top of block simulations, where it actually gets simulated, where it actually gets inserted in the block once it lands on chain is actually subpar compared to a solution they threw out. So this is just one example of how being able to more intimately hook into the block construction logic is ideal. Again, though, that would to be able to use this functionality requires more resources and to be a bigger node. So we believe, obviously, that Suave is the answer to both of these trends. We want to satisfy these ideals and then also provide a generalized platform for anyone to be able to build on top of this and insert your own logic. So what is Suave? In sort of the joke theme in the beginning, it's a prenup between the users, the big nodes and the small nodes. Users want to be able to enforce certain guarantees between these parties before they are to join in holy matrimony. So yes, you can think of Suave as a programmable mempool that you can put your big node on top of. We provide a couple things. One is advanced privacy primitives. So from our experience in running mev.share and some of our other off-chain applications, not one set of privacy rules fits all applications. In fact, some applications don't want any privacy. Some applications like dark pools want complete privacy. So we give you the ability to program your privacy primitives. Next is credible compute capabilities. So this is, as mentioned earlier, you want to be able to ensure that when you use a builder, they're doing what they said they did. And then low latency message passing is obviously another feature to basically allow communication between a lot of these big nodes. So yeah, applications on Suave can take on a variety of forms. Mostly in this talk, we're discussing block building. So you can imagine a block building protocol as being one of these big nodes that lives on top of this programmable mempool layer. But additionally, you can build trading protocols, OFAs, searchers, and even crazy stuff like AI and Web 2 applications. We do have an LLM running in a TE. Talk to me later about that. And then the other cool thing is typically you get no composability in the off-chain environment, but because we're using Solidity and trying to put as many of these nodes on sort of the same cluster of hardware as possible, you actually can achieve off-chain interoperability between these protocols. So what does it mean to build your application on Suave? Yeah, so it's a place where you can define this off-chain logic, whether it's block building, whether it's an auction, whether it's intent, platform. It's also a way to define your data storage requirements, and then if you want to make your application decentralized, you can also define consensus and like your peer-to-peer protocol as well on top of it, and then as well. In order to keep with like the current paradigm where when you deploy a smart contract on L1, you don't have to operate it anymore. You can also pay a network of TE coprocessors to run this application for you all autonomously. You could even do crazy things where perhaps the protocol pays for the fees itself. Yeah, and then it's also a place to define multi-chain applications. So in that previous example, let's say you had protocol logic with your Ethereum node set up. You could also do, you could set up a cluster of these nodes running with like, an optimism chain node and allow these two to operate together and settle like cross-chain intents. And you can keep kind of stacking these like protocols on top of each other, sort of like Legos. Yeah, so the TLDR is basically, if you're looking to provide your users guarantees that you're not abusing them, we provide, the Suave platform provides integrity on your application logic. If you're looking to provide your users privacy on their data, we also offer trusted execution environments, which are available today, as opposed to sort of like a lot of other solutions like MPC and FHE, which we also hope to support, but are just not latency compatible with the current requirements. And then additionally, we provide you a way to decentralize your application. Yeah, so that was basically it on the sort of explainer of how how you can run your big node on Suave. And so this last section, we'll just talk a little bit about what people are building, because they be building. If you have ideas, come to the Flashbots forum. We will help you validate and build them. There's already been a ton of examples on that. The first one is we've had a POC of integrating Suave as the block builder on Astria, which is super cool. I recommend checking that out. We've had a composable block building example by Jinsuk at Nethermind, who it's essentially a protocol for a block builder to work on half of a block and then share that with another block builder, but still be able to come out with one coherent block and distribute the revenue between them. Miha from Eden Network also has built a Binance Oracle, which is super cool. A super cool primitive if you're trying to build like some type of LVR minimizing off-chain auction. We've also had an example of a frequent batch auction that was built. We had a hackathon project to build a blob merger, which is exciting since blobs go live tomorrow. We think this will be very interesting for roll-ups, especially smaller roll-ups who don't need the entire blob space in the next couple of months. There was also a multi-chain intent application that was also built and prototyped. And then lastly, this isn't a prototype, but we've recently been getting a lot of interest for supporting RIP 7560, which is a standard for native account abstraction. And so this would allow you to, set up a wallet on Suave, which allows you to control remote accounts on separate chains, all from that chain. Yeah, so that's it. Come and hack on the Alpha Original testnet. That's our Suave testnet. APIs are in flux, though, so it is for true pirates only. Thanks.
How's it going?
Hey man, how are you?
Very good.
You've been talking a lot today. I listened on my my ride over, the airport over. It's like listening to these debates. It was pretty cool.
Oh yeah, the thing that he was.
Yeah. So this is the end, yeah?
You caught the last. We're closing it up.
Justin, you're good?
We're sending everyone with the drinks.
Kind of cool.
Okay, let's get started. So.
Good job.
Thanks, Quintus. So we have, I think, a closing panel on application-specific sequencing. And basically, one way to categorize sequences in my mind is that you have the general purpose
sequencers that will cater for general purpose rollups, as well as some more specialized virtual machines. And then you have a completely different type of beast, which is the application-specific sequencer, which for some reason or another, they've decided to not opt in to the largest or the de facto shared sequencer. They have like very, very good reasons for doing something else. And I guess one type of example here could be gaming, right? Like I might want super low latency or super high uptime, or like I want to very precisely control the fees that I have to pay for sequencing. I don't want to be subject to activity from other applications and suffer MEV spikes and things like that. I think another potential use case is DEXs. So right now we have this problem where DEXs like Uniswap leak MEV, specifically the SexDEX arbitrage opportunity, to the proposer. But there's these ideas, like Sorella, like where when you introduce an application-specific sequencer, and then now you have the opportunity to auction off the MEV opportunity and rebate it back to the LPs so that it no longer leaks to the sequencer, and that's actually net beneficial to the users. In some sense, it's returning MEV to the users. And we have a very similar idea with oracles and with liquidations. And so I guess like my first question is, do you agree with this dichotomy of shared sequencer versus application-specific sequencer? And like, what other applications do you think could make sense to basically use an application-specific sequencer?
I got ideas. Okay, so this term application-specific sequencer is kind of new to me. I kind of like it.
It was coined yesterday.
Yeah, it's coined yesterday. Okay. It's interesting.
I thought we were done with this stuff. Come on.
It's a good meme,
I thought I was the only one that didn't know what it was. I was like, what's like code? What's going on here? Okay.
It's gonna be on a panel. Gonna be on a panel on applications. But here'd be my argument. Okay, so because Justin, we've talked about this before. You're a futurist. You're thinking 5 years out, right? And generalized things seem great 5 years out. Today, the killer app or the broadest use case of a lot of these blockchains and where most of the MEV comes from is from trading. So in a multi-chain world, it's going to be swapping assets from chain A to chain B or bridging the same asset from chain A to chain B. And I have 2 points here. So first of all, it seems logical that you may want to today design a specific solution to capture MEV and make this like killer use case the most efficient and offer users the best execution today. That seems logical given that it's a big part of the market. And part two, with trading in particular, there's another feature that allows you, that actually opens up the design space, which is the fact that these assets are fungible. So if you're going to fill a user on a different chain, you can literally just fill, it doesn't have to be the asset on the origin chain. You can just, whatever the same asset is, you can fill them. And so the bridge, which can do swapping that I work on called Across, takes advantage of this in this like quote unquote intent-based architecture, to use other buzzwords, where we're using the fungibility aspect to fill users on the destination chain in a sort of application-specific sequencing, if you will, where the market makers are purely taking on the risk of best execution or competing for best execution for the user. And we are laser focused on trying to make that be as efficient as possible, even if 5 years from now there might be more generalized ways to do it.
Gotcha. I think I would push back against the dichotomy that you drew too. When I saw application-specific sequencing, what I thought we were talking about today, actually. So that was new to me. Was the notion that applications could program generalized sequencers to have specific sequencing rules that are specific to them. So you have your generic EVM chain today, but you're an application on that wants some sequencing rules for your application. So I think on Ethereum L1, you can see this with solvers as an example, where you're trying to give a user the best trade possible, and the optimal way to do that may be to place it in a certain place in the block, back running another trade. as an example. So you want to program the sequencer to have some special logic of how to handle your transaction. So I think there's a third way, actually, which is what I thought we were talking about.
I mean, in some sense, you want to try and marry the two, because there is a need to have separate rules for specific applications, and sometimes that means creating a totally new sequencer, and that comes with composability trade-offs. So for example, Sorella or CalSwap is not as composable as an L1 contract. But if you could take a shared sequencer and kind of customize it to your application and retain the composability, that would be the best of both worlds.
Yeah.
Maybe, and again, I want other people to talk, but there's like kind of two paths here. Like, do you start with the specific use case of optimizing, let's call it swapping, and then figure out how to generalize that through chain abstraction, through maybe what you're swapping actually is all you're doing to move from chain A to chain B is you're moving enough gas to execute the user op from account abstraction to do the thing on the other chain. There's sort of, I can paint a path for chain abstraction flowing from an intent-based bridge, or like kind of so you start specific and generalize, or do you start generalized, or do you build the generalized thing over here too? And I think we're just going to see the different approaches play out. But
I'm just confused. Who's the sequencer in the application-specific sequencer world? Is it still the
market
builder
maker.
super node, or is it someone else?
It's someone else. So in the case of Sorella, like they have their own external consensus, who's like custom designed for, maintaining an order book and matching orders, and they use that in order to auction off the LVR.
Okay, so then they produce like a set of transactions, like a block, and then they post it somewhere? What do they do with that ordering that they create?
Yeah, so they produce a block which has this, finality certificate. So basically 2/3 of the validators have signed off on it, and then
their own roll-up?
Yeah, for their own roll-up, and then that gets settled on L1. I mean, I think CalSwap, like they have basically a centralized sequencer, which is like application specific. And you can think of Binance as being its own application-specific sequencer.
I guess I do agree with Robert here. Like, why isn't the sequencing just a program that runs within the block builder at whatever merge time that they're doing?
Well, if you could do that, it would be amazing. But neither CalSwap nor Sorella did that.
Suave.
So,
Suave.
well, hold on though. So, okay, so my mental model for Sorella is you've got a block and you want to do a bunch of trades on a DEX and you want to capture LVR or whatever. So you're going to sequence all the trades in that block. There's like a unit here, and that's what you're sequencing. Yeah. And then for CalSwap, you have a batch auction over some period of time with a group of trades, and you're going to solve that and sequence that, right? But then there's the other way, which is just you have a trade, aka a user intent, and what's up?
Is CalSwap a roll-up now?
No, but this is where I'm trying to use the application-specific sequencer idea here. This is the new idea.
Okay. Sorry.
But like, let's kill it. So let's delete that and just talk about best execution for a user on a swap specific. I have a trade. I have a swap. I want to auction it off.
Yeah.
There is no sequencing exactly because it's just one single trade. But because I'm not specifying how that trade gets executed, in a sense, the market maker is abstracting away how they're going to end up doing it, right?
Yeah.
And so I don't know if this fits in your framework, but I look at that as like a single action. I'm capturing all the MEV. I'm not leaking any information about how I'm going to execute that trade. I'm principling the risk as a market maker. And there is no MEV leakage. And it works pretty well. And you can do it today.
We don't have the composability aspect.
You don't have the composability.
That Justin really wants for the Ethereum ecosystem.
Well, so then you layer on top of that, right? So it's like, okay, what is the composability I want? So if it's just swap asset A to asset B from chain 1 to chain 2, and then deposit in a lending protocol. Well,
I think it's more like everyone has their liquidity on L1, and you don't need a DEX on any L2s because you can just borrow that liquidity at runtime when you do the sequencing within the Suave node that's running on the block builders.
Or you have the market maker do that with their own sophistication. And so they're the ones providing liquidity.
But then they require inventory on the whatever execution layers, right?
Sure.
So that's less efficient than just having a single pool of aggregated liquidity on one place.
maybe, but like we do it pretty well, and with like the across bridge has.
Yeah, but
really,
we're talking about the future here.
I think
we're talking about today.
One of the things that is challenging about this is that everyone has their own application that's sequencing. Everyone has their own set of information. Everyone has their own liquidity, and you want composability between these things because of the idea that we have in crypto that the sum of parts is greater than the individual parts in and of itself. The cow swap example is a great example for that, or a solver that's sending a transaction. You want to be able to backrun someone else's transaction, but you may not trust the market maker to have access to your private information. And so that's why we're bullish about the notion of having privacy for these things, trusted execution environments where you can get this composability and collaboration between people, because we do think it gives users better execution in the limit because it enables collaboration where you wouldn't have it otherwise.
I have a question about Suave and like sequencing. So if we have a program which is like an application-specific sequencer that we deploy onto Suave that is run by a block builder, how does that interface with programs that are not deployed to Suave?
That's an interesting question. I mean, presumably your program has some set of APIs and you'd be able to feed it inputs at some point in the block building process. I think we'd have to like sit down and really look at the details, but anything that is external to Suave won't have access to its internal state, at least between blocks that it has produced.
So maybe like it can produce like a blob for like the Suave stuff and then a different blob for like the non-Suave stuff?
Yeah, and I think it's really up to your application to define those rules of what you are sharing, when, and how the external world interacts with it, right? So imagine a batch auction that's a program on Suave that you want to settle at block building time, right? Of course, it's going to take a bunch of inputs throughout the block building process, and it's up to that application to define what that looks like. So the batch auction wants to have people trading until the very, very last minute. And probably it defines some sort of API through, we use Solidity, for how people interact with it. So it is application specific.
Got it.
The way that I took application specific was more so an application that's built on some type of execution layer that's off-chain, that posts some types of commitments on-chain, which the chain that you're posting the commitments to is somehow aware of. So I think it depends on the perspective of the operator or the user of that particular protocol. So what we're building with Anoma is a generalized architecture for intents. So from the perspective of a user who wants to settle natively on Anoma, it would not be application specific. It could be a generalized application. But from a user that wants to settle to Ethereum, it could be an application specific sequencer. Just back to your first question, Justin, in terms of the types of applications, I think there's actually a lot of low-hanging fruit. For instance, if you think about proof of personhood or digital identity, there have been teams like Circle's UBI who have done various things to try to bootstrap their network. They've had issues building out the infrastructure, and they need something a little bit more generalized, and in particular, they need something that provides some sort of information flow control, or as others might say, privacy. So this would be the type of application that you could build on Anoma and still reason about it on Ethereum. In addition to that, there's things like, I wrote a blog post about a potential application, intent-centric Kickstarter with dominant assurance contracts. This would allow you to aggregate demand-side preferences. So for instance, if you wanted to do something like contact a hardware manufacturer and get them to agree to a spec to build a phone for you, we all in this room could express our intents. We could do multiple rounds of consensus, and then we could settle potentially on the spec with the hardware manufacturer. And this is something that you can't do today on Kickstarter. Another example of an application could be like a multi-chat application. So you think about like encrypted Slack or Discord. These are the type of applications that you could build with an application-specific sequencer, but still have some awareness on the base layer in some type of construction, perhaps like a Plasma.
Gotcha.
Well, I was just gonna, so Patrick, one of the things you said, right, is back to the beginning of what you're saying. This idea of a protocol that you define rules, like which we could call the sequencing rules on chain, and then you can have off-chain actors that do things that then get settled on chain and verify that those rules were followed. And so I'm being pretty abstract here, but this is like sequencing rules, right? Defined on chain. Off-chain actors do things.
Yeah, I think I follow. Yeah, okay.
Too abstract. But my point here, the thing that I just kind of want to like shake and be like, guys, we're like missing it. It's like if 95% of what users want to do here is swap asset A to B, or swap asset A to B and then execute code on destination chain. If that's like 95% of what users want to do, that set of rules we can define on-chain pretty clearly.
But what is on-chain though, right? Like on-chain Ethereum or on-chain Celestia or on-chain the Cosmos Hub, right?
So, okay, let's go back to what I've actually been talking to Stefan about a little bit here. And we want a standard for a cross-chain intent, okay? So this is an order ticket of what a user wants to do, and they sign it. And it says input asset on chain A, output asset on chain B. That's what I want to do. Okay, so there's my order ticket.
You call it a pre-confirmation messaging standard.
Yeah. Pre-conf messaging standard.
A base pre-conf messaging standard.
But it is a cross-chain limit order based pre-conf message standard. It's a cross-chain limit order that maybe also has some extra stuff on the destination, do this other thing, execute this arbitrary code, and the user signs this. Okay, so what do we want to do now? And we're talking this multi-chain world. We want user assets to get escrowed somewhere. We want searchers to compete to fill this order. We want the best searcher, solver, market maker, whatever we want to call them, to fill the order with their own capital. And the advantage we have here is fungibility. So we don't need to do anything on chain. They can just fund it. And then after we verify that that order is fulfilled, we release the user assets back to the solver. And then it gets complicated, like, okay, are the user assets on the origin chain? They get paid back on the origin chain. Does the solver have cross-chain inventory? I got a lot to talk about, all that stuff. But as a basic concept, this works really well. And it isn't composability, but it approximates composability from the UX perspective, right? And you can do it today, like Across is doing it today, Uniswap is doing it in a single chain context today, 1inch Fusion is doing it today. It works today, solves a pain point, it's cheap, good execution.
Right.
My pitch.
I mean, I guess what you're saying is that you have this one application swapping, which doesn't require composability. And so you might as well have a custom designed solution, which is very efficient.
Specifically because of the fungibility of assets. And if you don't have that, this falls apart. And that's where I go back to where you are.
But
piece of cake.
One of the downsides here is that, let's say let's say Aave wanted to liquidate the position and access the liquidity.
This doesn't work.
Doesn't work. And so this is where the application-specific sequencing comes in, and you break the network effects. And so I guess the question is, one way to phrase the question is what are the applications that are silos that don't need composability? And I think one of them could be gaming, and another one could be swapping.
So I think this also goes to the market structure of just of the rollups here too. So I'm not a big gamer, I don't know a lot, but to me a game, like an on-chain game, is going to run on its own L2, and it doesn't really need to talk to other L2s very often. Right? Like at most you just need to bring assets to pay gas on-chain or something like that too. Another interesting example is all these perp dexes. They're kind of like casinos, right? Your money goes in, and then they don't really want to come out. They're not really composable, most of these perp dexes. Well, it's true, right? It's and their whole business model is get deposits.
Perpetual, it's in the name.
Here you go. Get perpetual deposit. The applications that actually require composability today, I think, are relatively few and far between. The Aave cross-chain lending, I think, is the best one.
Okay, here's a question for you guys. Is it that we have these application-specific small applications because we haven't reached enough maturity to build complex applications? And once we have multiple building blocks that we can compose like money Legos, then finally we'll have this rich and compelling complex application.
Yes. Now you're speaking my language. I mean, that's a vision that we've all been working towards, right? Like the fact that everyone's just speculating on top of crypto today, and that's like 95% of the usage, is not the dream world that I think everyone in this room sort of, dreamed about when they joined into the space. At least it wasn't what I, joined in for.
Right.
When I started in 2017, it was like, wow, everyone's like thinking about DAOs and, putting Uber on the blockchain and whatever else. ICO days were fun. But now, like, the dream of Web3 is kind of like, what's happening? Like, people aren't actually developing these applications and having them reach meaningful scale. I think I have a question for the panelists, which is actually, I wonder how many application-specific chains do you think there will be? My thesis is that there will be as many as there are smart contracts on Ethereum today, and we'll see people build all kinds of new applications using this magic infinite block space that L2s have created. But I wonder if you guys disagree with that.
I disagree. I agree with you that there's going to be lots of chains, but where I disagree is that a lot of them will share a sequencer, and so in some sense they will act like one chain. So a chain...
Would that mean that they are constrained in block space by that one sequencer that they share, or how does sharing constrain them?
Sharing gives them composability. It doesn't constrain them in terms of scalability, because you have PBS. So I think there needs to be a very good reason for an application to opt out of a shared sequencer. And even if there is some opting out at the game level, for example, or at the swapping level, I think there will be shared sequencing there. So it's possible that there will be a gaming sequencer for all the games, and then a DeFi sequencer for all the swapping or whatnot.
But Justin, do you think there is some cost to shared sequencing, right?
What is it?
But today there's some cost. We don't have the tech to do it. And I'm saying maybe that cost gets less and less and less, but there is some marginal cost to shared sequencing, right?
Okay, so one of them is that you can't do MEV protection easily because centralized sequencing does it. Another one is pre-confirmations are trivial with shared sequencing. And then another one is the whole security training wheels. But once we've solved these problems, which are all solvable, then I don't think there's any downside to opting into a shared sequencer.
So I guess this is the question, though, because there's a path dependency here, where if there's a cost today that is not insignificant, and I believe you that that cost is going to go down and probably become insignificant at a future state, but if there's a cost today and there isn't a lot of benefit, again, if you have different gaming L2s that don't really need to talk to each other, why they want to offer the cheapest user experience today, so they're going to develop their own things, and then other band-aidy solutions emerge, and then you have a migration problem in the future if and when shared sequencing becomes cheap enough.
One observation I have is that I feel like in the beginning of the last cycle, everyone was really excited about composability, and we had a lot of really interesting and novel applications. I remember people used to wrap DAI with a bunch of stuff, and we thought we would pay with wrapped DAI instead of DAI itself would be the token.
Yep.
And it seems like the trend has actually been in the opposite direction, to where there used to be more applications that were built on the notion of composability, and now there are fewer. And actually, every one of the big DeFi protocols is increasingly trying to own more and more pieces of the stack themselves and internalize it themselves, as opposed to this vision of a bunch of different composable protocols. And so I think if you take the last 4 years, empirically, we've seen the composability thesis play out in the opposite direction, where we're having more silos as opposed to more composable protocols. So I think this would lead us to think that it's not as big of a deal with sequencing as we think. Maybe you can pitch me the opposite side of the argument, Justin.
I mean, empirically, just looking at market caps, there are network effects. Just Bitcoin, for example, it's all composable within itself, and it has it's half the market.
What does it mean for Bitcoin to be composable within itself?
Well, it's kind of abstractly speaking, composability at different layers, not just at the sequencing layer. You share the L1, you share the L0, you share the asset. You share the culture, and I think my personal thesis is that we're going to see these strong network effects that are going to lead to winner take most in various aspects, and I think we are seeing that with Bitcoin as a great example.
I want to go back to Steph's point about application lock-in. I mean, it's hard to explain in this context, but in our architecture, applications are unbundled from particular chains. So the native units of state are called resources, and the resources are controlled by resource logics, which you can think about as predicates or smart contract code. And those resources internally can live on different instances of ANOMA. And so as a user, you can specify you want to use a particular application, and it doesn't necessarily matter which partition of state the application lives on. So this flips the concept on its head, where typically you think about security domain first and application second. But in our architecture, you think about application first and security domain second.
Which actually ends up being more decentralized.
I think we're almost up on time. Tina, let me know how we're doing.
The
Yes.
timers, yes, these two
Gotta run.
has a dinner to go to.
Yeah.
Okay, perfect. Shall we wrap it up here?
Yeah.
Sure.
Okay, perfect.
That's a hard cut.